you got a hole in your throat? Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hello.
Hola.
Hola.
How's everybody? Midweek?
Yay.
Hey, hump day.
Hump day. Hump day.
Pita.
Ugh.
What is it? Eat a pita?
Pita for lunch
pita.
today.
Yeah, it's
Yeah.
very, very mid. You do not want it.
It's
It's
meh.
a slop bowl.
Mid.
Mid. Yeah.
Mid.
But it also is mid.
Eh.
Meh.
It's not that great.
All right. Well, that's okay.
Why you gotta start with that? Why you gotta put me in? Now you got
I'm
me all
sorry.
like, now I'm hungry.
You
now,
could be
like-
bringing us Chick-fil-A, so put it
I
back
know.
on you.
That's
Uno
true.
reverse.
I know.
Uno reverse.
I know. I gotta do it.
We couldn't. We didn't win any of our square pools from last night, right?
How are there squares already?
The playing games.
playing
this is
game.
very degenerate.
I was okay.
Actually,
Are you in favor of
Texas
expanding?
won that game. Took Texas money line. Okay.
Are you in favor of expanding, going from 64 to?
Oh, did we hit one?
No, this is just side bet. This.
This is your.
While we were
Ignorance.
golfing, it was just like, all right, this game is on. What are we taking?
Oh, gotcha.
One of those.
Gotcha.
Yeah.
Are you in favor of expanding 64 teams to what, 72? I don't know how that math
Don't
works
need
out.
any more. Don't
Really?
need any more teams.
Okay,
64 is enough.
so it's perfect how it is.
Perfect how it is.
Because they
Doesn't-
revamped the college football playoffs, and that's been for the better.
That's good.
So,
Yes.
but like,
It's been more
This is-
exciting. I'll give you that.
Yeah, 64 is enough. You don't need any more. And I'm also worried because of the NIL stuff.
okay,
It seems like it's skewing more top heavy.
oh, there's no parity anymore.
Yeah.
Like you want like a Valparaiso, coming in with like a
Yeah.
buzzer beater or like a Butler or something. I'm
Yeah,
just
but-
naming Indiana schools because I'm from Indiana.
All those guys are like going to big schools now.
Yeah.
They play 1 year there and then they like go to a top tier team.
Sure.
I feel like I don't know. I feel like you could see it in the odds. The underdogs are a lot bigger underdogs this year than they were last year.
Oh, that's interesting.
So, which is good for our underdog betting, but we'll see what Rob and Maria have to say later.
That's right. It's today at 9:30. We got a little
Yes.
special gambler edition to Tasty Live here, which is going to be nice. Ex-professional
I want to
gamblers.
see the disclaimers that have to go up for that because
None.
I get yelled at. Like I put up one thing on social and compliance is like, you can't say that. But here we are. We're going to have a whole
They
segment.
don't listen to the show. Don't
Wait,
worry
yeah,
about
right. They don't listen to the show.
This is
Compliance
our safe-
does not listen to the
this is
show.
our safe
They
space.
just
Writing.
go through our posts
No,
on
you
social
can't
and they're
put it
like,
in
you
writing.
can't
That's the
post that.
problem.
But then like here we have a whole segment like about just like YOLOing bets.
This
We're
is
gonna
a
make
safe
every one of the
space,
bets,
Renato.
too.
That's why it's so good. It's a safe space.
Yeah.
Yeah.
We're going to make every one of the picks that they come up with. We're going to make. We're going to do.
Well, I love Rob
Just
and Maria.
math.
I love it because they use the proceeds to buy shoes, and
Yes.
that is near and dear
If
to
we
my
only
heart.
make enough to buy shoes, we failed.
Have you seen Maria's shoes?
That's true. That's true. That's true. That's
These
true.
are-
That's-
honey,
I
we're
have,
not
I have.
talking
Yes,
like-
you
If I
are right.
remember correctly, there was a picture of the shoe closet.
Yes.
Yeah.
The
That
shoe
has
closet.
gone,
Yes.
that's gone
Iconic.
semi-viral.
Iconic.
Yes.
Imelda Marcos who?
Made all the shoe freaks happy. It was
Yeah.
Yeah. Absolutely.
So can I ask, like,
you
what
can ask
is-
anything you want. We are not obligated to answer because
what is the ballpark of the outlay of capital that is going into March Madness?
Trade small, trade often.
5 figures? 4
Trade
figures?
Small, trade small, trade often.
How many bands?
It's enough to wet your beak a little bit. Get the juices flowing a little bit.
a couple hundred per game.
Yeah.
Is what we're gonna do
So how many games?
a lot.
Well, there's 32 games.
Yeah.
To start.
Oh, wow. Okay.
Yeah.
Okay.
Yeah.
Multiple bets on each game.
Yeah.
You know you could just go outside.
No. I was born for this. This is what we have. But we do.
He actually see it skips again.
It's funny because he has the best situation of it all. I track everything. I place all the bets. I put the kind of the.
It's like watching the follow
sweat
page.
and then he takes half.
Yeah, it's like watching the follow page on Tasty.
Yeah, exactly.
I'm a little worried about you because you're doing this for your dad. You're also
No, he's
managing
doing it for himself. Don't
No,
you
but
know?
you're also managing your sister's account.
No.
You're doing so much.
Done with that. That's one and done. That's done. I don't touch it. Don't look at it.
Okay.
No, but it's great. I get to text with my dad. Talk with him.
Yeah, it gives us something to commiserate about.
Yeah.
It's a lot of fun.
Yeah.
A lot of fun.
Yeah. But I got a whole spreadsheet and all this awesome stuff. So I'm really.
We're in.
How
We did it last year. It worked out nicely.
We've done it the last 2 years. The first year we were up 14 units. The second year, which was last year, was not that great. We were only up like 7 units. So you can equate that to whatever your bet size is.
Sure.
The unit is
like a
bet.
tranche. Yeah.
Yeah.
Right.
So like if it's 100 or 1,000 or whatever, that's
I don't gamble.
$10, whatever. It's the same multiple.
So, but my question, how are you going to watch all the games? Because in our old office, we had TVs that were always playing the games.
Dedicated to that.
Right. We don't have that here.
No, we're not going to watch all the games. It's just,
You don't even need to watch. You don't even care about.
no.
Got to see the scores.
Yeah, just the outcomes.
Oh,
That's it.
okay.
That's it.
I stand corrected then.
Yeah. I mean, really, this should get better with prediction markets.
Yeah, you would
I
think.
did it that way.
Yeah, you would think.
Yeah.
But I don't think they have that's what we're doing.
Right.
We take unders, so we do first half under, game under for every game.
Okay.
And then we take the top 3 seeds minus the points, and then everything else is money line dog to win your unit.
This is a master class in girls being like, okay,
That's
that's awesome. My God.
When you buy something, you have to put it together. That was the quick guide.
That was the quick guide.
That was the quick guide. At
Okay.
9:30, we're going to dig deep.
The deep
into
dive.
it. That's right. That's right.
Do you bet on the women?
We
actually
have
as part of our big pool, we do have the women's Final Four and championship included in our square pool.
Okay.
So
yay for equality.
Yes. Yes.
We love a feminist king.
yes. So I will be rooting for not necessarily a team to win, but for a score.
Okay.
But it will keep me interested.
Okay.
Yes. Yes.
Good job, ladies.
A little bit of everything.
All right.
Everything.
You want in?
I do not.
Okay.
I do not.
Okay. All right. I just want to give you a
want
chance.
to take my money and go to Ulta.
You have any percentage you like. Every percentage you like. You two can get fired on Monday.
So how was golf last night, Nikki? Did you play? Did you hit him long and straight?
You said he just won.
Could be our best cumulative round of our history.
You're back in the Dominican Republic.
No, we're still in 30th place.
Okay,
So
all right. Well,
not even in contention, but we will make the playoffs, which is nice. But it was a great round. Both teams, we did a 2-man scramble.
okay.
So you split your team into 2 teams. Both teams 6 under.
Wow.
9 holes.
Very nice.
You were not dead weight.
Very nice.
What course did you play?
Kiawala. The one in Hawaii.
Hawaii?
Kiwakalia.
Mike played there.
Yeah, I don't know.
Forget.
Okay. That's
Can't
cool.
pronounce the name. Yeah.
Very cool.
It was good. It was good. It was nice to be back. And then on my way home as a celebration, I got the big arch burger.
Oh, how
how
did you
was it?
enjoy the product?
I've been told from the insiders the way to do it: extra onions. Got to ask for extra onions because they skimp you on the onions.
Okay.
Crispy
The
onions.
grilled onions. Oh, crispy
No, they're
onions?
crispy. They're
Okay,
crispy
I was
onions.
just asking.
So they usually
Like a
skimp you.
French's fried onion? Ooh.
Yeah.
And
The
how
best
were-
part.
And how were they? How was it?
Did you take teeny bites and then spit it out into your napkin
No, I
like the
was
CEO?
starving. I was starving, so I just attacked it.
Was it good?
It was very good.
Is it better than a Big Mac
They say it tastes a lot like a Big Mac.
or quarter pounder? I don't eat
Yeah,
burgers.
I mean, it's got a. It's
I'm
got
not a Big Mac guy, so I don't know.
Yeah, it's got a Big Mac kind of sauce to it, but it's a little
I
bit
eat
different.
my fast food like a child.
Yeah.
Yeah. Just like ketchup.
Just nugs.
Really?
Yeah, pretty much. Ketchup, pickle,
Oh, that's
maybe.
sad. I like all the fun sauces.
Nah,
That's my
not a sauce guy.
Yeah.
Okay.
But it was good. It was big. Like it's 2 quarter-pounder patties. So it's like
Oh.
big.
So
Over $9. Do you remember?
Oh my God. I think the meal was like $13. I could have gone to Small Cheval.
right, I was gonna say it was like that. That's like that's all Cheval
meal.
prices. Yeah.
It is expensive.
Okay.
But it was really, really good. The bun is great.
Man, if I had your money,
Big.
I'd burn mine for worthless.
Oh my God. This is just
All right. How about you, Boomer? What'd
worth
you
a
get up
try.
to?
I would recommend it as a try. But I also love gimmicks. Like I'm
Okay.
a gimmick guy. Like
Yeah.
fast food gimmicks. I'm all about it. I'm like the opposite of you because you're like ketchup and
Yeah, and maybe a pickle.
yeah, that's
I don't mind onion on there too.
I want all the weird
don't want
stuff.
mustard.
Like
I don't want mustard on my burger.
You know, fire taco, this.
Yeah.
You know, the
Do
chicken burger.
Do you want to know how many calories are in a Big Arch burger?
It's got to be with the meal, the whole meal.
Not the
or
meal, just the burger. Yeah. So 2
I'll go-
quarter-pound beef patties, 3 slices of white cheddar cheese toppings, and a special sauce.
I'll go 1,100.
Over $14.50.
1,020. But you ordered extra onion, so you were maybe
I'm
right there.
1,100
Right there.
right there.
I will say this though for you, Nikki: 53 grams of protein.
Yeah, yeah.
Protein
look at
maxing
that. There
for
you
the
go.
gains.
Yeah.
1,700 milligrams of sodium.
That's the killer.
65 grams of fat.
Yeah.
Yikes.
Sodium is gonna get
It's
you.
not an everyday thing.
Yeah, I mean, I'm
right.
a little bloated this morning, so I
Everyday
feel it
thing.
a
A
little
little
bit.
distended.
Yeah,
Coming in, so
yeah.
the meal with the medium fry and medium drink can
God.
Oh,
reach
it's got to be 1,500.
1610.
There you go.
So I'm the fun police, but
Woo.
just keeping it real.
Man, I need a salad today. A water cleanse.
Mediterranean diet. Gonna do the Mediterranean diet today. The pita pita. That's gonna be good. You'll
Well,
live
with pita
longer.
pita, it's just the don't eat diet. It's disgusting. It's dog food.
But how about you, Bat? What'd you get up to last
You know, my
night?
night was okay. I don't want to talk about that. My morning was, when you take a shower in the morning, is that the next day or is that a continuation of the night?
What? No, that's the next day. You weirdo.
Okay. All right. Well, then my night was fine.
Unless you took a shower at 1 a.m.
No. My day started out horribly. I love pocket doors, so I
Yeah.
love pocket doors
Yeah.
in my house. And I made
Love pocket doors. That is the
I like
weirdest
pocket-
statement I've ever heard.
Well, I hate bifolding doors.
Sure.
Like I
That's
can't
fair.
stand those.
Yeah.
And I don't like the way a door opens into a room and kind of stays
Sure.
open. I just don't like the way it looks. So
I
like
have a barn door on my back.
barn door's
like, so
nice.
pocket-
Yeah. I didn't have the room for that on the side and didn't
Sure.
get the aesthetic. But pocket doors I
Pocket
like.
doors, great. Yes.
But I made the mistake of saying, because I wanted to be bougie, I wanted all solid doors. So they're very heavy.
Sure. Right. Yeah.
So it breaks the hinge inside the pocket door all the time.
So slam it.
So I just got it fixed about a year and a half ago, and it broke again this morning when I was
Oh
closing.
no.
Yeah. So
Okay.
now I have to shave and shower in the dark.
It's probably for the best.
Because the light will.
You don't have another bathroom?
I have other bathrooms,
Okay,
but
well, so use another bathroom.
all my products and some of you think
So
this
put
just
it
comes
in
out
your
naturally?
little basket and take your little
My little dog
sassy
kit?
butt. Yeah. Take your sassy
Nah,
butt
it's
down the
all hanging
hall
out.
and go to
No.
another bathroom.
Yeah, no. I'm the king of the castle. She got to sleep in another room in the morning. I'll just have to wake her up and tell her to go in the other room.
Wow.
Little bitch ass is gonna shower in the dark.
I was gonna call her after the show and be like, "Hey, I heard my dad's the king of the castle. Is that true?"
Is it harder for you to shave your legs in the dark?
Totally.
That area around the ankle, real
Oh, my
tricky.
God, yeah.
So tricky. Gotta,
Terrible.
Hey, we got what is today? What is my job?
Wednesday. It's Wednesday.
We got
the
a great
18th.
show. We got a great show for you today. A wonderful Wednesday here with an imminent celebrity appearance.
Yes.
But a lot of good stuff heading your way on this wonderful Wednesday at the top of the 8 o'clock hour. Got an options jive, offensive versus defensive trading, when to adjust. Nikki, break it down.
Sexy title, very basic kind of intro to defensive / offensive rolling and adjusting of positions, why you roll. It's a continuation of yesterday's kind of content on rolling.
Okay.
It's a good one.
And then we have What's Your Assumption? It's Assume the Position Wednesday. So this is a viewer participation segment. We love it when viewers participate. For Wednesday's edition, they write in with an underlying and they have a directional bias. And then the bats put on as many viewer submitted trades as possible. Sort of an interesting day. I think
10 for 10.
I think we'll probably go sideways until the number comes out, but we'll see.
We were up
see
30
till the news
some odd
comes
handles.
out.
Earlier, we're almost unchanged, only up 5 right now.
Yeah, that's literally what I'm saying.
Yep.
And then we have TP in the house, 9 o'clock, a little tasty extra TP for his cherry picks.
Yes.
Going to be on.
Fan favorite.
Fan favorite. And
I would say electric, but
he's kind of just monotone.
well, yeah. But, TP appearance is usually electric.
It is good. And I was going to say, though, and I never thought I would see the day, but TP, little bit of a social media influencer. Like he's making videos, he's making YouTube videos about trading. I never thought I would see the day.
Amazing.
Yeah. But yeah, so follow us also on YouTube.
All those are on
great content. Yeah, Tasty Live. Yeah, Tasty Live on YouTube there. But TP is going to be at 9 o'clock, and then what everyone is waiting for with bated breath at 9:30, the man and woman and the myth, the legend, Robin Marir are going to be in for a little March Madness spectacular. That's at 9:30. You definitely don't want to miss that.
You do not.
You do not.
Especially if you like looking at March Madness, have something to do.
Yeah. And then Quentin and Ryan, hopefully they do not get bumped.
They might. We'll see.
They might.
They're on a need-to-know basis.
I laughed so hard when Beth sent out that email. She's like, Robin Maria will be on for 5 minutes. And I'm like,
oh, no.
Yeah.
I love talking to them.
Yeah, we'll still get the top 20 symbols.
Sure. Yeah. So Quentin going to count down the top trending symbols over.
We'll see how it goes. It's our network. We do whatever we want.
That's right.
I want to go 5 minutes over here, 10 minutes over there.
We lost 30 minutes yesterday, so we get an extra 30 today. So
come on.
No, we just had some technical difficulties.
We got no advertisers, so nobody's paying my bills. It's okay.
Yep.
And then, of course, again at 10 o'clock today, I don't know how they're going to top it. They literally had a leprechaun on the show yesterday. Liz and Jenny.
Saw that.
Yeah, check out our social media.
He's been doing that for a long time. He didn't start until after I left the floor, but he's been doing that for a while, if I can remember correctly.
He knows that this isn't the University of Notre Dame, right?
Right. Yeah. He does fit the part, though. He's got the size and stature.
I love the outfit. I love the commitment to the bit.
Yeah.
But it was just weird to see a grown man dressed as a leprechaun on the floor. It was fun. And then so they're going to be live from the SIBO today. It's always electric when the ladies are live.
Always beautiful.
But hey, in the meantime and in between time, you guys want your daily dose? You can't stop me. Give me my theme music. Let's go.
Our leading story, breaking news, coming across the wire.
This just in.
Top story, just in.
In today's headline,
This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It's March the 18th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings.
Maybe MU, Micron.
I've heard of them.
Yeah, that would be the one.
A big one today.
Yeah, that's a big one today. That's the only one. It's been a.
But they've had two massive up moves already this week.
You're right. It's up $4 already too, even with the S&P's down 2. And when I got up this morning, they were up 30. So a little.
Baba before the market opens tomorrow too.
Baba, you always get the Chinese ones on me. You are correct.
Yeah, because the timing is always weird.
Like 4 o'clock in the morning or 3 o'clock in the morning Central Standard Time. Yeah.
Getting to the first headline of the day, the dollar held losses on Wednesday as a glimmer of risk appetite came back to markets ahead of key central bank decisions. You're getting your FOMC decision today after a very dismal February jobs report. Of course, the Fed would be like, yeah, we should cut rates, but not so fast. There are other inflationary impacts. Of course, the Fed takes a longer term view of things, but they do have to consider how long these fuel prices are going to last and how that could also impact things. Let's talk about the dollar. Let's talk about bonds. What do you think the FOMC is going to do today
Also,
to the market?
You got PPI coming out in 10 minutes too. I don't know
Thank
if
you.
that really matters
Sure.
anymore. Vecchio has stirred me away from these, PPI, CPI. It doesn't matter anymore, apparently.
Sure.
Most important number since the last most important
Yes.
Sure.
So they don't matter anymore.
number. Almost as important as charm. Go ahead.
Charm is good. Charm is a good one. Shockingly, my Japanese yen position not doing well.
Oh no.
Not doing well again.
Yeah, not doing well again. We're long bonds here. We got long them into like the 14 handle, so we're long the 112s and the 113s. I closed half that position, so I'm long the delta, the 113 strike puts, short puts. So I've got some
Your
long.
short puts on the
Short puts.
Your short puts on bonds, which makes you long delta. Bonds are trading 115, 115.01, up from around 113 and a half
Okay.
the last 3 days ago. So bonds have caught a little bit of a bid. Market caught a little bit of a bid. Basically, a little pressure right now.
Anything else in the currencies, not just the yen? I'm not sure if you're doing euro, pound.
Euro's down small. Pound is down small. I mean, these are small moves relative. They caught a 2-day bid. Now they're
I
basically
feel like I
unchanged.
should do something in the euro.
Euro has a. You're gonna look at the option side.
Yeah.
Yeah.
50 days out, maybe.
Yeah, Euro's got a good IB
Slightly
rank of
long.
33 if you're interested in that.
Yeah, like a slightly long delta.
Still a relatively low monthly implied volatility. It's always under 10. It's always single digits like 7, 8, 9, something like that's 8 right now. Doesn't move that much.
Slightly long delta strangle. I guess
Okay.
it's basically flat. 113 and then
118 and a half.
18 and a half. Yeah.
Okay.
Cool.
Nice.
For a ball.
Very nice. Very nice.
Hey, good news. The SEC on yesterday issued an interpretation clarifying which types of cryptocurrencies are considered securities, praise Jesus, and how a non-security digital asset could meet certain conditions to become an investment contract. Of course, this is a little bit more of the regulatory clarity that the industry has been clamoring for. The crypto bill is still kind of stuck in Congress. I don't know if Congress even works anymore, but it's way past time for us to stop diagnosing the problem and start delivering the solution, the SEC chair said in remarks.
It really is. I mean, they've called it a currency forever. They have to put some guidelines on it to make it a currency or not.
Sure.
So that we
Coinbase was like, we will follow the rules. Just tell us what they are.
Yep. It's about time.
Yeah.
A long time coming.
It's very flip floppy, and I wish I guess this is good. We have some sort of clarity here, but
So
crypto not responding.
So the new interpretation, which has also been co-signed by the CFTC, it classifies crypto tokens into 5 categories: digital commodities, digital collectibles, digital tools, stable coins, and digital securities. Which house are you, Hufflepuff?
Yeah, seriously, it sounds like there's a lot of gray area there.
Sure.
There's
Well,
a lot of,
there's 5 categories. It seems like.
I know, but you could say that Bitcoin fits into like 5 of those.
Sure.
I mean, it seems like there's a lot of gray area there. It's not really good. I feel like you need like an overarching, like, here's the decision on crypto. It's this.
Yeah.
The whole thing, the whole space.
Well, they're trying with the bill, but again, it's stuck in Congress because Congress. What are the Bitcoin
I'd
stocks
rather them do away with the patent day trading, and we can get to this later on. I mean, you talk about what?
Well,
Like
that's soon. That's soon.
Yeah.
The crypto stocks, they've had a nice rally. I mean, Bitcoin got up to 75 yesterday.
Oh.
And it's down to like 72 right now, so it's down about 2% today. But it's held relatively stable.
Yeah, absolutely. I remember we were under 70, right? I mean, we
Yeah.
were in the 67, 68, 69, languishing there, and now we got up to around 74 and a half or so. Now we're under 73, 72.8.
What about Coinbase?
Coinbase has been okay, kind of mirroring the rally too. Like it was in the 150 handle, got up to the 200 and change. It's sitting at 207, down around $3 today.
Okay.
I
Good IB ranking there around 40.
added another little SIC contract.
And tell everybody what SIC is, right?
Silver, SIC.
Small.
Small. I've been scalping around this price.
Silver down $2.25%, down $1.70.
Yeah. I'm long gold and silver has not been fun.
Gold down $100. That's probably one of the most surprising things. I mean, gold always surprises me. It never goes the direction that I think it's going to go in. I thought it would never get to these lofty heights. I thought it would catch a bid when oil caught a bid. The gold silver ratio is hanging out right at 62. That hasn't moved.
No.
Here is something crazy. A AI drone software stock, like talk about bingo. So this company is AI, their drone, their software. They had their IPO yesterday, and at one point the stock was up 700%. It ended up being up around 520%. It was the best IPO since Newsmax. That made me laugh. Swarmer, SWMR is the ticker. SWMR is the ticker. And again, they are a AI drone software company, and they had the best IPO. They're based in Austin, Texas, and the shares closed up at 520% to end at $31.
I will say Newsmax now trading at $7. It was like
Right, I know, that's what makes me
went
laugh.
up to 83. So
I know, that's what makes me laugh.
95%. So,
Yeah, and this stock looks up another $8 this morning to around 37, 38, something like that. It looks like it opened at 12.5.
Yeah.
Closed near 30.
Yeah, I would be.
No options on this. You can't sell it.
Sure.
Hard to borrow stock. You can buy it if you want.
Yeah.
That's all you can do. I mean, you can't sell it short. It's a hard to borrow stock. Matter of fact, take a look to see what.
But I couldn't not cover this. It's the biggest IPO since Newsmax.
For sure, yes, of course.
I have to cover it.
Of course you do.
Lululemon reports weak guidance as proxy battle and tariffs weigh on bottom line. They gave weaker than expected sales and earnings forecast for its fiscal 2026. The company did top Wall Street expectations for its fiscal fourth quarter. For the full year, Lulu is expecting sales between $11.35 billion and $11.5. Damn, that's a lot of yoga pants. For the previous quarter, they brought in revenue of $3.64 billion versus $3.58 expected.
Yeah, it's going to be close to, if not, new lows for Lulu. I think for quite some time, well over a year's time frame here. 156 and change, down around $3 inside the expected move. But you might have done something for option trades today, which is now every day of the week.
Just every day.
Yeah, I think volatility is going to stay bid here.
I will ask this: your Lulu purchases relative to 3 or 4 years ago, have they gone
Minuscule.
up, down?
I've never bought anything from Lulu in my whole life.
No Lulu.
I'm a Lulu dupe person though. So like the sets from Costco, like the jacket that I love it, but I paid $20, not $120.
That might be actually confirmation.
Yeah.
I was gonna say if you,
because I work out a lot, and I buy like workout clothes, but I need them to be not $120 per piece. Like
that's indicative of this.
I need to buy 5 pieces for $100, not one.
Yeah.
So I'm not against that. Like if someone were to gift me Lulu,
no problem with the gifts.
right, yeah.
You don't have an OnlyFans account. If you had an OnlyFans account, you'd have Lulu. That's what it is. Well, that's why the stock's gone from 350 to almost 150.
Yeah.
I mean, in the last year.
I mean, your dad owns more Lulu than I do.
100%.
Yeah.
100%. I've paid for a lot more Lulu than that.
Yeah.
Sure.
Yeah. In other news, Amazon's
We've got so many more now. Vuori and Aloe.
but they're also it's also expensive. Just Amazon CEO Andy Jassy sees AI doubling prior Amazon AWS sales projections to $600 billion by 2036. He said during an internal all-hands meeting, he expects that AI could help cloud computing unit achieve $600 billion in annual sales. Amazon yesterday also announced they were rolling out 1 hour and 3 hour ultra fast delivery as the trend continues to ramp up in the US. So a duality of stories for Amazon. But it's kind of been a laggard though. So what do we do?
Oh, it's gone nowhere. I mean,
But he's saying 600 billion. So Nvidia said a trillion.
2036, so 10 years away.
Yeah, but Nvidia said a trillion.
I know, but Nvidia was 3 years out.
Yeah.
You can't go 10 years out should not be allowed.
Okay.
Should not the numbers. Who even?
It's just a joke. You can say whatever you want.
10 years ago. I mean,
Yeah.
come on.
Okay.
Yeah.
What about a 1 hour delivery? How about that?
That's interesting. That'll cut into the Instacarts, the like kind of grocery stuff. Like
Sure, the Go Puff.
Yeah, the Go Puffs. That's more interesting. I get that, but this 2036. Come on.
Bat, what's Amazon's IV rank?
Around 18, it's relatively low. 214, maybe down $1 now. Earnings May 7th. April still has decent implied volatility at 34, but IV rank's relatively low. You're probably going to go with a directional bias.
They said that they are starting the 1 and 3 hour delivery in parts of the U.S., but 3 hour delivery is available in 2,000 cities and towns. And 1 hour delivery will be available in hundreds of those areas.
It is crazy sometimes when you click send and
It's like, hey, your
the dog barks an hour and a half, 2 hours later that something's been delivered.
Yeah.
It's kind of crazy.
Like I ordered something off of Amazon because I was looking for something while I was going to go camping. And I was like, oh man, I don't know if I can find it. But then you're just I can just order it on Amazon and it'll be here instead of
your mind.
Yeah, I know.
The most important number just came out. You asked 7:30. It seems like the E-mini S&P sold off a little bit. They were basically unchanged. They're down 7 or 8. Volatility upticked a little bit, up 33 cents. Bonds went down a little bit. They're still up 4, but they're under 115 to 114.29. E-mini S&Ps are on their lows, down 10. They were up 35 or so when I woke up this morning.
California-based fintech lender SoFi said yesterday that it may explore legal action against short seller Muddy Waters Research, calling the company's report on SoFi factually inaccurate and misleading. Muddy Waters earlier on Tuesday revealed a short position in SoFi, saying the company appears to have a material misstatement of at least $312 million of unrecorded debt. Ruh-roh. But then now SoFi says that that's not true. It's blasphemous. We're going to sue. Muddy Waters says, we have receipts. I don't know who's right, but what do you do in SoFi?
I don't know, but I liked Muddy Waters. I thought that's good songs. $17 in change for SoFi. It started the year closer to around 27.
Sure. Shares fell 6.5% yesterday.
Yeah.
It's been a good trade.
Yeah.
Two-sided action. I mean, it's off the highs here, but
Option traders love it.
yeah, it's kind of got a cult Reddit type following to it. So I think this is an interesting spot. Maybe sell some puts or Jade Lizard type thing.
Yeah.
Here, buy stocks, sell calls.
Yeah. Ivy rank's pretty good at 26.
I'm long stock, so I have long.
So you're just talking a book, asking something
Yes.
that you're looking.
But if it's a good price, so it allows a lot of flexibility and strategy and the way to approach it.
Exactly.
Down about 10 or 15 cents. Expected move for the month's about $2. So you get a good bang for your buck on a $17 stock. So
Yeah.
good monthly implied volatility, 70, 80, 90 if you go out to May.
That's great.
Yeah. Yeah.
The state of Arizona has filed misdemeanor criminal charges against Kalshi, accusing the predictions platform of running an illegal gambling and election wagering operation in the state. They're the first criminal charges that have been filed against Kalshi. Kalshi draws distinctions between the event contracts it offers and what casinos and sports books offer, but they are facing increased legal scrutiny from a variety of states with a multitude of different charges and stuff like that. So,
I mean, it's interesting. I guess, these markets, if they're not liquid enough, it probably shows a lot more if there is insider trading / nefarious trading. So, maybe there's something here. I don't know. This is an interesting headline.
yeah.
I don't know what to make of it.
Me either.
Not sure if DraftKings is doing anything because you can trade DraftKings and
DraftKings has been dead.
but it's March Madness.
I'm playing for that too. I'm long some stock.
Its low is around 21 and change. It looks like it's unchanged this morning, maybe down 10 cents or so. Even the S&P is down 15, NASDAQ down 53. They're all down around about 0.25%. Maybe the Russell's the weakest, down 11 right now. Volatility percolating up 43. Bonds holding steady.
Yep.
This is wild. 143 million people thought they were just playing a fun mobile game. Gotta catch them all. Pokemon Go.
I read this.
New news came out that they were actually building one of the largest real-world visual data sets in AI history. Niantic, the company behind Pokemon Go, disclosed that the photos and AR scans collected by players through Pokemon Go have produced a data set of 30 billion real-world images. is. Different lights, different days, different seasons, all of it just captured by people who are unknowingly were like, gotta catch them all. It was like, oh, it's Pikachu.
It would have cost trillions of
Charizard,
dollars
right.
to get.
So players didn't just walk around with the phones. They scanned landmarks, storefronts, parks, sidewalks, every angle, every time of the day. They collected it systematically, data point by data point, over 8 years. And then they have now 30 billion images. We're the suckers.
Yes.
Why? You got to play the game.
I don't play Pokemon Go.
I know, but I mean, if you wanted to, you got to play the game. I mean, what is that any different than the billions of data points they have with all the cameras around? I mean, I thought it was pretty smart of the company.
This is the most boomer
they
take
learned
ever.
how to monetize something, and in a big way.
I don't know. Like there just should be disclosure. There should be
It
transparency.
probably was in there when you clicked yeah. That you didn't read 100%. It was in the disclosure. I bet you they were lawyered up.
Yeah.
It's the most
amazing. It's
boomer
smart.
take ever.
Smart.
Yeah, smart by them.
Move.
Yeah.
I give them their props.
Yeah.
There you go.
Yeah.
There you go. You do you. You guys did it.
Yep.
Finally today, for my viral video, between the both of you, on a scale of 1 to 10, how would you rate your game with the ladies?
10.
22 years for me that I had a
You say 10?
Play
The
my-
apple doesn't fall far from the tree? You're just like
No.
legendary?
We were blessed with those sort of.
I'm gonna abstain from answering that on the grounds that it might incriminate me. It's been 22
But this
years.
video, sometimes a dude has no game, and that's even better. Watch this. It's just funny.
Want to take this up to the bedroom?
Sure. What's up there?
Did you bring protection?
Why? What's up there?
Want to take this up to the bedroom?
Sure. What's up there?
Did you bring protection?
Why? What's up there?
Want to take this up to the bedroom?
It's just just a meme. Just funny. That's just funny.
That's very good. That's very good. I've been in that situation.
Sometimes dudes don't get it. They're like, wait, what?
Yeah.
Like, no, that was okay.
Good job out of you. Not so good job out of the market. We've actually had a 50 handle move in the market. Probably most of the move from last night, top to bottom, happened this morning pretty much since we've been on the show the last half hour. So we'll be back in 90 seconds. We'll talk about that. We got a little bit of tasty extra coming at, looking at what yesterday brought. Maybe we can figure out what's going to happen today. We'll do all that in about 90 seconds. Let's Tasty Live.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Niggy, we are back, son. You know what that means. Time for a little bit more Tasty Live with this Tasty Extra. We're going to take a look at yesterday's movement, see if there's anything to figure out for today.
Yes, good little recap of everything that happened yesterday, just to keep you informed.
Yep.
Because I know you miss a lot of things.
I miss 90% of it. I mean, sometimes you get a little pigeonholed into your own kind of world, 100%. You miss the
get
big
some
picture.
fresh ideas.
Yep.
So let's do it. So yesterday, it was obviously a strong day in the market. Had a little bit of a sell-off into the end of the day here. S&P 500 up about 0.26%. You had the NASDAQ and the Dow, the strongest of the group, or the NASDAQ and the Russell, the strongest of the group, the Dow kind of lagging behind here. It was a pretty nice inside choppy day yesterday, for most of the session at least, going into what is potentially a fun little day today with FOMC. You got the Micron earnings after the close today.
You had oil going lower.
Oil coming in a little bit.
Oil coming up now, moving back up. Yep. Damper on the market.
In terms of just the Mag 7 overall, Google, Amazon, Tesla, Apple, those were your upside moves. On the downside, Microsoft basically unchanged. You had NVIDIA give back some of its rally from yesterday's and this week's kind of move in semiconductors. They had the GTC that started on Monday. You had Jensen as a keynote speaker. It's been going on the rest of the week here. So NVIDIA, the semiconductors, giving up a little bit there. And then Meta.
NVIDIA was a little anticlimactic, wasn't it? I mean, like almost like a buy the rumor, sell the news kind of thing. It really didn't move. I mean, it's up small this morning. It was up or down $1 yesterday. I mean,
this 80 spot has been like the middle of the range. Doesn't, I mean, like this has been kind of a good spot to get long. So, but yes, it has been kind of choppy.
Yep.
In terms of the sectors, so yesterday you had energy stocks moving, despite the little bit of a pullback you had in oil itself and crude oil. Crude oil had some two-sided action, volatility really coming in there. So when we looked at the end of the day, OVX, which is the oil volatility, was sitting at about, so it's at 95, 92. I'll be interested to see where we open with oil kind of.
I think volatility is going to percolate a little bit in oil. I wouldn't have said that an hour and a half ago.
But oil went green yesterday. And
it did. Volatility did not percolate. Yeah, down around 30% on IV rank, was well over 100. Now it's 70. It closed at 72. We'll see where it opens. But you now got oil at 96. Yeah. This 97, 98 area has been a good area for a ceiling for oil. I hope we don't even get there today, but we'll see how it behaves. It's up 57 cents. It had a $5 move already this morning. It's $5,000 move on that future.
Huge.
Yep.
Huge.
Yep. That's what's dampering, putting an extra damper on the market. Yeah. Bitcoin's a little bit weaker, but go ahead.
Yeah, it does seem to be a little bit of a risk-off day here, at least going into FOMC later this afternoon. Semiconductors, tech in there, financials caught a little bit of a bid in metal and mining stocks. You had materials in there. On the downside, you had like healthcare down, the most of the group, utilities, consumer staples, but definitely I mean, it was a choppy day yesterday, small up day across the board. In terms of the biggest movers, so to the upside, you had a lot of these stocks that are kind of in the memory space. You had Western Digital in there on the upside, so 9.64% to the upside is the biggest mover of the group. If you've looked at STX, MU, Western Digital, SanDisk, SNDK, even if you look at like the South Korea ETF, EWY, they've all been kind of having some huge swings in all directions here that'll probably have some or be influenced by the Micron earnings after the close today. That should be pretty interesting for that group. You also had Delta in that group. So the airline stocks, the cruise lines, anything that's kind of transportation / vacation / consumer staple type stuff has been kind of whacked over the last couple of weeks with the move in oil. Obviously, the oil price will go into all of these things. So airline costs, airline fees would likely go up if oil goes up. And so, that has kind of been reflected in a lot of these stocks. A couple of them catching a little bit of a bid yesterday. Delta, the biggest mover of the group. And then you got some of the credit stocks in there. So you have Blackstone and APO. Those are two of the bigger of the kind of affected stocks here in that space. So those catching a little bit of a bid from the lows here, but those have been taken out to the woodshed over the last couple weeks here. APO, for example, which is Apollo, has gone from about 150 to 105. High to low. So 30% pullback.
Yeah.
So it's a big move.
Yes, very much.
To the downside, so you had TTD in there, which is a stock that, have you looked at that?
No, I mean, we've traded it in the past. I haven't put it on my radar in quite some time. I mean,
this stock has been absolutely annihilated. I mean, this was trading at one point at 130. It's at $25 here.
Markets are good. Ivy Rank is good. I mean, markets aren't that good. I mean, they're fair. They're 10 to 15 cents wide.
It's a mover, though.
It is definitely a mover. Look at the monthly implied volatility in the 70s. Ivy Rank of 40. No earnings coming.
Yeah.
But it's been a falling knife here.
You got Eli Lilly up there too, 6%, almost just under 6%. One of the biggest in the healthcare space. Why the healthcare stocks were kind of lower on the, or the ETF was lower on the day. Eli Lilly down 6% there. Big move there, trading at 925-ish. Intel on that list, might have to look at a position there for that. You got a bunch of healthcare names on this list. You got Dell in there. Pretty mixed bag here, but some big moves to the downside. Big moves to both directions. I mean, this was, big moves in both directions. ETF going nowhere, violently unchanged. Continues.
Yep.
And then when we look at the heat map here, you can see more of kind of the mixed bag that we had yesterday. Healthcare in the upper right, kind of the weakest of the group here. In tech space, you had pretty bifurcated market there. You got like NVIDIA and Oracle, AVGO. We got a little bit of long delta there yesterday. Intel in that group, CRM. Some of the industrial stocks kind of choppy here. Energy, really the outperformer of that group. A lot of those stocks a lot stronger. XOM was up at like 160-ish. A little bit of a bid in some of the oil names.
Yeah, I guess oil's caught a bid here because of reports that there was an attack on some key oil and natural gas fields in Iran. So it's going to be news-driven. You know this while everything is going on with this war.
Got almost 100% implied volatility. You're going to have more of this.
Yep.
So that's it.
Very good. Good job out of you. Good job out of team. EME S&P's just made a new low. They're sitting right there at down around 29. NASDAQ down around 100. We'll talk all about this in about 90 seconds when we go to confirm and send. We'll be back in 90 seconds. Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants to stock at lows, but it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
We are back, son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a look at the market. Even the S&P is down 30. They're trading near their lows. They just made their lows by about 8 handles below this at 67.34. We were over 6,800 this morning at around 5:30 when we were trading around 6,800 on the nose.
Mm-hmm.
Your MNQ buying a little...
Just a little start.
A little bit of NASDAQ, which I'm going to put up there right now.
I don't know how I feel about it.
Down 100 on NASDAQ. You just put them at 912. They're 914. So you got a 2-tick win. Nope. And it's gone.
And it's gone. Oh, no, I got it back.
NASDAQ down 100. You can see here the NASDAQ's been sideways to low, as has some of the rest of the market, of course. Equity market I'm talking about. Russell's been the weakest of the group. Caught a little bit of a bid yesterday. It's the weakest today by a 2-to-1 margin, down $20 on a percentage basis. Dow down 200 and change. It was up around 100 and change. Earlier, it's had a big move already of around 600, 550 points or so. Volatility percolating again, 2350 after trading under 23 for 22 and change, back up to 2350. So you're going to see volatility and option pricing on both sides, calls and puts, get bid this morning. If we sit here, bonds are up 1. They trade over 115, 115.11. They're about 3 ticks off of their lows, but you can see here over the last 3 days, they've caught a little bit of a bid. We'll see how they behave. Bitcoin's been weak all morning. Even when the market was higher, Bitcoin was lower. I don't think it was really a tell that the market was going to go lower, but Bitcoin down around $1,800, 2,000, let's just call it, down around 2.5. Ethereum down around 3.5. This was under 2,000 just a few days ago. It's 2,245 right now. Oil, that's I think your damper on the market right now, with some oil fields being hit in Iran, hit by us and Israel, I believe. Up $1.37 to just about 97. This has been the area 97, 98 where it has fallen from. We'll see how that behaves. And I hate news-driven markets like this. They usually go a little bit further than you expect on both sides. Gold down $115, sitting just off its lows by about $20, down 2.33% here. This is about as low as oil's been. If I put my little cursor up here, since earlier in February, about a month ago when it traded around the same price. Silver down an equal amount, 2%. $1.60, almost $1.70. If you go back to that same time frame in February, I guess silver was right around the same if you go to the same date or so here. Net gas up small. Maybe that's after trading down under 3, it's over 3. Maybe you want to do something in net gas too. Even the S&P is down 34. I thought I was going to have a different conversation this morning than I have right now.
I thought it would be a little bit more like choppy, flat.
Yeah.
Going into FOMC later today and
yeah, I thought you could sell rallies until you could buy dips.
But I thought it would be like
we're not able to buy dips so far this morning. If you tried, you got wacky poo-poo.
I also I sold out those calls again in MCL. So we sold them yesterday early in the session, like I think right in the like 7:07. I sold them at 2:30. I bought them back at 175. later in the day at like 11:30. I just sold them out again for 235.
Okay.
So they've basically moved back to
Where you
they were
originally sold
trading
them.
yesterday. I have the long call spread, the 95-100 call spread still. So I've been basically scalping around the moves in crude and MCL with an upside ratio type position. Like that's my net position. I've been just scalping those units on the upside as you've been calling it. Like,
Asia rallied big last night. It was up 2%. Their whole tech sector was higher. And MU
Baba looks like it's up like 3 or 4 this morning.
Yep.
It was.
MU has earnings after the market closes. It's up $2 and change. And you are right, Baba trading around 138 or so, up around $2, $1.50.
Yeah. The gold silver move has caught me.
The gold silver move has caught you at 22.60 now. Yes.
Yeah. I'm kind of surprised that. I mean, gold. This is like what you expect.
Yeah, if oil catches a bid, gold usually catches a bid after. I agree with you there. It has done nothing.
But you also have like just the situation that we're in. War, inflation. Isn't that like the 2 things you need gold for? It's the Well, I don't know. Anyway. Confirm and send. Should we do it?
Yeah.
Cool.
Ready.
Beautiful. What are the risks of a calendar in CL? I realize the spread could widen more, but don't the front and back months have to eventually align at expiration?
No. Yeah, well, yes and no. Depends on what month you're trading. Typically, I'm going to say absolutely not. Like if you're going month to month, like if you're going from April to May, they're going to be 2 different futures. I can put it up on the screen real quick if you'd like to see.
Yeah.
You see here, at least on the Tasty Trade platform, it's a great little feature where we have the future that is represented by all of these options. And then you have another future showing here. You'll notice that it's $3 or $4 lower. That curve is actually coming up a little bit, meaning these back months are getting bid more than they have been before. But these two can trade at any multiple. This can go to 110 and this can stay at 93. This can go down to 70 and this can stay at 93 for argument's sakes. It doesn't matter. So these two are not going to, it's not like equities where it's all tied to just a stock, the same stock.
Yeah.
This is a dangerous trade and has no rhyme or reason. There are some people who trade it. I would never.
Yeah, you're trading the curve.
You're trading 2 independent. Yeah, you're trading the curve. You're trading 2 independent events.
Yes. So there is no. It's not like volatility where you have like a reversion to a price, like where they're trading the VIX and vol futures. With oil, they're completely independent. So you are trading 2 different products in oil, 2 different prices.
Yep.
Next one, please.
You guys have done a lot of research about order entry and exit, as well as adjustments. But is it worthwhile to make adjustments between entering and exiting, or is it best to just enter around 45 days and exit at 21 and sit tight between the two?
For me, I trade. So like I am trading what's happening. I try to leg out of stuff that is working, lean a little directional. That sort of adjustment is interesting to me because it allows me to lean a little bit more directional into moves in the market without putting on more risk. So you start with an iron condor and the stock goes down and you leg out of that call spread. You're taking on more long delta at better prices without adding risk. You're buying in the risk, but the cost is minimal to the amount of delta you're getting. You're not adding any more risk to the downside really than what you originally had on. Same thing with like strangles. If you sell the strangle and the stock goes down and you buy back the call, you're realizing that value. You're taking off that short delta. You're getting more long delta into where the stock is trading, but you're not adding more risk to the downside. And so I tend to like to trade around my positions. If it's easier for you to just do the 45 days and then, manage the trade, exit, roll, whatever at 21 days, I think that's the more the less time intensive way to trade options. But for me, I like to trade around the position. So, this is the stuff. Ideally, everything you put on is at 45 days, the stock goes nowhere, and then you just close it at 21. That sounds amazing. I wish that was how markets worked.
Took about 10 cents worth of risk, made about $2 or so.
No problem. You get your paycheck every day, it's no problem.
The answer was the one that you started with, and it really, like you said, well, I like to trade. It's personal preference here. We've done a lot of research on this, that you typically, over a large study set, end up at the same place, whether you do nothing, roll up, roll down. It all comes back to the volatility of your overall portfolio.
Yes.
If you roll, you typically have less P&L movement, less volatility of your P&L in your portfolio over a long study set, not an individual, little small time, over a long study set. I like to adjust my delta. I mean, like, I've gotten emails from people, where they have a strangle and now the stock has moved in one direction, we'll go to the upside, and their short call is deep in the money, and they say, what should I do now? I go, well, you decided to sit with it all this time. You don't have a strangle on anymore. You have short stock. I mean, that's or a short future. That's what you have. And if you like the directional bias of it, then you sit with it. It's too late now. So you either have to decide that you're going to manage these deltas. If you start out delta neutral, I think you should roll when you get to about 15, 20-ish deltas when you start out delta neutral. If you had a bias where you had long 30 deltas and now you have long 60 deltas, that means your deltas have basically doubled. You probably should do something about it, get it back to 30 deltas, which you were comfortable for the beginning. That's how I do it. But you have to decide what you want to do. Statistically speaking, you pretty much end in the same place.
Yeah. It's a good point about P&L volatility. The more mechanical adjustments are going to tighten.
And that might allow you to make other trades because your P&L swings aren't as bad, or it might make you look at things as opportunity as opposed to woe is me kind of thing. I mean, there's other kind of offshoots to it. Yeah. Give me the S&P's down 40, by the way.
Oof.
NASDAQ down about 40 more handles from just a moment ago. Next one, please.
I read that the SEC is considering changing public company reporting requirements such that instead of reporting quarterly, they will have to report twice a year. Do you think that would have a tangible effect on volatility? Benetta put this in her daily dose yesterday.
Yeah. I know she actually asked whether we like it or not kind of thing. Not really going from a volatility. You did mention volatility, if I remember correctly, in your answer. I'm going to say, I think it's going to be de minimis. I don't think it's going to make a difference. I think that just like when we got daily options, they talked about how volatility was going to, go through the roof because you could buy protection so quickly, and it's done nothing but it actually, I know volatility is higher today on the events that we have going on around the world, but relatively speaking, volatility had been squashed going into that. It really just comes down to the move in the market. So I don't think it's going to have much to do with volatility. I think it will, for those people who like to trade earnings, I think it will kind of put a little bit of a damper on that volatility spike that you get for earnings, which could be good for 45-day premium sellers. One man's floor is another man's ceiling.
Yeah,
investor's ceiling.
Obviously, this is just speculation, but I would think that having less available information in terms of having these reports come out quarterly 4 times a year, as opposed, which is what we have now, 2 times. Having only 2 of those events would be less information, public available information, which would mean that volatility, I would think, would increase for those 2 events versus the volatility of 4 events. And so I don't know the net effect if that would make the market overall more volatile, but I would think that the earnings would become more volatile than the 4 quarterly earnings that we have currently. That is really the only thing I can think of from a trader perspective. I don't know the business. You mentioned kind of that it makes it a little bit easier to not have to report it quarterly and have to do all the from a company standpoint, it's probably better.
Yeah, from the C-suite point of view, you usually, once you report earnings, you get about 2 weeks before you don't have to dive back into what your numbers are again to get ready for your quarterly earnings again. So I think the C-suite group is going to enjoy this.
Yeah.
I think they'll be the big winners.
Cool.
Next one, please. Or was that the last one? No, this is the last one. At the top of my platform, I can see my delta, my theta, my extrinsic. What is the difference between my theta and extrinsic? Should I be thinking about them separately?
Yeah, so extrinsic value is just generally how much extrinsic value you have in the portfolio as a whole. So that's the total number. Your theta is the rate of decay of that extrinsic value. So if you have $1,000 of extrinsic value and you have a $10 in theta, your extrinsic value is going to decay $10 a day theoretically. So essentially tomorrow, if everything worked out perfectly and the market stayed exactly where it was and all things stayed equal, your extrinsic value tomorrow would be 990. And so they're two independent things. I mean, they obviously go hand in hand. A lot of extrinsic value is going to equate to a lot of theta decay. And so they're, looking at them separately, they're both kind of good to know. They're not something I hyper focus on. The one thing that you can kind of use as a gauge is extrinsic value is roughly, what you, assuming you are mostly short premium trades, which we are, or we have short premium components. But extrinsic value is going to be a function of what you can potentially make on your positions, right? So you can use that as like a marker for the potential value that you can capture over this time period. So if your trading time period is 30 days, you have 12 periods or 10 periods a year, and you're putting out 10,000 in extrinsic value, winning trades, losing trades, managing trades, rolling trades, all that stuff, you tend to keep, or at least target to keep, around 20 to 25% of that. So if you have $10,000 in extrinsic value, you can reasonably expect through winners and losers and managing and all the other things that go through your positions, 20 to 25% is what I would target to capture from that trade. So you can use extrinsic value as a marker to kind of gauge where your potential upside is.
Perfect.
Sometimes there'll be more, sometimes there'll be less. Decay is theoretical, so sometimes you'll get more. If volatility contracts more on a day-to-day basis, you'll get more than that. If it doesn't contract, you'll get less. Today, you probably get less.
That's correct.
Yesterday, you got way more.
Waymo.
It's going to change.
Let's take a quick 90-second break and come back. We've got more Tasty Live as even the S&Ps are down 37, about 10 handles off of their lows. NASDAQ is back to where you bought it, down around 108 or so. Russell down 22. That's your weakest of the group by 2-1. And the Dow is down 200 and change. Volatility still bid at 23.50, about 15 cents off of its highs. We'll be back in 90 seconds. Let's Tasty Live.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's option jive. Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with offensive versus defensive trading. When to adjust. We just got a question about this. Let's go. Option jive on this March 18th. Snowy March 18th. Can you believe it?
I know, it's insane. Never freaking ends. I don't know why we live here. Crazy. It's crazy.
I had forgotten that I put one of my hoses on when it was 70 some odd degrees.
Oh, that's bad.
Yeah, I was able to take it off. I couldn't close the valve. I heated it up a little bit. I was able to close the valve, but I still can't get water out of it. But so far my pressure seems good. Water's a SOB.
Oh, that's bad.
Mm-hmm.
Our research has found that on average, the ideal time frame to hold a trade is 24 days from entry to exit. That's 45 days at start, 21 days exit, 24 days total. Pretty easy math there.
Yep,
During this time, we need to be vigilant in our monitoring of the trades. Also, want to be mechanical and prepared to address anything that might happen.
Yep.
So we're going to talk about offensive versus defensive trading.
Good.
So a couple things that we observe and that you will observe in your trading, as well as, being prepared for. You want to watch your P&L change. So these are on the next slide here. These are things that you're going to be looking for. P&L change, volatility change. I think this is probably the biggest one. Time decay is something that is typically on your side if you are trading short premium, or it will be on your side. But if you have a combination of long, short, futures, static delta, that is not as much of a time decay aspect. But from short premium positions, you will have time decay. And then the strike, where it is relative to where the stock is, this will dictate buying power, which is something that we talked about yesterday. It'll also, dictate your risk, all that stuff. So these are kind of the four things that we're looking at.
Okay.
P&L, of course, will fluctuate during the 24 days that you have this position on, and longer if you do hold them longer. But we should also plan to exit in case of early profits. One of the things we get, or one of the questions we get a lot of is, I'm up 10%. It's been 2 days. Should I take the profit and run? What do I do with that capital? That's another question we get.
Let me know what it's going to do the following week, and I can let you know whether you should take your profits here, right? I mean,
yes.
It's all subjective.
Yes, but the point is that if you're getting 10% in 2 days, you're way past what you would normally expect in a vacuum from most of your positions.
Mm-hmm.
Most of your positions, 10% is going to happen in like 12 days.
That's correct.
So like when you look at your position and you say, okay, I got 10% in 2 days. If the option is a 5 delta option, you might not be taking that profit. But if it's a quick 30 delta option that goes to 25 deltas and you make 10% in 2 days, you take that money and run because you're way past the decay curve.
Yeah, totally agree.
And so here's just a gauge of like what you should expect from a short premium position. This is just a one standard deviation strangle that we did in SPY. So this is, SPY is relatively low volatility. So this is about the fastest you'll see this sort of thing. Like a 10% on a SPY strangle in 12 days is about as good as it gets. You might get that way faster in something like an AMD or an Apple or something that has generally higher volatility because those swings are going to be a lot bigger. But here's your kind of an idea of what you should be targeting or what you should expect from just like your ETF strangled decay.
Okay.
So if you're 20% in a week, you're 12 twice as fast as you should expect.
Yeah, so you did everything right. You did everything right. You got paid twice as fast. I mean, I'm probably running like a thief in the night, but everybody's different, right? You got to do what makes you happy. But I mean, it sounds prudent to close it.
Yes.
Might work out better. Could work out worse.
For sure. Mm-hmm. You don't know the future yet.
No, you don't.
Until AI takes that over. A large increase in volatility is problematic for short options. So this is usually the biggest, problem for most new traders and just traders in general is the change in volatility. You sell premium, volatility expands. All else being equal, the stock is still within your range, but you're like, I'm losing money. What gives?
Yep.
Well, it's usually volatility. And volatility, so it's one of the things that you have to be cognizant of. And you have to watch.
I have a hard time with that word too.
It is a tough one. So things that you can do when volatility increases. Just the probabilities by rolling in the same cycle. So we talk about rolling the untested side. If you're short a strangle, stock goes down, volatility increases, you roll that put down and reduce some of your delta exposure. It takes advantage of some of that increase in volatility. You can increase the time to be right by rolling to the next cycle. So rolling out in time is going to reduce your volatility exposure. It's going to add extrinsic value. It's going to add time decay. It's going to lessen your deltas. Your P&L volatility is going to be lesser as a result of all those reductions. So rolling out in time is something you can do. You can increase risk by scaling into positions. So if you are a 10-lot trader, you can start with 2 or 3 contracts when volatility is relatively low. If volatility expands, you can put 2 or 3 more on. If volatility continues to expand, you can get to your full allocation. That's not something that applies to everybody, but just in general, that's ways to kind of reduce your exposure to volatility is legging in, to your size. And then closing the position, that's another way to reduce volatility, especially on those trades that work fast. If you have positions that, go to 20% in a week, take the position off and run like a thief in the night. You could do a combination of all of these things. So some positions you can roll out in time. Some positions you can close. Some positions you can reduce your directional exposure by rolling down or rolling up the untested side. All these things can come into play all at once.
Totally true. And you're seeing all of that today so far.
For sure.
Yep.
For sure.
Yep.
So time decay works in our favor, even when wrong on price. We still collect premium for the time. There's a value of time, and time will always have value. Time decay is not linear, however, and this is another reason why we will look to stay in trades for somewhere around half the duration, 24 days here. So time decay, if you have $10 of theta decay, it doesn't mean that every day you're going to get $10 and that it's going to be the same for the amount of time that you're in that trade. It has kind of a curve. You have a steepening of your decay as you get closer to expiration. There's also going to be a steepening to the upside of the risk in the gamma and all the other things that go into option trading. So it's not necessarily the biggest number theta that is the best number.
That's right.
Theta is relative to risk. So, really high theta numbers represents a really high gamma and just general risk on your positions. And so there is kind of a sweet spot. And so, you want to have a good theta number. You don't want it to be exploding. Theta decay just in general benefits short options. The ideal time frame is that 24 days. Once you get to that spot, that's when the decay curve starts to steepen, but also the risk curve starts to steepen. And so, kind of managing around that time is optimal. Regardless of the underlying movements, theta decay will eventually get extrinsic value eventually goes to zero. So if you sell an option for $1 and it's out of the money, you will keep that $1. Whether you are profitable is going to be relative to intrinsic value on that trade. So if you sell $1 in extrinsic value, you keep that $1. That $1 doesn't go away. The position itself, if it's in the money $2 and has a $2 of intrinsic value, you've made $1 in extrinsic value. You lost $2 in intrinsic value. You're net down $1. So the extrinsic value goes to zero. Whether you make money on the trade is going to be relative to intrinsic value. Everything else is in between those two bounds.
Yeah, it's called risk. It's not called a paycheck.
Yes.
So, I mean, you're taking risk and you're hoping to be compensated. Now, your probability of success is going to be set on entry. So we like to look for around a 65-ish probability of success or greater. Now, more risk comes with a lower probability of success. You have to decide what you want to do. Playing into volatility, when volatility is higher, maybe sometimes we like to go closer to that 60th percent because we expect volatility to come in a little bit more. We're taking advantage of it. Not increasing our size, we're increasing our risk on entry. Next one, please.
Strike, touch, or breach is a probability we can calculate on trade entry simply by multiplying the delta by 2. So the actions you can take obviously are the same across the board. It doesn't really change. So you can roll in the same cycle, you can roll out in time. I think the key here is to keep in mind that if you're selling a 30 delta put, you're probably going to be tested on that put. Like it's a coin flip.
60% chance of a touch.
Yes, it's more
now,
than
if you get the directional move you want, going back to the slides we just had a moment ago, like let's say in 2 weeks, volatility has come in, and that means that you sold puts when volatility was high, usually in an equity like an SPY or IWM or Qs. Volatility is high when it's going lower. You sell puts, we get the move you want. And volatility has come in now. You got the best of both worlds. This is going to be a great scenario for you. This is outlining exactly that. Maybe the play is to close it. Go the opposite way. Volatility continues to expand and your 60% chance of a touch happens in a quicker period of time. You didn't get the direction right. Well, now you got to think about doing something else, and these would come into play.
Yes.
Even the S&P is down 30.
Couple takeaways here. After trade entry, the market will take control. Entry is all you can control. We've talked about it a million times. You can look for high volatility, liquid underlyings, products that you want to be in. Don't sell puts in something that you're not trying to get long delta in. Like these are all things that you control on entry. You control the size, the time, whether you do it today or tomorrow or a week in the future. These are all things that you control. After you put the trade on, the only things you can control are whether you're going to be offensive or defensively managing this trade. Are you going to lean directional? Are you going to add to the position? Are you going to reduce delta? Those are things that you control after the trade. You can't control volatility. You can't control where the stock goes. Those are things that are outside your control. Developing mechanics builds confidence with the knowledge that anything can happen. I think this is a pretty big key to trading. You start to, things don't really surprise me anymore. I mean, day to day, you get surprised on a move, but things going nuts and big moves in stocks, it's like it happens every day. So, anything can happen, but strategies, the strategies you use and the mechanics you use are the only things you can control and should help you, be comfortable with the positions.
Beautiful. Good job out of you. Good job out of team. Good job on timing here. We're about 6.5 minutes before the opening bell. Even the S&Ps are down just about 30, trading about 10 handles off of their lows. NASDAQ is actually a little bit higher than where you bought them just a moment ago. NASDAQ is the strongest of the group by a small percentage. Russell is definitely the weakest of the group. There's no doubt about that. On a 2-to-1 margin, been that way all day long. Volatility, I think, is the key here. 23.44. It's been hanging out here at around 23.50, up about 75 cents. I think you got a key on volatility here. We've had a decent-sized move top to bottom on the E-mini S&Ps already. So maybe if volatility gets a little bit weak here, maybe the market can catch a bid. If it doesn't, take a look at that for your entry on when you're trying to trade something directional. $50 expected move is about $6 higher than yesterday's expected move. You've already had a larger move than $50 top to bottom on the E-mini S&Ps. We'll take a quick 90-second break. We'll talk more about that and the opening bell next, the moment we've been waiting for. Back in 90 seconds, TT Live.
Turn on the machine.
Turn those machines back on.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. You just scalped your NASDAQ futures for a quick little 20 handles or so here. I think that's the call, especially, listen, you know.
Let's see where we open.
If you had no position, you probably have a little bit of long delta across the board here with even the S&Ps down. Well, they were down 35.
You've spent the last 2 days getting out of.
You did.
So they definitely. I'm long.
Yeah, but I was gonna say, you know, I know you took off positions into the rally, which is what you should do, ring the register, blah blah blah. But when you have long delta, to put on another futures trade with long delta, it's a hard thing to do.
Yeah.
So I think you stay nimble there until you get some sort of feel for the market, whatever that means, whether it's gonna be good or bad, whether the market's gonna cooperate. But it was a nice buy. You took about 50 handles worth of heat, made about 20 handles. That's futures trading. I mean, that's gonna happen well inside the expected move here.
Sosnoffian.
What's that?
It's
Sosnoffian trading. That is correct. Russell's still the weakest of the group on a 2-to-1 margin. Volatility hanging in there, up 64. Bonds at 114.23 after trading over 115 and change. Gold is the one that's selling off here. Gold 48.60 and change. IV rank of 46. I'm going to imagine even with gold going lower, I think there's a big move, 3%, that volatility might get bid in gold and silver. We'll take a look at that. Silver down almost 4%. Nat gas hanging in there, up a penny and change. From the MU is the one that has earnings after the close today. It's up around $3. We'll see what goes on with the market here. We've had already a pretty much full move in the market, top to bottom, on its implied volatility here, a little over 50 handles.
Yeah.
Volatility expanding. Maybe we'll do something in SPX. We keep forgetting to do the 0 day. Maybe we'll do that before we go off the show, off this segment. The next 10 minutes or so. You got about 15 seconds before the market opens. I know we woke up this morning with the volatility in the market all green.
Volatility has come in all week.
Volatility has come in all week. I think oil volatility is going to come and get bid again this morning after selling off quite nicely over the last couple of days. Remember on Friday, volatility was lower in oil with oil higher. We'll see how that behaves today. There's your opening bell.
I think it'll be interesting today to see if I expect volatility to kind of stay bid into the middle of the day, just because you have that FOMC meeting and Jay Powell. I think Jay Powell takes a stand.
He's taking a stand.
Yes, he does. He does. 1:30 Central. So I expect volatility to stay a little bit bid.
Yeah.
If it doesn't, maybe we're back on.
Volatility staying bid right now, 23.40 and change after trading a full $1 lower, still up 70 cents with the E-mini S&Ps down 25. So it is staying bid at this moment. We want to take a look at what's moving quickly here. Only a minute into the day here. Gold down $13 and change. Intuit down 7 and change. Coin down 6. Yeah, Bitcoin trading 72 and change. AppLovin down 5. Meta down 5. It's been trying to catch a bid last couple of days, selling off now. Microsoft, I haven't talked too much about Microsoft. Hasn't done too much, and that's why we haven't talked about it. IV rank of around 25, been going sideways or lower, not participating in this rally at all over the last couple of days. Circle down 3. DocuSign down 2. Let's see what's trying to help the market here. I don't know what LITE is. SanDisk up 20. AAOI, funny, a viewer just sent me, a buddy of mine, Peter, just sent me this. Take a look at AAOI. It's up almost $7. This is that optics space. You look at these April markets. Although there is some open interest, let me change it to volume so you can get a better cue here. You'll notice that there's not a lot trading in here, and these markets are a little bit wide, which makes it kind of a non-event for me to trade. Lulu up $5. Look at this. Go change. It looked like it was lower. Now it's higher. There goes my option trades today. Lulu making a move to the upside after being bid lower this morning. BE up 2 and change. Volatility staying bid up 71 as even the S&Ps are trying to catch a bid here. BABA up 2 and change with markets doing well in Asia, up over 2% last night. I don't know how they are right now or how they closed. All right, son.
I put on a strangle in gold, delta neutral, so I have some short volatility there.
Okay.
Okay. I need a rally in gold. I would like to see gold rally.
You'd like to mention that?
That would be a positive occurrence for me.
That'd be a good thing?
Yes, that would be a good thing.
Okay. All right.
What else?
Gold volatility upticking ever so slightly here. More about price here in gold than anything else.
Yeah, just not a ton moving.
What's that?
I don't have a lot of positions that I need to do anything with.
Well, like you said a moment ago, you took a lot of positions off on yesterday. You definitely have some long-ish delta here in your portfolio. I will say that. Q's down around $1.70. S&P's
It looked
down
like I was going to be taking off a bunch of my oil stuff. I was excited. I was like, okay, I'm going to take those off. Pat myself on the back.
Oil trading 97.90 up 240 here. You'll notice Ivy rank was 71. It's 77. Let's go into OVX colon, as you tell me. CGI. And that's trading 102 and change here, up around $6. So oil has definitely caught itself a bid on volatility and in price here. What else, my son?
SLV, maybe?
Say again?
Maybe go into SLV as well.
Sure. Why don't we take a look at SPX if you want to?
You want to
volatility is staying bid up 83 cents, and the market is, even the S&Ps are up 24. Expected move is about $47 on the 0 days. So say it's about 50. That brings you down to around 45, 40 if you want to. So you could do like 40, 25 would be $15 wide. And if you go to the upside, you'd be looking at, let's say, I don't know, 67, 45, 60. Looks like you're getting around $4.90.
Dude, are you
You want me to do it?
You're on
Sure.
SPX, right? Not.
I am on.
You've done this a couple times, so I'm just making sure.
I am on SPX. Let me get into that account. I can put it out there for you so everybody can see what we're doing here. Let's see if we can get filled at $5 or so. It looks like the delta on this is relatively small.
Mm-hmm.
Maybe a little bit of short delta, like 1 or so.
Okay.
There's the fill at 4.95 and went down a nickel here as the S&Ps went down 21. You got filled in AMD also.
I sold a strangle in AMD. Mm-hmm. I've got to put butterfly on the downside.
Did you do something in gold too?
Yeah, the gold strangle. That was the first trade I did today.
Okay, beautiful.
What else do we have here? SoFi? I feel like that was one of the names this morning. I guess I could just take the stock here at this point, but I'll just leave these puts on and we'll take those here.
Take stock? You mean just get put stock from your?
Yeah,
in the
I
money?
sold these 20 strike puts at like $1, so I'm long stock in 19. I have some at 16 that I've had. 14. Like this was one back from my show with Mikey. I was using it as my like year-long trade, and it's just been sitting in my portfolio. So I kind of like it. I've been selling calls against it.
Now it becomes a long-term hold, huh?
Well, no, this is
I'm
the
just
problem
teasing,
with stock. This is like my average is 1804.
Yeah.
And the stock's at 1771. I've been selling premium on both sides against it. So I've reduced my basis and I've made money on the trade from selling out of the money premium, but it was a lot better when the stock was at 30 because I was up on the stock and the premium. Now, long-term investors, it's great when the stock's at high. When it gets to
more mid to lower end of its range, it becomes a different story, right?
Exactly. So it's
best laid plans of mice and men.
Exactly. So it's a small enough position, and with the margin, I mean, he uses $200 or $300 in buying power to hold the position. So it's not like I'm looking at this thing all day long, but it's been the calls I scalped in SoFi, just to put it into perspective. So I sold the calls at 98 cents, bought them back, the 20 strike calls for 55 cents. So 40 or 50 cents month over month has kind of been a play there on short calls.
Very nice. Very nice. I just had somebody very nice to me. Thank you, Harry. Appreciate it. Send me the best pocket door hardware. He used to be a builder, so I appreciate that. Thank you.
There you go. We got insiders on everything.
Oh my God.
Great.
It's amazing how the reach you have with people from this show.
I got my guy Malachi that sends me the updates on the spot silver market.
Yes, it's amazing. I mean, people are so smart.
Yeah.
They really are. Anyway, bonds down 5 here. Volatility staying bid up 70 cents. Even though E-mini S&Ps are 20 handles off of their lows, volatility staying bid here. Doesn't seem like maybe you've got it right where we're going to kind of chop around and volatility is going to stay bid here. I would have expected on this 20 handle move that volatility /VX would have come in a little bit. It hasn't yet. So far, so good.
I wanted to put something on in Intel too. That was on our little recap segment this morning. To the downside yesterday was one of the weakest of the S&P 500. So I just did a delta neutral strangle there, 30 days out, the 40-50, stocks at 45. There's actually a little bit of put skew here now. It had a little bit of call skew when it was added into the government portfolio. That has come out a little bit into this dip. Now there's a little fear to the downside. But I did that at 245. Another one where it's kind of a mid-price stock.
244. That's okay. It's a penny. But there's that probably a profit we talk about somewhere around 65% is what we're looking for, and that's a classic trade.
Yes.
Even the S&P is down 18. If you have Delta on in your portfolio, let's say you had long Delta on, let's say you had 300 long delta and SPY is down $1.70. I'm going to imagine you're down more than $500, which would be the delta equivalent because volatility is staying bid here. You're probably down, $700 or $800 on your 500 deltas. That's the dynamic volatility expanding. Your delta is good to know and reflective of what your risk should be. But as volatility expands, you're going to be down a little bit more money. You need volatility to contract here to get it back to even or a little bit better on your side. You ready to take a quick 90-second break?
Sure.
Let's take a
I need the trade ideas. We have fast market coming up, and I need some trades. So yes.
Let's do it. We'll take a quick 90-second break. We'll come back. We got more.
What's your assumption?
What's your assumption? Same sort of thing, James. But
James is right. It says it right here on my. I just listened to what you said. That's why you should never follow anybody blindly. You should do your own homework. I wrote it down right here. What's your assumption? We got 10 trades. We'll be back with What's Your Assumption in 90 seconds with Tasty Live.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with What's Your Assumption? Even the S&P is down 27, volatility up 98 cents to 23.70. Volatility is chopping around. It was down around 17. Volatility didn't move at all. Now it's down around 27. Russell's still the weakest of the group, down 22 and change. That SPX trade we put on is trading around 430, 440. We sold it at 495, sitting with it. But I would like to show you how when I first put this on at around $4.95 or so, it had about 1 or 2 short deltas. And now it's basically right where I sold it, price of SPX, and it flipped over to a little bit of long delta, just showing you how dynamically, skew changes a little bit. That changes the prices of the spread itself's delta on there.
I moved it to 420.
Because
we're right there. We're right around 430, so I figure we move it to 420, and if we get filled right now, that'd be sweet. Take 75 cents out of it, and
so perfect. I don't
pat yourself on the back.
It doesn't matter to me. A win's a win.
Win's a win.
And that's all we're trying to highlight here.
Yeah, cool.
All right, let's get to it. And maybe we'll have egg on our face. You didn't go for the nickel or the dime, and it ends up being a losing trade. You never know, right?
Yeah, you never know. I
I
think it's easier to just let it sit and chill.
Beautiful. Well, if volatility contracted, you would have gotten filled.
Yes.
Now you just need a little bit of price, so you probably need a little bit of a rally. Maybe you get it soon, or not. It looks like volatility is bid personally. Let's go. What's your assumption? First one, AA. Oh, just totally left me hanging.
Sorry.
That's like I love you, and then you just said, what do you want to have for lunch? There you are, 420. You're so good at this game.
No, that's all you. You put that on.
No.
$75.
No. All you.
All right, Nate, Birmingham. AA looks a bit stretched to me, leaning neutral to slightly bearish here. Curious what y'all think. So we actually had a ratio spread that we did here. I bought in the risk. I have the 70, 75, 80 butterfly on basically for free. We put the trade on 95 cents. I bought the 80 strike for 80 cents, so I own this butterfly for a 15-cent.
You own it. April earnings, April 16th. I'm so sorry. Neutral trade here.
I think you go.
Thank you for your participation, Nate.
I think I'm going to be a little bit more neutral. Well, you have slightly bearish. So I think that's neutral to bearish.
Okay.
I'm going to look to do the 55-75 strangle. Slightly bearish lean. Looks like it'll be about 6 to 7 short deltas.
Okay. Slightly bearish, neutral, pretty much the same thing on entry, right? You're talking about, a couple of shares, one way or the other, 7, 8, 5. I mean,
Tree Fitty.
Very good.
I'm
55, 75 in April with 30 days. You could have made an argument to
Markets are not great.
Markets are not great. You could have made an argument to go into May with 58 days, 45 being optimal. You're right in the middle there, right? Depending on your time frame. This does have earnings April 16th.
Yes.
One day before expiration.
Cool.
I'm ready. Let's do it. Even the S&P is down 16. Volatility still bid 2350. So you were right on volatility being bid all day long.
Yeah, you got too much going on later today. It's, But hopefully after, once J-Pow has squawked on the stand, hopefully that comes in a little bit.
Good. Next one, please.
SPX neutral. We already did this one. I like it.
Yeah.
We're out. We're done.
We are out. That spread is trading.
Good job out of you if you've been doing this.
Right about where we bought it back, 410, 420, 425, oscillating back and forth. Even the S&Ps are up 20. Volatility up 83 cents, higher than it was last time. Even the S&Ps were down 20.
Yes.
Volatility definitely staying bid. So those 0 days, if you want to put them back on, certainly go ahead. Seems like volatility's bid. Next one, please. So we did that trade. Did we get a little X for that trade?
Oh yeah, we get a star.
We did that. Yeah.
Yeah.
Slide 3. There you go. Thank you. So MU earnings don't know. Oh well, that's no help.
Yeah, come on.
I mean, come on, Blake. Give us some love here. Earnings play MU. Well, let's take a look at it as an earnings play just at the top level. Good IB rank of 64. Earnings are after the close. You look at April options. They're about $1 wide, which makes them not quite as advantageous. You look at May options, and those are $2-ish, maybe even more wide. So I think you have to have some conviction on direction here, or a defined risk trade, which really doesn't take advantage of that volatility contraction in MU. You got a $37 expected move for 2 days. May volatility is about 75, which is going to come in maybe 2 or 3 vol points, maybe a little bit more. April is 75. I mean, between the two, I might want to go to May, since April and May have the same volatility. Or you could do a little bit of a diagonal spread if you wanted to. There was no between April and May, if you're so inclined. What do you want to do?
It's a tough one. High price stock, super high volatility. I mean, a diagonal spread
on its highs, right?
On its highs.
I mean, trade up to 467 earlier this morning.
My own book has butterflies with 2 days to go right here. So that would be a grand slam if we stay right here at like 460, 450.
So you're going to sit. You're not going to do anything here.
I feel there's like a push-pull here.
Okay.
Because I feel like
I have a position on. Markets aren't that great.
Yeah.
I'm cool with not doing anything.
I'm going to sit with what I have. It's a tough one. I don't know from Blake. That's how I feel here. So I'm going to pass. Hopefully it goes nowhere.
Hopefully for us, I agree. Silver, by the way, down almost 4%.
Ow!
Trading down to 75.5, almost 75.5. It's back to 76 and change. Gold is down $1.40. So you got a 3% move, almost a 3% move in gold, and a 4% move in silver. That gold-silver ratio spread has rallied up to about 63.5. And mags, what is this? Oh, this is the
Mag 7.
Thank you. Appreciate it.
I think it actually does it include more?
No, it says Magnificent 7. Yeah. And as you can see, much weaker than the overall market, or in tandem with the overall market. It seems like it has correlation of about -34. So that would tell me it's not correlated with the market as of yet.
Yeah, it looks like I'm looking at the makeup of this, which is it's kind of an interesting makeup. I mean, it's Mag 7, but I think it's leveraged in some way.
Yeah.
Because 60% of the fund is in T-bills. So I think that's probably why there's a dividend here. Is there a dividend? Yeah, dollar
it's going to be a dividend for sure.
The dividend is probably a combination of both the dividend from the stocks as well as the short-term T-bills.
Yeah.
They have T-bills that are March 2026. So they're short-term T-bills. Interesting. The options stink here. So if you look at the option market here, there's no weeklies. The April options, 45 cents at $1.20. I don't think this is an option play. I think if you are interested in being long this, I'd probably just, maybe you do cover calls, but it's a long stock position.
Yep.
I don't think this is an option position.
No, I don't think so either. You look at the April options, they're 60 cents wide on dollar options, and I agree with you. It's you could make some sort of argument if you wanted to buy these and the market itself and was NASDAQ was higher, you could do something like that. But I agree with you. I think it's just a stock trade. I don't think there's anything to do in the options. So poor man's covered call. If you were to look at even going out 58, you have to go all the way out to June. Yeah, no. Can't do it.
Cool. All right, so we're going to pass on that one, unfortunately. VZ, Verizon. Oof. When was the last time you traded Verizon?
It's been forever.
Bearish. Been strong run since the last earnings, but momentum is starting to fade, adding a neutral to slightly bearish position. Noah in Savannah, Georgia. Stock has had a monster rally. What do you do here?
VZ is a tough one. down 80 cents. Earnings are April 28th. Good IV rank of 45. Earnings April 28th. I'd probably stay in the April options if you're looking to do something here. They gave us a time frame of bearish. Stock is down 84 cents this morning. I mean, the stock had rallied and sold off. It went as high as 51. It's down to 49 and change. It's a smallish move relative. There is a $2 expected move for all of the rest of April. I don't know. Sell stock, sell put.
That's what I was thinking, but you have a dividend. So it is a dividend paying stock. Not that I plan to be on this or in this in
April 10th is the dividend. And it's a decent sized dividend of 70 cents. I mean,
and that'll be priced into the options. So you're not avoiding the dividend by using options here. No. But it is something that, is.
Yeah, and you're kind of limited here by, I mean, you can't sell, I mean, the 50-52 call spread is going to trade so cheap here, right? At like 70 cents or something. So you can't do that. Buying the put spread, I mean, the 50-48 put spread, I mean, it's trading for 86 cents. I mean, what? I mean, it's almost a 50.
I know. I was looking at like the 52.5, 48 in April.
I mean, you got 30-cent wide mark on dollar options. You gotta abstain.
I think I have to abstain from this one.
If it didn't have a dividend, I would probably look to sell the at the money.
Sell stock and sell put. That's what I was thinking. But it's like, do you really? It's 70 cents.
Yep.
I don't know. I'm going to pass on this one, Noah. But thank you. This is a poor performance from the banks today. Intel bullish May. I'd go put spreader Jade Lizard in May. Okay, Dan, I put this strangle on earlier in April. You want to do something in May? I mean, it's not like a Jade Lizard is neutral / no risk to the upside, so it kind of jives with what I have.
Okay.
Exactly. Like a different position. Mm-hmm. But I could do something like the 40. Maybe we do it like a more like straddle, defined risk straddle type position in May. So the 40 puts, and then do like the 45-50 call spread. Trades at about $2. The whole thing at like 420-ish. You have small risk to the upside, but all intents and purposes, pretty minimal in the short term.
Okay. Intel bullish. Go ahead.
Bullish to neutral.
Okay.
I would call this neutral.
All right.
All right. We're in.
I can
40
feel you.
puts,
Good.
45-50 call spread.
I like it. I mean, it's directional-ish, right?
Yes.
I mean,
we have neutral delta. My Intel delta altogether, just to put it into context here, is 17, which is, via the contract, like a couple deltas, long deltas.
Beautiful.
Neutral.
Beautiful. Put it in there. Intel got it. Now, that was selling a call spread, selling a put. You sold a $5 wide call spread. Optimally, you would like to collect more than the width of the call spread, $5, but your upside risk is 85 cents. That's your max upside risk. It's a bullish to neutral trade, more bullish than neutral. Next one, please.
Baba bullish weekly. After 2 months of pullback, downside feels more limited than the upside. Bias shifting higher. What do
you think about Baba bullish?
Stock's up $1. It's got earnings into the close tomorrow. I usually hate doing anything bullish here, but
man, you were spot on with volatility. It is bid 23.65, and even the S&Ps are down 18. We haven't. I mean, we're off of the lows by about 20 handles, and volatility hasn't moved. So, spot on for you, son. Man, I taught you too much.
Usually, though, you get the event volatility because everybody's positioning. It's a chop fest for the whole day up until FOMC, and then you get kind of that. You finally get the move, or at least the start of a move But the volatility is the one thing that usually comes out, even if it's like a downside move. Volatility, just because the event is over, the event volatility is done with, it usually comes in a little bit.
Yeah, this could be maybe a little. I mean, listen, nobody knows, right? Like, it also could be because oil's bid. I mean, it's 98. It's trading up $2.50, a 2.5% move. So you got a little bit of that. Gold has come back a little bit, so only down $127. I mean, that's $50 off of its lows. Silver coming back a little bit, about $2 off of its lows to 57.5. But silver's been down a lot more than gold as of right now.
Yeah. Okay, Baba.
Okay, Baba. What do you want to do? Up at $1.33. Earnings are on the 19th. That's tomorrow before the market opens.
I did the 140, 145 call diagonal spread for $4 and change. I'll play the upside. I will warn you, I don't have a great track record with the China stocks, but they are near lows, so take my money. Okay? Take my money. Here you go.
Wouldn't be the first time.
Yes.
That the Chinese stocks have taken our money. Next one, please. AAL. American Airlines. These have been weak, right? As of late. Now they're talking about raising prices because of oil and everything else like that. I mean, here comes the gouge, because they've been gouging the consumer as it is, in my opinion. If you tried to buy yourself a flight anywhere, talk about inflation. Trying to get to my second home, it's costing me twice as much to get there now.
Oh, my second home. Ooh.
I wish Vanetta was here. I really did that for her.
I know, right?
AAL, $11, just under $11, $10.94, up 8 cents, but on its butt, off of its lows of $10.40. What are you doing?
Stock.
Just getting long.
I have puts already. Short puts.
And by I have puts, there you go. I hate it when people say I have puts. That means I have no idea what you
short
have.
Puts.
Long
I have short puts.
I know. I know. You said it after that. Short puts, which is long delta.
Yes. So.
Very good.
We're in. More.
Beautiful. Next one, please. XLE. Oof. Go.
Oil, 41 IV rank. Yeah, so oil ETF. What do we do?
Has gone nothing but parabolic.
Yeah, but these options
straight up.
There's
That's
nothing
the problem here. And by stink, you go into April. I mean, they're not bad relative. I mean, 10 cents. The problem is the implied volatility. IV rank is good at 41, but the monthly implied volatility is only 28. When you look at like /CL, and that is an oil-related product, you got 90 or 100% implied monthly volatility. Let me put up on the screen. Here's your monthly implied volatility, or if you go into a USO, here's your monthly implied volatility. I'd much rather do something like that than XLE, which is death by 1,000 cuts here with a 28 or so implied volatility.
I'm going to do the most boring thing ever. The only reason I'm doing this is because you remember our EWZ position? I'm not doing the double.
Okay.
I'm not doing the double, but the EWZ position, we put on that like calendar. It was a double calendar spread. I legged out of the short option.
That was death. Please don't do that again.
And we got just so lucky, like struck by lightning twice with like a $4 down move in EWZ on just a random day, and made like $1 a contract on those, which was just out of the realm of really reasonable probabilities.
Okay.
I'm going to do something just gross. This makes me sick.
Okay.
The 59.60 diagonal / it's basically a calendar spread. It's so gross.
It is gross. I hate the trade.
I'm doing this. I don't
hate the trade because it's a bad setup. I just don't know how you make a buck on
It's
here.
nothing. It's just another line item in my
You should put an offer in to sell it at $1.50.
It's awful.
Or $1.43 to make 20 cents on this. I mean, you only have, in fairness, you only have $1.20, $120 worth of risk. If you made 20% on that trade, I mean, I hate talking percentages, but man, when you make a trade like this, I think you have to.
Yeah, because
if you put in
the dollar values are
just
so
put in
small.
right now, GTC $1.43. You'll be the happiest man in the world if you make 20 cents on this trade. This is, You should have saved this for Johnny trades. You could have maybe saved a little bit of face. This is horrible.
Okay, but here's
seriously. You should tuck when you walk out of the studio today after that trade.
You are bad. The thinking here is,
I don't know what the thinking here is.
It is
Omaha.
Thank you, James. But get a muzzle for this one. You know, I can finance that long call.
Oh my God.
30 days.
Oh my God.
It's gross.
Please, baby Jesus.
What do you want from me?
Baby Jesus.
Yes.
Next one, please, James. Last one. Save us. Tesla, bullish. And Tesla's always in the top 20 list that we have. It's always number one. Ivy rank is actually below 1. I put a Tesla trade on a 1/2 put ratio spread, working a little bit. Really over 400 now. It's working a little bit better. I did it when Tesla was under 400, but Ivy rank is not great yet. But the monthly implied volatility is great. 50 here. Markets are good. 10 cents wide on a $400 stock. You just had 10 cent wide markets on sub $100 stocks. Earnings are coming after April. This is a stock that has not participated in the recent rally, although we have 2 days of green here. I might look to put on something here. You want to do your diagonal, you can do that. Is that what you did?
Crab trade.
Crab trade. Look at you. Oh, this is a tilt trade. This is not a crab trade. Let me talk directly to the cameras. Here's what happens when you make fun of a thin-skinned person on the last trade that he made. And he comes in now with all delta, being all kind of this. I like the trade. I love the trade here. I mean,
yeah. Make fun of me though.
I'm not making fun of you on this.
I mean, the crab trade. We used to for years, I've been poo-pooed the crab trade. Years poo-pooed diagonal spread. What's so bad about this one?
But now you're putting this is the capital intensive. I mean,
you're making a call.
Made the multiple of 20, 30 times the last trade that you did. That's all I was making the correlation.
Oh, yeah.
I was making the correlation to the $1.23, $1 wide diagonal $1.23, $1 wide diagonal that you made. You can't make a dime on that trade if you tried.
Yeah, but make like $15 on this one.
There you go. That's what I wanted to hear, and that's what I mean, a trader on tilt.
I did the 425. I bought the 425 call in May, which is around the 20 delta. Or around the 40 delta. I sold 2 of the 440s in April, which are around the 20 delta. So I'm basically flat delta right now. You have risk to the upside because you're short an extra unit on the calls. As time passes, if we kind of chop/drift higher, you'll actually pick up long delta as the short options decay and that long option kind of holds its value. So it's a neutral right now, short out of the money vol, to slightly bullish over time position. I also have an upside butterfly there, 425, 450, 475 in April that I legged into from a call ratio spread. So I would consider my position neutral. In the next 2-3 weeks, I would like to see a slight uptick.
Yep, and you can see all of these and that trade on the follow page by clicking on the bats. You can see it right there. I'll
put some comments after the show.
I understand. If you want to see,
I can't do everything.
If you want,
I gotta read the slides. I gotta talk. I gotta do the trades. I gotta post the trades. I mean, it's like
your janitor, your producer,
the help here,
your lunch monitor.
Oh my God!
If you want to see,
the help has not been great.
If you want to see my trades for option trades today, you can see bat.
Now you're gonna promote yourself.
Option trades today, right here. They are every day. Every day, every other day, every day I can. MU and Mags were the 2 that you didn't do. 8 for 10. Huge win ratio here after last week being 10 for 10. You're amazing. We haven't had this kind of participation in decades.
You're amazing. You are amazing.
We're going to take a quick 90-second break. We've got Tasty Extra, my man TP coming on.
Fan favorite.
Fan favorite. Well, we can't say fan favorite. Okay. Well, fan favorite.
Fan favorite.
Employee of Tasty Trade TP coming in. And then we got fan favorite Rob and Maria coming in from the audience there. We're going to talk about March
Trading, March Madness, everything. We're going to have them on.
We'll be back in 90 seconds. We've had very little to no movement in the market and volatility staying bid. We'll be back in 90 seconds. We got Mr. TP next. Tasty Extra. Back in 90 seconds. Tasty Live.
global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Nicky, we are back, son, and nothing puts a smile on my face like this, man. Mr. TP, Tasty Extra. How are you, TP?
All right, guys. Time to sober up.
Drink some coffee.
Why were you drinking all weekend for St. Patty's Day into Tuesday?
Yeah. Nick, both hands.
I've never seen you with a drink in your hand, and I've known you for decades.
I'm not a big alcohol guy. It doesn't do a whole lot for me. And Tony,
well, it does a lot for me when I look at you. I got to tell you that. It certainly makes it a lot easier.
Whatever. I don't want to say in all seriousness because it's not the end of the world. But I don't know, like Tony. I don't know if you enjoy wine. Our old partner Scott Sheridan. He was a wine guy. He could select wine from 1,000 different ones. Me, it's okay. It's a liquid. It has a general wine flavor. And part of that is I don't have a good sense of smell. I do not have a great sense of smell. I blame that. So, and I don't know. It's whatever. So, Tony and Nick, I don't know if you guys enjoy wine or not. Personally, I could take it or leave it.
I am subject to drinking more of it because of my wife. She likes to get inside the bottle to handle me for most of the night, so I have to drink some wine with her.
I haven't got that taste for it. I don't know.
I'm not like Scott. I drink anything.
It's just generally I either like the wine or I don't. It doesn't really.
I go Italian just for my pseudo heritage.
So the question is, after your wife has her fill, is it one of those, does she whip the glass at you or whip the bottle at you kind of?
I'm going to take the fifth.
No, it's more like a.
I'm going to take
like
the fifth, and I'm going to change gears here. Since you live in Texas, oil's at $98. Have you gone with your? I know how you can search water with 2 sticks. Can you find oil with 2 sticks?
Oh my God,
Have you gone over
the things
the divining rod or something? Yeah. Can you?
I'm digging, Tony. I'm digging. As soon as I sign off with you guys, I'm going outside and I'm digging.
All right. You probably should. Up almost 2.5%, 3% here.
So the big thing, and I don't ever remember this being true in Illinois. In Texas, you can buy, let's say you buy a house and it's sitting on a piece of land, whatever, half acre, whatever. Mm-hmm. You got to make sure that you have the mineral rights. It is possible to buy a piece of land, build a house on there, and only own the surface, and you don't own what's underneath. Ooh. So a guy like Nick could say, oh, I own the oil underneath your property. Nick comes out with a derrick, starts drilling for oil, nothing I can do about it, at least as far as I know. And that's called mineral rights. And the other big one, the big one that's heating up is the whole water thing, the water rights. So oil's important. Water is becoming a bigger issue here. Anyway.
Okay.
Yeah, we don't have that issue here in Illinois. We got nothing. We just, it's mostly just taxes. Like there's nothing good on our property. It's just taxes and crime.
And you're happy to pay him, Nick. And
I love it. I love it here. It's snowing. It's freezing outside. The wind, like it makes your face all dry. It's wonderful. It's wonderful. TV.
Oh yeah, and when your nostrils freeze when you breathe in,
right?
It kind of seizes up the nostrils.
Right.
And I still think March is the best when the streets are still like the sidewalks are still frozen. And there's still that little path, that little footpath.
Oh yeah, the
of icy crap.
Yeah.
And it's all dirty and gray and stuff. That is peak
should come back,
Chicago
TP.
winter.
You should come back. Just come back.
You know what? It's there. I have warrants outstanding in Illinois. So here's, what's interesting. So everybody's looking at this FOMC meeting. Understandably, I get it. What's interesting, Nick, is over the past day, the probability of a rate hike has gone from basically 0 to non-zero, has gone from 0.1% to 0.9%. The possibility of a 25 basis point hike. I don't know if you guys talked about that yet, but it's changed over the past. It's literally overnight. And those numbers, go to the CME FedWatch tool makes it easy. Go to the CME, you look at the numbers, and it shows you all the upcoming FOMC meetings, and the probability of a rate cut has dropped. And a rate hike has gone from 0 to non-zero. And part of that is fears of inflation, obviously. With oil, like Tony, like you said, oil's back up to $98. At least the futures are.
Volatility is bid, TP, too, up $1.23, flirting with 24. I'm talking about / VX here. I mean, it's higher than it's been, even the S&Ps were down 35 as they are right now earlier today. So volatility definitely, maybe for that reason, maybe for oil, maybe for all the reasons.
I think it's all a big ball of
we never know
volatility wax, but I think right now, at least the story is, and I'm not a big news guy, but the point is, this is right now this is kind of a news driven market, and apparently somebody blasted the Iranian oil feed, like the quote unquote upstream stuff. Okay, fine. Crude oil's up a couple of bucks. SPOs are down. When I last checked, they were about $20 when I last checked. But yeah, Tony, the uncertainty is high. They're jacking up the volatility. People are scared. Understandably.
So, for sure.
All right. Since everybody is looking at the FOMC meeting this afternoon, coming out at 1 o'clock, I did a little analysis analysis to you people about looking at ZB versus ZN volatility. Now, this is something that I've used for years when I first started trading down at the Board of Trade, trading 10-year note options. And I would look at the 30 years and just sort of started to generate generate these ideas. What I'm talking about is, and Nick, this is the nice thing about ZB and ZN. They're both $1,000 a point. Their futures tick sizes are the same. In other words, 31.25, right? Yep. The options still both trade in 64ths. So you can really do kind of an apples to apples comparison between ZB and ZN. The question is, which one, if you wanted to sell premium in there, maybe you don't want to sell strangles in there. Okay, maybe you do, maybe you don't. Maybe an iron condor. Maybe a short call spread, maybe a short put spread, something like that, because volatility in bonds has crept up a little bit as they've sold off. So here's the way I approach it. Is this the best way? No, I'm not saying it's the best, but it's a way that I use to just pick ZB or ZN to see if one offers a little bit higher return than the other. So let's go into the first slide.
Okay.
Or the second slide, I should say. And this is just a graph, okay, of the 30-year minus the 10-year yield. This is the interest rate differential. And one of the things, and I know, Nick, you're going to bring this up, because you always do, is you say, well, I know that interest rates change in the 30 years, the amount they go up or down is different than the 10 years. You're absolutely right. The differential does change. So back in, let's say, January of 2025, the differential 30-year yield minus 10-year yield went from 0.2, 20 basis points, all the way up to 60 basis points, 70 basis points. You're saying that isn't stable. And you're absolutely right about that. But let's go into the next slide. Or actually, the next 4 slides. It's all kind of the same thing. So that's looking at 14 months. Okay, if we go to the next slide, that drills down into, it's the start of that graph. It's from December 2024 to April, that 4 months. Mm-hmm. So when you look at it in a tighter time frame, it went up maybe 10 basis points. Okay, maybe. And even shorter term, it was more like 5 basis point changes. If you go to the next slide, it's even less. So what I want people to look at here is here's going from April to August. Again, a relatively flat line, which means the basis between the 30-year yield and the 10-year yield isn't changing much, which means that they're both moving up and down. The yields are moving up and down kind of the same. Okay? I'm going to get to that in a second. Let's look at the next couple of slides kind of quickly. So we go from August to Dece, then in the next slide. And again, very flat. Dece up to the current time, pretty flat, within, let's say, 5 or 6 basis points generally. And this is going over 4 months. If you go down into an even tighter, let's say a month, it's pretty flat stuff. Let's go to the meat of what this is. So I like to look at implied volatilities. There's another metric called DV01. It is the dollar value of a 1 basis point change in yield of any treasury. Any treasury. Could be the 30-year, the 10-year, the 5-year, the 2-year. It doesn't matter. They all have this DV01. What it means is if the yield on the underlying bond changes 0.01%, 1 basis point, the notional value of the future will change by a certain dollar amount. So if here the DV01 is 134.71 for the 30-year for ZB, right? if the value of the bond is, what are the bonds trading, 115 or something like that?
Yeah, 114.5 now. They were 115 this morning, a little over.
So let's just use 115 to make the math easier.
Sure.
So the value of that bond is, remember, wait a second, it's $1,000 a point. So if they're trading at 115, the value of the bond is 115,000. If interest rates drop 0.01%, 1 basis point, the value of the bond would theoretically go up from 115,000 to 115,134. Okay? That's what that DV01 represents. You can get the same thing for ZN. The DV01 for ZN is about half of what it is for bonds. Why is that the case? Because a 30-year bond is more volatile or is more sensitive to a change in yield than a 10-year is. And that's because of duration, and I don't want to get into the whole bond math underlying that. That's a different, you don't need to know that part. What you need to know is what the DV01 represents. And here we can see DV01, 134.71 to 64.35. If you divide those, it's about a 2.09 ratio. Okay? So what it's saying is that bonds for 1 basis point change would change 209 times what notes change. And we do this when we trade the note over bond. We'll buy bonds, sell notes is kind of a pairs trade. We've seen this ratio up to like 2.5 or down to 2, that sort of thing. The ratio of the DV01 moves around. So that to me is a metric of volatility. But wait a second, what about IV? Let's go to the next slide. So if that is DV01 divided by the 30-year divided by the ZB divided by the Z, and the ratio is 209. So it suggests that the ZB is 2.09 times more volatile than ZN. But here's what I did. Next step, let's look at the actual implied volatilities of the ZB and ZN options. Do the exact same thing. ZBIV is, what do I have, 11.2, ZN 6.4. The ratio is 1.75. It's lower. Okay, a couple of reasons for that. Remember when we saw the volatility of the yield? In other words, it's not a perfect up and down one. Maybe one's up 105, 1.5 basis points. Another one, or 0.95 basis point change from 1 month to the next. That sort of slippage away from the parallel yield curve is part of the reason that happens. But in practice, what it means is that if we go to the last slide, the reason that's happening is that the IV of ZN is relatively high compared to the IV of ZB. That's all it means. So if you did this, and I didn't do this exercise, I think it was worth it. If I took the bond volatility to 11.2, divided it by 2.09, I'm going to get something under 6, right? Probably, under like 5.5 even. So what that tells me is that the ZN volatility is a little bit higher. Is it wrong? No. The market isn't wrong about this stuff. But if I'm going to choose a short premium strategy and I don't have anything else guiding my behavior about choosing ZN, choosing ZB, the yield curve is going to do this or that, I don't know anything about that. Tell me where I can get a little bit higher return on my defined risk strategies. I look at these ratios right now, it's pointing towards ZN. That's how I would choose between the two of them.
Makes sense. Makes sense. Good job. TP, you always bring in the tea, my man.
What do you think happens with bonds coming into the FOMC?
Yeah, go into your crystal ball. He's putting you on the spot.
I don't think so. I sold some like true to my word. I'm short some premium in ZN right now.
Yeah.
I might take it off at right before, but it really hasn't come in at all. I knew it's
No, it
that's what
hasn't.
it is. Tony, you're absolutely right. The vol's bid. I don't think anything's going to happen. There's going to be the S&Ps are going to be up or down another $25 in the 5 minutes after. Okay, they're probably going to heave around. Personally, I don't think it's going to. I think they're going to keep rates the same. I don't think that's the headline today. I think people are watching it, but I think, Tony, to your point, the what's going on in Iran and all that stuff. I think that headline is dominating the market today, as opposed to the FOMC.
Very
That's my
good.
take.
I totally agree with you. I totally agree. That oil. Put it all in there as oil trades 98. This is the area that it's kind of fell from before. We'll see if that still happens. Volatility definitely been in there. If you look at the IV rank in oil, it's 78 now. It's moved by about 7 or so. Last time I looked at OVX, semicolon CGX.
You know what?
Yeah, go ahead.
Just to put a cap on this, Tony, it seems like the times we've seen this before, the shooting wars over in the Gulf, we see oil at 120, 130, 140, that sort of stuff. We're not seeing that right now. I think that's interesting.
Well, let's hope we don't for the sake of humanity.
Yeah, no
but
kidding.
102 or just under 102, up around 6.5%, a little bit more. There it is, 102
Oil
right now.
volatility.
On oil volatility. Yep. All right, TP, we're going to take a quick 90-second break. You're going to want to stay tuned and watch this. We got Rob and Maria coming in. We're going to talk a little bit about markets, of course, but we're also going to talk about March Madness. We're going to take a little step back, have a little bit of fun here. As even the S&Ps are down 50, that's 0.75 of a percentage point. Russell's down 1.25. Dow down about 1%, which is $460. NASDAQ down 190. Great scalp on you from trading the NASDAQ from the upside.
I mean,
you didn't want to take the 20 handles. Now you love the 20 handles. I know.
20 handles are good, but I gold and silver, not good.
Gold and silver, not good.
They got me. They caught me like a.
Odd, down $140 on gold, and silver down $3.31, 4% versus 3%. We'll be back in 90 seconds. Thank you, TP. We got more after this. Rob?
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Looking for market insights you can count on?
Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nikki, we are back, son, and enough out of you. We've got these guys in the house. We got Rob and Maria. Bring them on, please. The moment I've been waiting for. Slow
Good
clap.
Good morning, everybody. Thanks for having us here today. I'm Maria. This is Rob. And I have to tell you something. He is so excited to be on the show that he's speechless, which is something that never happens.
That's true.
Yeah, I know he's definitely not speechless, okay? I know that. Rob is never speechless. So I know we're going to get a lot from Rob today. No problem.
So how are you guys? How have you been? It's been a little while.
We're very good. Very good. Just trading away. Just everything's rolling along.
What did you trade today?
What didn't I trade today? I'm just getting prepared for the FOMC, basically.
Okay.
And you got
everything that was 70 and 80% up, I took off because you never know what he's going to say.
Makes
so
sense.
I took my money and ran.
Mm-hmm. Since we started our YouTube channel, we built a studio in the basement. I hear up there yelling in Italian back and forth. She trades with AI every day with you build an AI agent, and it's just for ourselves.
Basically, when I first started, it took me about 9 months to get her all pre-programmed, and I have it all preset that if I have a stock symbol and I want to know about the stock, I just input that symbol and she will give me all the presets that I need to make a decision on that trade.
So you're trying to put me out of business is what you're doing.
Yeah, I mean, hey, we're getting replaced very quickly, okay? This is moving
only a matter of
quicker than we
time.
thought. So, but you guys use the API. So a lot of people have used the API and are doing these sort of, programmatic trading. Is that how you're doing a lot of what you're doing now? And are you taking kind of the ideas and things that we've talked about here before and kind of programming some of that positioning?
Well, basically, I trade primarily NQs.
Okay.
And that is only because I remember a long time ago, they said, if you had only one trade to make, what trade would that be? And that stuck with me. And you guys said we would always do NQ with the ES.
That was Nick and Mike. Yeah.
Yes.
Yeah. Gun to their head.
I was doing those, but I've graduated to the NQs now. The naked puts with the NQs.
What the hell were you trading this morning? I saw MU come across and Synopsis and
same thing, naked puts.
Naked put. All
I got out of MU because of the earnings. You never know what's going to happen.
On February 20th of 2020, we did not know what a put and call was. We started watching. Tom and Tony were great. Don't get me wrong, but they're a lot of fun. The real business end of this stick is Nick and Mike Butler. And we watch Mike in his whiteboard, and Nick does something called I don't even know if you still do it, Anatomy of a Trade. Mm-hmm. And I would watch those hours and hours and over, and I made notes and everything. And fast forward to today, I will be doing 35,000 0 DTE SPX on Tasty Trades platform this year. And it generates about 100% rate of return. I mean, it's just a nice steady. We started a YouTube channel, and since October, we've been tracking a $30,000 account and $1 million account. And both of them are up. The $1 million account's up like 500 grand since October, and the $30,000 account's up like 15 grand, all just based on that. And then we do the Crazy Ivan thing based on the NQs. You guys said ES, but Maria, former banker, looked it all up and.
Yeah, I'm more comfortable with the NQs.
With the NQs. So.
But we do have something called the Crazy Ivan, which is just a glorified naked put on the NQs. And basically, we only put them on. I only put it on if the market is down at least 300 points, and then. And then I would put it on only if I get another 200 points down. So it has to be a major crash. And and I asked for an exorbitant amount of money.
I didn't tell you, but they want us to come on top.
You've been buying the dips.
So you're selling puts into bigger down moves, popping volatility. This is like, volatility.
It's a classic trade.
It's a classic
at market
trade.
Highs or
a classic trade, and we trade completely differently. I go in 45 to 60 DTE. I always go in at 12 delta. I used to do it every day because we live on the beach and I like to go swimming and surfing every day, but she got all pissed off at me for she watches the charts constantly all day long. Once I got the robot going, I'm never inside, right? It's the ring.
I don't need you. See, I used to get pissed off because I depended on him to tell me about this stock and that stock. Now I don't need him. I have my Vera, which is my AI. So all I do is ask her everything all day long.
You take a screenshot of the Tasty Trade platform, you put it in there, and then she tells you what to do, or not what to do, but suggestion. And then you fight with her in Italian.
Not in Italian.
I love it. I love it.
So it's great. And things are great. It couldn't be any better. We're having a blast, and it's all works, and it's all because of you guys. 100% because of you guys. And, the other thing that people ask us on the channel all the time is, well, why do you trade at other brokers? I said, well, a lot of people argue about commissions and fees, and you guys are the lowest, but that's irrelevant. It's all about the slippage. You never talk enough about slippage. Fees and commissions are pennies, slippage are dollars. If you have 5 cents less slippage at Tasty Trade, that's $5 on a trade. If you can find a different broker and save 10 cents, who cares? Right. I'll pay 10 cents to save $5 all day long. And the other thing is tech support people don't know about is if you call tech support at Tasty, you got some crazy system so that my tech support calls always go to Marty or Quentin, no matter where they are. And so then your tech support people, they know what the hell type of trade. I don't know
because they speak Rob is what it is. They speak Rob.
The type of trades that you are. And so that is actually really been very, very helpful. And the other thing is, I cannot tell you how many times you guys said all these, trade 30% buying power. I think these guys are so stupid. I know math. I'm going to go 70, 80% buying power. And old Clink calls me one day and said, hey, Rob, we need $2.2 million and you got 30 minutes or I'm going to start closing you out. Like, what happened? And call Marty. What did I do? He said, how much buying power you were using? 70. He said, did you see the show? Yes. What did they say? 30. He said, now you know why.
So have you adjusted your trading to that now?
That's what
That's it. I go 25%. That is it.
She's
Hard stop.
Hard stop.
Because
Hard
when
stop.
I do my NQs, I'm in a little deeper than he is. My DTE is usually around 16 to 18, and I only go out about 32 days.
So your deltas.
My delta,
Yeah. And so we used to fear down days. We'd be sleeping at night. Oh God, oh my God, it's going to go down. We're going to get a margin call. Now we go to bed. We're like, please, Maria, please God, help Maria, help Nick, help Tony, and please make the market go down 400 points tonight. Please, I'm begging you. We need it to go down so that we can get into the market, so that everybody else is panicking, and we're selling stuff that we used to sell for 150 for 600. We're cleaning up. It's the easiest money you ever made because you got power.
There's risk. Everything's risk.
Right.
So,
your buying power is your risk and some.
But I think the key here.
I've seen the videos. Roll down. It's fine. Don't worry about it.
The key here
all
is
I can tell you is since February, like last year, I had to roll one. Right. I rolled once, and I rolled it because what I do is I'm at 12 delta. So if it gets to 250 before it gets there, I roll it. That's what I do. And so this on the cues. I had to roll it once, and that was in October, and I rolled it to January, and I got out in November. So the other thing is I always close at 25% profit. So I'm really conservative. She's the gambler. She's the gambler.
50%. I know. I squeeze
nuts. You're crazy.
No.
Let's switch.
She makes more money than me, so
let's switch gears for a quick second here and talk about gambling, because this really is gambling. You're my March Madness guy. Full disclosure. Well, hold on. Full disclosure.
Right? It's the same. It's all math. For me, it's not gambling. It's all math. It's one of the reasons I like Hood is because the guy said, someone interviewed him and said, well, people are really against gambling, and gambling. And he said, well, what's gambling? And they said, well, gambling is when you pick the Chiefs to win the Super Bowl. We said, oh, we don't have gambling on our website. Oh, no, you don't. What do you have? Predictive markets. Well, what do you do in predictive markets? You pick Kansas City to win the Super Bowl. Isn't that the same thing?
Yeah.
So
I would say
they figured out how to get around. So let's talk about. Well, let's not call it math. Let's call it gambling. Okay.
Sure.
For those of you that don't know, my background is my grandmother and grandfather were college professors at Princeton with Einstein. My grandmother was a mathematician. She was a German professor. They translated German back and forth. They always spoke in German. My grandfather was a physicist and also a statistician and mathematician and instructor. All my aunts and uncles worked at Los Alamos on the bomb. They were nuclear physicists. On Sunday nights, all we talked about was gambling. Not gambling. All we talked about was numbers primarily. I knew that my phone number was the square root of 2 when I was 8 years old. At 10 years old, we would always play cards because it's just math, right? And so I learned the game of blackjack when I was 10. I started dealing at 12. I started counting cards at 14. My dad started taking me and my brother on cruises with him, and he would play cards, and he would look at me, and I would count the cards because I could count a 6-deck shoe, which very few people can do. It's just a learned skill. It's all just learned skill. It's just math to me. It's just math. And so then I started getting kicked out of casinos and became a lawyer, and things progressed. I started the first online sports book, and then Janet Reno, as the attorney general, invited me to stop doing that. And I started an education online company and took that public, retired at 42. And that's when Maria and I started trading all the time. And then we did options with you guys. So that's my background. Okay. My grandparents gave me an abacus at age 10. My grandpa gave me abacus at age 10, slide rule at age 12, book of random numbers at age 14. I looked at him on my 14th birthday, dead in the eye. And I said, Grandpa, why do you give me an abacus at 10, a slide rule at 12, a book of random numbers at 14? Why only on those birthdays? Nothing on the others. He looked me straight in the eye. And he said, if I gave you at any other date, that would be odd. Grandpa took 5 years to land the stupidest grandpa joke of all time. This is the kind of weirdness that I come from. So please bear with me. All right. So for those of you that don't know, let's pick a day. February 9th, 2024. I came on this show. I told you in every sporting event, and by the way, I don't watch sports at all. I've been making millions of dollars gambling, never watched sport, haven't watched sport in 20 years. Super Bowl, doesn't matter. I told you at every single sporting event, there are 3 teams on the field: the home team, the visiting team, and the officiating team. Nobody looks at the officiating team. February 9th, 2024, I told you Bill Vinovich was the referee of the 157 referees that had ever refereed NFL games. He was at least a touchdown further under. I told you, take the first half under, the second half under, the first quarter, second quarter, third quarter, fourth quarter. If there's overtime, take the under. And Nick will tell you, who else do we always take, Nick?
Those money line dogs.
The money line dog. Look how smart he is. Look at you.
He pays attention.
There's not a ton going on up here, but it's okay.
It wasn't mine. That is just awesome. Money line dog. That's good for you. So how'd we do? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 and 0. My phone goes crazy ever since 12 and 0. Thanksgiving this year on my YouTube channel, I told people money line dog and the under. Always money line dog and the under. We went 20 and 10, won another 120 grand. When you gamble, again, it is silly how smart you guys are. Bet small, bet often. Thank you. Bet small, bet often, right? Take how much you can lose, not how much money you have, how much money you can lose, divided by 100, that's your unit. If you can lose $100, your unit is $1, right? Bet small, bet often. It's exactly what you guys say. It's scary, right? It's scary. I can lose $1 million, so my bet is 10,000. I play blackjack for 10,000. I bet on sporting events for 10,000. But the money is immaterial. Whatever your number is, divide it by 100 so that you don't care. That way you can go swimming and surfing and not give a crap about what's going on in the games. All right. So NCAA, what is the most popular days in Las Vegas? It's not Christmas, it's not Super Bowl, it's not World Cup. It's the first 4 days of the NCAA starting tomorrow. Impossible to get a room unless you're a high roller. Go to Caesars Palace Sportsbook. It's a blast. Okay, why is that? Because we have 48 games in 4 days. It is a gambler's dream. Dream come true. Excuse me, not a gambler's dream, a predictive markets individual's dream.
There you go.
It's a dream come true. They are going to be giving away money in the next 4 days. Let me explain how. And I know, Nick, I heard you this morning giving away all the secrets. I heard you. You don't think I listened.
It was a teaser. It was a teaser of what's to come.
But you were spot on. So at least, again, I know you're listening. I'm so proud of you. So here's the way it goes. You're always going to take the money line dog and take the under. When I say take the money line dog, that means you're going to, because they're the dog, let's say I want to, and it's always to win. I want to take the money line dog and I'm going to do it to win 10,000. On a typical game, say it's 5 or 6 is the spread, I'm only going to have to put $7,000 or $8,000 up. So at the end of all this, my buddies will say, "Oh, Rob, we went 40 and 18, and we really killed it on these games. How'd you do?" And I'll say, "Well, the 48 games, I lost 30." They go, "Oh, you went 18 and 30. How much did you lose?" "Oh, I won 120 grand." Why is that? Because on the winners, I win 10 grand. And on the losers, I only lose 3, 5, 7 grand, whatever it is. So I can lose a lot of games because at the end of the day, it's about how much money you make. It's not how many games you win. That's immaterial.
It's P&L. We say this all the time.
P&L, right? P&L. I'll tell you a story about George Steinbrenner sometime. My dad put him on the U.S. Olympic Committee. He was head of the U.S. Olympic Committee. A great story about what your focus should be. We don't have time for it. Beth gave me a hard 5 minutes. Let's keep going. We got 2 minutes to go. Let's keep moving. All right. So now, when it comes down, and I hope somebody's recording this. You can go back, listen to it in slow motion. You got until tomorrow morning to make the bets. All right. So now, we got it. All the games, any game, football, basketball, hockey, doesn't matter. As Nick told you this morning, money line dog and the under. Always. Okay. Why is that? Because we're not betting sports. We're betting math. We're betting against bettors that are, I'm not going to say stupid, ill-informed.
No.
So what happens is everyone bets on the favorite and the over. Why? Because the favorite, they say, "Oh, I get to win. Yeah, I want to win. I want to prove I'm right." And they bet on the over because everybody, scores, home run. They love all that, right? So it's just like in options, right? It's like all I do in the SPX is I just look at I backtest 7 million trades every single weekend. I look at where are they selling premium. I don't want to sell there. They're selling there because there's so many sellers. They're only getting $1. I'll sell over here and get $2. It's just, man, I don't care about the charts or who's Trump or any of that stuff. All I care about is where these, I'm not going to call them idiots, ill-informed people. So, okay, we got ill-informed gamblers, right? And so we're going to go the other side. So that's why we always take the money line dog and the under. Now, here is the dirty little secret about basketball in the college ranks, not NBA, college ranks. They have what we call boosters, and boosters donate lots of money to the college, a nonprofit institution, to help the athletic team. Boosters are rich people who like to, let's not say gamble, we'll say enter into predictive markets. And they would like to win some of their money back. So they go to the coach. I think Krzyzewski is retired, so we can say he was famous for this. Bobby Bowden was famous for this. And say, Coach, I gave you $1 million this year. It would be great in the first round if you covered the spread. And the coach would say, well, I don't look at the spreads. No, you don't look at the spreads. Of course you don't. But we are favored by 23.5. And I cannot stress to you enough how me and my other 25 boosters here, who each give you $1 million, who pay your salary, who give your kids now NIL money, it would be thrilled. We would be thrilled if you covered. Okay? So what happens is, how do you know they cover? And sometimes you'll see they'll be up by 22 points. It's a 23.5 spread, and they'll call timeout with 6 seconds to go. You go like, what are they doing? Right? They bring it in, and they leave the best guys in there, the superstars. They leave them in till the end of the game. And so they're going to cover. So as Nick said this morning, if it's a 10-point spread or more, maybe 10.5, you want to forget about what I said about taking the money line dog. You're going to bet the favorite, and you're going to give up the points because they're going to cover only in the first 2 rounds. Why? Because the coach can just leave the big boys in, and someone says, oh, you ruined the Sisters of Mary. You drove them into the ground. Blah, blah, blah. I say, hey, what do you want me to do? You know, these guys are really good. Look how good they are. They're going to be going into the NBA next year. Oh, my God. We beat them by 100,000 points. You know, the Sisters of Mary, that's okay. And the Sisters of Mary, you know what they say? We don't care. We got to be on TV. It's fantastic. And here's the other thing that helps you, the Rudy effect. The Sisters of Mary, unlike the big teams, the Sisters of Mary got a lot of guys that are in their 4th year, right? And the crowd's going, Rudy, Rudy, Rudy. And Rudy, some guy way down at the end of the bench who's been on the team for 4 years, has never played a single game, and his mom and dad are there, and his grandma and grandpa are dying sick. They're in a wheelchair, and they're going to see him play his last game, and the coach says, Rudy, get in there. Well, Rudy stinks. That's why he was on the Sisters of Mary. That's why he played four years and never got in. He's terrible. And now he's playing against some guys that are going to be in the NBA next year. Of course they killed him. It's fantastic. So what was the question?
Under.
So I'm gonna let Nick before we go here. He did a wonderful job. Yeah. I'm gonna give Nick. What are we doing, Nick?
We're doing the unders.
All the unders on every game.
All the unders, the Booster Buddy bets, the top 3 teams minus the spread. Everything else, money line dogs to win your unit. So our unit's $100. You can bet to win your unit total on the money line dog. Mm-hmm. Everything else to your unit. First half game unders. Bet them all. We're doing all that. Rob and Maria,
we're gonna put you on the spot. We're gonna do all these.
Thank you so much for coming on. We appreciate having you on. Where do we find you guys? I know we have mariashoetrade.com.
We are on
YouTube now.
What's it called?
Maria and Rob Trading.
It's Rob and Maria Trading. I think it's not first Billy because I named it.
You have Rob and Maria on YouTube trading.
It's Rob, but it's something like that. Look, we don't get any money out of it. We don't care. If you go and look at it, great. If you don't worry about it. It's fine.
Awesome.
You know what you can do is you'd be nice if I could get 5 minutes once a week or once a month on this freaking show. That would be nice.
I don't know.
We'll see how you do on these bets.
Yeah,
maybe we'll lay it on then. We'll figure out if you
I don't think we have that salary for you, Rob, laying around. I don't know. This is a tough one.
All right, let's take a quick
shout out to Frankie. You see the picture of Frankie behind me?
He's a devil, is right. That was the best caption you had up there. Good job, Maria. Good job, Rob. We'll take a quick 90-second break and come back. We got more Tasty Live after this. Peace, guys. Thank you so much.
Thank you, Rob and Maria.
Bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. All right, Katie, what is the Widowmaker?
The Widowmaker can be any spread that is volatile that might dink you if you're on the wrong side of it, but at tastylive, the Widowmaker historically has referred to a spread in natural gas futures and the seasonality of injection season and the storage around that. So it's typically a calendar spread that has the propensity to move between the March and April natural gas futures contracts.
What does tendies mean?
Tendies refers to ordering chicken nuggets at a restaurant when you're out watching the game with your boys or your girls, but tendies in the options trading world or the trading world refers to profits that you are taking on a position. What is an offer?
So the offer price is the price at which you can buy an option at, the bid being the price to sell at.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Everybody, and welcome to the Liz and Jenny Show. My name is Liz Deerking, that beautiful brunette to the left of me is Jenny Andrews, and we are live from the SIBO's famous SPX pit.
Today we have an amazing study from our research team. This one comes from Jacob, our PhD from University of Chicago.
Our resident genius, can we call him that?
Yes, our resident genius. It's a good one. Today we are looking at, I'm going to go to right here, 0DT at the money put spreads. Let's jump right in.
I like that it's part one. This is going to be a buildable foundation of trading, what we have going on directly behind us. This is one of the biggest volume pits there is. Retail traders have taken up and taken how much of the volume?
Taken over. They're more than half the volume now. It used to be institutions. The retail traders are taking over the SPX, especially the 0DTE. So today we're doing a deep dive into selling 0DTE at the money put spreads.
Today and every Wednesday, right? Because this is going to be a recurrable segment. So we're very excited.
So we're going to jump right in. Here we go. The 0DTE option markets give traders access to rapid results at a liquid prices.
And so far, our research has avoided making directional assumptions and focused on delta neutral approaches to selling the 0DTE options.
But as the markets climbed higher and higher, it's natural to wonder what happens if we decide to pick a side.
Okay, so today we're going to crunch some numbers and see how different approaches to selling 0DTE SPX puts have performed. Put spreads, I should say.
All right, using over 2.5 years of data. That's how long these zero DTEs have been around. Just almost 2.5 years. Over 2.5 years of data in the zero DTE SPX options, collected this data every 10 minutes.
Consider the results from selling one put spread every day with, now this is important, at the money short strike. So at the money short strike. That's
at the money
important.
short strike considered a range of widths for the long strike. So it's a spread, at the money short strike, the long strike, range of widths. So different width put spreads. That's all. Placing the trades at 9 a.m. or market open. Everyone asks, what's better? Selling these at 8:30 when the market opens, and this is Central Time, or selling them at 9 a.m., letting the market shake out a little bit?
It's been a big topic. Okay, the trades were closed if they reached 10% of max profit, though they were frequently closed for more than that due to only checking every 10 minutes. That's actually pretty good.
That is. Examine the total number of winning trades, the total profits or losses, and the maximum drawdown, the largest amount someone could have lost following these mechanics every day by starting at an unlucky time. So the maximum drawdown isn't maximum loss on one trade, it's multiple losses in a row.
Yeah, that's kind of a key too. This is something that we've known from before. So that max drawdown might look like a big number, and we'll address it when we get into the charts. But we repeated the analysis looking for 25% instead of 10.
All right, all trades were assumed to exercise at mid-price, and all times are Chicago times, so that's Central Time. Here we go. Zero DT at the money put spreads open at open. So when the market opens, 8:30 Central Time, closed for a 10% profit. $10 wide, $15 wide, $20 wide, $25 and $30 wide put spreads.
Okay, so this morning at 9 a.m., exactly at 9. I mean, I was looking to the second, Jacob. I put on a $10 wide at the money.
All right, so these are at the open. He's going to compare open versus 9 a.m.
Yes, I'm sorry, I did it at 9 a.m. So this is the open. So if you put those on, you're probably going to get wrapped around the same. So this is, you've got $10 wide, like she said, all the strikes around there. All of these are profitable at 10%.
Average P&L, all positive. You're going to have the highest average P&L with the $30 wide, but you're also getting the highest max drawdown, and that's starting at an unlucky time and having multiple losses in a row.
Can you hear this? They're probably trading behind us.
Yes, it's very busy.
The
right
natives
now
are getting restless behind us. Okay, so so taking a look at this one, I'm really glad we're deep diving into this. This is something that I like to show, especially newer traders or people that are just getting into this. You're really looking at a defined risk. If you're doing something $10 wide, $15 wide, $20 wide, that is your risk definition. The max drawdown, as Jenny has mentioned, means you're entering where there's going to be multiple losses in a row.
I'm going to pull this up. I'm going to go to the platform here and pull this up. I know we're 10 a.m. Central Time right now, but I'm going to pull up this trade just to see the mechanics of putting it on. If I go to the 0 day, and here's my at the money put, 50 delta at the money, just right outside where we're trading right now. Actually, we're trading 66.84, so at the money might be closer to the 66.85.
Right.
So here's a $10 wide for $4.50.
So you know what's interesting, Jenny, is like I said, I did mine at 9, and we're going to go and take a look at this. I got $4.25.
So it's not much. Well, you see, I'm slightly in the money.
But it's still going to be wrapped around as long as you're going with the 50 delta $10. Mm-hmm. It's going to be, you're going to get less and less as the day goes on, but not significantly less.
And if you're taking this offer 10% profit, it's just $4.40. That's all you're getting, or $44. If you're taking in $440 credit, 10% profit is only $44. It's not that much.
It's not.
But then you widen it. So here we have $15 wide. Almost $6, $20 wide, $7.50.
It seems to almost be adding a little bit more than $1 each time you add $5 in risk. Wrapped around. I mean, I'm giving you back of the neck in math.
When you look at the results, here's 85.55. Here's $30 wide for $10. So 10% of that's $100. And you look at the result, $30 wide, $61 average P&L per trade. It doesn't look like there are too many losses.
No, you got to keep in mind too that this is baking in the losses and the wins, right? So it is defined risk. So what you can see is, I think the wider that you go, meaning $10 wide versus $30 wide, your maximum drawdown does get bigger. Your P&L also gets bigger. There's the risk reward give and take.
There is the risk reward give and take, and we're going to keep doing a deeper dive into these. We will in the future. We're going to study more of these, and maybe next time we'll ask, do 2 $10 wides versus 1 $20 wide. That's another choice. Now let's look at 9 a.m. Same trades, opening them at 9 a.m. instead of at 8:30. Still all great results. Pretty similar, I would say.
I would argue they are very similar. I mean, when you're looking at this, if you're saying 9 a.m. versus 8:30, this is dealer's choice. This is, I mean, if you're going to nitpick, there's a little bit more of a max drawdown and a little bit less of a P&L, but they're all very similar.
Honestly, I think it's what works for you. If you're at your computer at the open, it's great, it works. If you're in the shower and you don't make it until 30 minutes after the open, it still works.
And you got to keep in mind, when Jacob does these studies, this is not saying, oh, look at the market, I'm afraid of it today. This is mechanical, opening it up as if you were a machine. Every day you're doing it. If you get the loss, you get the loss, but you're back the next day to trade again. That's what these results are saying.
And this includes
losses
to over 2.5 years of data in SPX, including this past February, because this past February, that was the worst results for the 0DT SPX trades since we've been doing them for about 2.5 years.
And you're going to have those losses, and those are also in there. So let's go to 25% profit.
I like this. I like taking a little bit bigger of having a little bit higher profit target. Again, good results.
Kind of going back to where we were before. This is at the open 25%. You do have a little bit more profit potential, but you'll notice the drawdown was a little bit wider. The max drawdown was a little bit wider, especially for the 30-day. It's just because if you're going to lose, you're going to lose. You're waiting. You might have missed that 10%.
You can put on a put spread and get out for a 10% profit target like that if you get a quick pop up in the market. But if you're waiting for 25% profit target, you need more than just a little pop up in the market to get 25%.
Big pop or time.
Yeah. All right, and then closed at 25% profit, but opening them at 9 a.m.
This is more my cup of tea. 9 a.m., 25% profit, because in my original example, the 10% or the $10 wide, I put it on at 9 a.m., I collected $4.25, so 10% would be about $90. 25, that'd be about $100. I'm fine with that.
Now, this morning Liz was dead set on waiting until 9 a.m. I threw in my trades at 8:30. I was really trying to get filled, and you waited. You put one on it at 8:30, and we're waiting till 9 for the other one.
Well, I wanted to do exactly what this study was.
And are you out of it?
The one I did at 8:30, I'm out of because it wasn't this study. The one I put on at 9 a.m., I am not out of yet.
Right, and at 9, the market was higher than it is right now.
Yeah.
So you've got your order in. Did you put in an order for 10% or 25%?
I immediately put an order in for 25%.
25%.
Yep.
25%. Takeaways: over the duration of the study, SPX has climbed from 38.35 to 66.44. So it's no surprise that selling puts every day has been a profitable approach. I get it, we've been in a bull market, but we've seen this trade many times come off, even on a down day.
So that's the one. This is the one takeaway, and I love the resident genius, and he is right. So if you're selling put spreads, they're neutral to bullish. But if you're selling the put spread and you're putting in an order to close it for 10% or 25%, you're looking for a small pop. The day doesn't necessarily have to end up.
I know they say, okay, we've been in such a bull market, but I'd like to see how many days were green, how many days were red, because I don't think it's that crazy.
But it doesn't, hold on though, but it doesn't matter.
Like it's probably, 50, maybe it's 54%, 46%.
But with this style of trading, you don't have to end with a green day.
That's what I mean. It doesn't have to.
You don't have to.
Because we haven't had all green days. We've had plenty of red days. So you don't need a green day to get out of this trade.
You really don't at all, which is fascinating. Okay, so sticking to defined risk helps traders know how bad things can go quickly. Taking profits helps avoiding serial losses and large drawdowns. I agree.
Higher profit targets were able to take home more overall, but resulted in more exposure to drawdowns, especially for wider spreads.
Absolutely. There was not clear, and I like this, there's not a clear difference for traders who sold their puts between 8:30 and 9 a.m. Like I said earlier, it's kind of dealer's choice. All of these are high probability trades that you can look at in the morning.
Even narrowing our trading all the way down to SPX 0DT credit put spreads leaves a wide range to explore. In the coming weeks, we'll experiment with short strike placement, trade management, and rolling. We have lots of great ideas for Jacob for these studies in the coming weeks. We'll bring another new study next Wednesday.
And these will all build on one another. We're very excited to have this segment back, and we want to give a big shout out to our resident genius and everybody out there.
All right, thanks for watching. This is going out on YouTube, so if you enjoyed this video, like, subscribe, or share with your friends. And you can find more videos like this on our YouTube channel.
Absolutely. All right, Jenny, now back to the markets. Do you know SPOOs are only down 31?
What a rally.
Yeah, let's pop in.
Let's see.
Let's pop in and take a look at this.
Okay.
32. So walking in today, let's kind of give a brief rundown. On the we opened down, but not down that much. Down about 20 when I was putting my put spreads on.
Yeah, when I woke up this morning, we were up. I woke up at, I don't know, 5:45, and we were up 20, up 30.
What are you doing up that early? You tell me I'm not allowed to text you until 7.
Oh, I'm an early bird now.
For 15 years I've been working with you, and if I text you before 7, you say, "What are you doing?"
No, my schedule's changed. My schedule's changed.
Okay.
Anyway, I was
Welcome
up,
to the early birds.
I was up at 5:45 today. Yeah.
Aren't the mornings amazing?
Now I go to bed at 10 and I'm up at 5:45.
The mornings are way better. I love up in the mornings.
Although, not tonight. Frank the Great was the first to text me saying good luck to Miami tonight. Miami plays at
Miami of Ohio.
Miami, Ohio plays in their basketball game tonight. They're in the first 4. They're playing at 8:15 Central Time, 9:15 Eastern Time. It's a late game. So if I'm watching a game that starts at 8:15 tonight, I'm going to be up late.
You know I got to root for your boys.
She's going to be sound asleep by halftime.
I will be sound asleep, and I will wear red. It's not for you. It's not for you, Louisville. But I will wear red to support the Miami of Ohio boys until they play Kentucky. Then I gotta switch to blue. Is that fair?
Yeah,
that's fair.
They mean. I hope they win tonight. I hope they make it a few rounds. It's been fun to watch. So don't tune into the Miami game tonight.
Yeah,
Definitely.
that'll be fun.
All right. So back to the market. Down 34. The turnaround was when the PPI came out. Right? Let's see.
No, the PPI came out real early this morning. It came out at
7:30.
So, but no, that being said, okay, the turnaround, not the train turnaround, but it did. When I woke up this morning, SPOOs were up 30. And then when the PPI came out, that went to unchanged.
At 8:30, when we were on the train, SPOOs were down the most. I think almost the most on the open because I couldn't get filled at first on my put spread, and the market popped back up. But then I want to say it was around 9, somewhere after 9 when we were walking off the train, that it did take a little turnaround. So that would be 9 our time, which would be 10. Is that the durable goods or factory orders? Because it seems like 9 o'clock is when it started to take a turn.
Yeah, but there's so much stuff, Jenny, in my opinion, and people smarter than us, macroeconomics, have a lot to play with this. There's some headlines that have been going up about dumb things. I mean, not dumb things. I shouldn't say dumb things. It's all very good things, but we don't know what turned around the market.
What turned it around. There is the FOMC meeting this afternoon. So that's coming up today, too. So busy day.
It is a busy day. I do like being on the floor. There is definitely more of a buzz today than we've seen.
Yeah, for sure.
I thought for sure that it would be a little bit more quiet before the FOMC meeting.
Usually on the FOMC days, it is a little quiet until we get to that.
Yeah.
Oh, right now. They heard us say it's usually quiet, and everyone just calmed down.
Very, very quiet.
Nobody say a word.
Okay, so we are taking live tweets. Put the hashtag LIZJNY. We did have a couple earnings. Want to pop in and show that we closed our Lulu this morning.
Okay, we did an earnings calendar in Lulu. We didn't want to risk much. We paid $70 for it, and it came off for $61. I was really afraid Lulu was going to move far because it has in the past on earnings, had some big moves. It barely moved, only up $4. So when we saw it, this calendar a winner, we thought, let's just take it off.
Yes, we took it off this morning on the train, and I'll push that through so we can see it, but I did want to close that on the open. We didn't want to lose it. Oklo, Macy's, and something else had earnings.
Oh, so we sold the 9-day puts, so we're not out of, I don't know that we're going to get out of this yet because we sold the 9-day puts, and you can see we sold them for 97 cents. They're 70 cents right now. There's still quite a bit left.
We're only up 27%. We've got the 9-day. I don't mind leaving that.
Yeah. So I think we leave it. I thought earnings are over, that 51 put, we'd make more than 27%.
Well, yes, but not with the 9-day. Oklo, it's not with the 9-day. You're not going to get that much. A little bit of premium came out of it, but you still have so much time.
I'll put in the GTC for 50%.
GTC is good till cancel order to put. We are very known on this show to putting our closing orders in for the profit target that we're willing to take. That's a good till cancel order. And sometimes those just save us, where you come and you're like, markets move. That's a very common theme on this show. Markets move, meaning like it can blow right through it and come right back down. And sometimes if you don't have your order in, you can't get out.
Right. Oh, DocuSign.
DocuSign. I mean, I was blanking. I
know we have a winning earnings trade. DocuSign also had earnings. It barely moved. So we had 3 earnings that barely moved. Lulu, Oklo, DocuSign, nothing really moved.
This is different than Oklo because we had this in for a while already. This is not a new trade. That's why it looks like it's more of a winner without a movement in the 30-day.
Mm-hmm. We sold this for $1.45 for 12 days ago. Sold a put, and I'm going to take it off. And with a 51 rank in DocuSign, well, we're already in April. We could move. Would we move to May? Sure. That was easy.
Sure. It doesn't need to be overthought. Yeah, let's do it.
Okay, so if we take this off.
Yeah, because I wouldn't leave that. No. And you're not going to roll it up in the same cycle. So go to May. We're not even going to look at what that is.
All right.
Oh, May options are having a hard time populating.
They're loading.
I saw that on a chat.
So maybe we'll just close this for now. All right, I'm going to close this.
I mean, I'm just going to take a walk down memory lane while we're saying these May options.
50 cents.
Do you remember when there was... So we have 0 days, and that's a huge thing out here. But if you're in a regular stock, DocuSign's in here, there used to only be 4 cycles, right?
Yeah, because
you'd have the 2 near term and 2 far terms. Yes.
And when you're trading near, next, mid... And I don't. How could they determine between next and near, next, mid, far if you're trading?
When you know somebody, these people have stared at each other for about 30 to 40 years. So you kind of know if you're here, I know that's not near because you're going to be closer to your face.
Well, and if I'm here, you know that's next. It's not.
Yep, I know. I've been staring at you for 30 years.
Now with the weeklies and the 0 days, I don't even know how they know which cycle.
And so the cycles would roll off and roll on. It was just interesting looking at May because as it wasn't populating, I thought, I wonder if it's new.
Oh.
It might be a newer option to be added because right now we still have March and April, and you always have to have two consecutive cycles.
And once March rolls off, then everyone will have April and May.
Correct.
But right now, not everyone has May.
Isn't it weird the things that you remember from years and years and years ago on the trading floor?
Yeah. Things just come back to us.
There was a walk down memory lane. But that's when I looked at the May, I thought, oh, there's still March and there's still April. So that May isn't new. Everyone will have it. Everyone would have had it when your March rolled off.
Oh, I want to see where oil
I'm sure
closed.
Frank the Great from our YouTube chat knows that because he was on the floor too.
I want to see where oil closed yesterday so we see what happened with Mikey, because Mikey's needed it at close 95.53.
Home run for Mikey's trees.
Mikey. That 90, let me show here. We've got oil. I'm looking at yesterday's close, 95.53. So that should be a home run for one of his butterflies.
It should be.
Look at them jump up in oil. If we are out of all of our oil.
Wait, did it jump up today? It's only up 2%. It's not that crazy.
No, look at this.
It was there 2 days ago.
I mean, it's getting back towards near the top. It's not like the day where it got to 100, but oil at 98, I think that's...
Yeah, I think I was confused because I heard it over 100 today.
No, the
might
high was 98.
Might have been the not light sweet. It might have been the...
But oil at 98, I think, what do we have? We just have this one downside ratio spread. Put this on 2 days ago, it's up $90. Maybe we could do A, take that off, or B, add on an upside ratio spread.
Oh, okay. I was going to go
or butterfly it off.
I was going to go with A immediately, and then I kind of like adding both. Now let's look. Let's look at butterflying it off. So we collected. What did we collect? Trade price.
$229.
We collected
in
quite a bit.
MCL, it's $229. It's $229.
It's $229. Yeah. So if you're going to open that up and see. To butterfly it off, you would see if you're going to lock in a profit.
It's so far down. 81.78, so $3 wide.
So 75. No.
Nah. I don't want to give up $160.
Okay, so crumple that option up and throw it out the window. Okay?
Let's just...
Well, you're locking in. We got $229.
So let me see. Yeah, let's look at the difference. If we're paying $160 and we collected $229, so $70. We're locking in $70.
That's not bad versus taking it off for $90.
I don't know. I might rather have the $90 because... Well,
butterfly it off. You got the top, and it's wide.
I guess.
So what we're assessing here is if you took it off, you're going to take $90 profit, and then it's gone. Or you can collect $70, lock in a $70 profit, and have a $3 wide butterfly to the downside for 29 days.
Or we add the upside.
I say we butterfly it and add the upside.
No, because if we butterfly it, then we are giving up. We're giving up too much. We're giving up $160. That would take risk off that upside. You know what I mean?
Let's take a look at it. Well, let's look at it. Right now, I'm leaning towards butterflying it off.
And I would lean towards adding the upside ratio.
We have to look
spread.
at the strikes first to see if it makes sense.
So 78.81, that's $3 wide, and we took in 229. So if I go to the top and look for a $3 wide.
We were inside the expected move, so you're going to want to go in a little bit. So you're going to want to go 115, 115 level?
We could give ourselves more room if we're more afraid of the upside. This is 30 days.
Yeah, it is.
I feel like we could give ourselves.
Oh, God, no, you can't start at the 130.
I want to see. You get 250 for the 130, 135.
So then we'll have a total collected of about $500. That's not bad.
I know, right? But so we'd have $500 and we'd have 2 ratio spreads.
And that is very far out of the money for this cycle. Yeah.
Right?
We'll go with that option.
Yeah. Then we've got 250 to the downside, 250 to the upside, or 230. 230.
So, but you get to add them both. You've got $5 then basically on each side. Yeah, go for it.
$5.
Yep.
So we'll have that naked call to the upside. Well, I'll show what this looks like once
Well, you can push it. You can do it before you push it through too, if you want to.
Yeah. I want to see.
We're going to show it on the curve
both.
view.
Okay. So here's oil right here, trading just under 100. To the downside, it's way down here.
So wait,
right?
hold on.
No matter
Just look at the top wherever you are. Because of our total collection, so it's $478. I mean, we were saying wrapped around 5.
Yeah.
The total collection is $478. So anywhere in this sweeping wide range, it's $478 that we get to keep.
Which is not bad for these little micros.
Well, keep in mind, you got 25-cent strikes.
And our peak of where we could make, 774 is
an additional 3 or 5, depending on which side you're on.
Is at 78 to the downside. And our risk,
because that was $300 to the downside.
Our risk to the downside is right at that 70 level.
At the 70 level.
And to the upside, it's been fun trading oil.
I mean, this is. Keep going.
Keep going. Here we are.
You're just back to where the stock is trading. Can you shrink this? Yeah.
Yeah, there we go.
There we go.
Let's
keep going. Keep going. Let's see if we can get it all on the same page.
Okay.
There. Much better.
Kind of.
Much better.
All right, that's as small as it gets. So here we have oil just under 100. Our peak at the top is around 135, and our break-evens around 146 and change.
Can you please go to the peak? I just want to show something. If you go to the peak here, you're going to make $970
because that's
versus
a $5
wide versus a $3 wide. So you will make more money to the upside because we made it wider to the upside. But anywhere in that sweeping before the bad ears, in that range, you get to keep 400.
Right.
It's not a bad trade. Okay. It shouldn't use any additional buying power. It's using a little bit of buying power, probably the spread.
Oh. Yeah, I wouldn't think it would, but I guess maybe they feel like there's a little more risk to the upside.
And keep in mind this is span margining, so they can switch it at different times.
All right, I'm going to ship that for $249 credit.
You can take it down.
And I could take it. I'll take it down a little bit. I'll let that work for a minute, and I could take that down.
Yeah.
Then we'll have two ratio spreads, similar to what we have in 6E, but in 6E it's 2 broken wing butterflies for really, for a small credit, where we're going to have 2 ratio spreads in MCL for a big credit. Like here we've got $500 credit almost for these 2 ratio spreads, where in 6E we have only $50 credit for the broken wing butterflies. That's what happens when you define your risk. One's defined risk, one's not.
That's what's nice about the small.
I took it
products.
down. Oh, maybe I took it down way too much. $2.45. I gave up a nickel.
No, that's fine. I mean, you're good giving up a nickel.
Okay.
We can't go to Twitter. I'm struggling with Twitter, and I don't know if it's the internet.
Let's see.
No, you don't have to go to it. Okay, you've got it up. Can you refresh?
Let's see. Oh, look at this. Look. Ashvin made it to Charleston in time for sunset. We'll miss the Liz and Jenny show and Jim Schultz this week. Oh my gosh.
That's a beautiful view.
Have a wonderful time. That looks so nice.
That is beautiful. I love it. Thanks, Ash.
That was yesterday. And we also had, and I love how Frank tells us, Tuesday's option volume, 55.7 million contracts, 19% below average. Calls leading puts 11 to 10.
Yeah. Calls leading puts.
Yeah.
So we're back to calls and puts. Calls leading puts.
And look, who is also on vacation, Punished Pixels.
Missed the show for the last week, enjoying a break on the beaches of Indonesia. Hope you get better weather there soon. This way to rub it in, because both Ashfin and Punished Pixels have beautiful weather. It is still snowing here. I've got my snow boots on.
I know, it's cold here, but that looks amazing. It does. Yeah, to be on a beach somewhere. Let's see if I could refresh. You think Twitter's not refreshing?
I can't. It could be my computer, though. And then it just goes, oh, this is what I've gotten every time I try to refresh.
Oh, yeah.
Okay. Yeah, so that's okay. We'll keep an eye on it.
If you're tweeting us and we're not getting to it, it's just because there's some kind of Twitter internet issue.
Something,
right?
yes. Every time I refreshed, something was happening there. So I'm glad you got to the first two. We appreciate everybody tweeting us. So we'll take a look at that. We've kind of managed everything that we need to manage in here.
You know what I could do? I shouldn't have refreshed, because I could have gone to Bob's earnings list from the previous day to see what was coming today.
Yeah.
But let's take a look at bonds with the FOMC meeting today. Let's take a look.
I also know that Micron has earnings, so I do want to take a look at Micron. All eyes are going to be on that today. But the hard part about having a show on a Wednesday with the FOMC meeting, now the CME FedWatch as of yesterday was pricing in a 98.1% of no rate cut.
Nothing happening.
Of nothing happening. But and that was as of yesterday. I'm sure it changed a little bit today. But it's hard to do a Micron earnings trade before that 1 o'clock.
I won't put on any earnings trades until after the 1 o'clock meeting. So we can look at it. Micron's tough. Micron at 467. I struggle with what to do in there. I don't have a position in Micron. It's been on another tear, so I don't know. I really don't know what to do in Micron right now.
So no, let's open it up. It's a $467 product. Let's just open up the trade page and take a look.
$35 expected move.
So we talked about this yesterday briefly on last call with Lulu, where Lulu I wanted to get in, but I didn't necessarily know.
Yeah, but a Micron calendar is going to be expensive.
It's going to be expensive, but let's price it out, just for intensive purposes.
Just do an at the money, buy the 9-day, sell the 2-day, $660. We paid $60. This is 10 times more than the Lulu.
10 times more than the Lulu, but Lulu was only a $150 product, and this is a $460 product.
Yeah, but it's it's not even like a 4 times more expensive product, and it's 10 times more expensive on the calendar. So honestly, for me, I'm not going to play Micron for earnings. I'm just going to wait and see what happens. And I have such a hard time playing products that have been on a crazy tear, because you don't want to short it, but you hate to get long it. So what do you do?
So it's interesting. I think I've changed my trading style over the last couple of years, and with that little blip, I don't know that I'm going to get long it either. But if I was in this already, I'd be riding the wave.
Oh, if I were already in it.
That's what I was going to say. Is it's real easy to say. It's a lot easier for me to be like, I'm just going to get on this wave and ride it.
If I were in
I'm
it
willing
already.
to. This is a bizarre way to trade. I know there's going to be winners and there's going to be losers. I've been trading for years, and if every trade's a winner, they're lying to you. The market gives you what the market gives you. But I'm kind of a go with the flow. I'm willing to give back a little bit of profit to make sure that I get that flow if it goes up.
Okay.
Do you know what I mean?
I agree. And if you're already in it, because if you're already in it, you're making money, on a bullish trade, making money. You don't care if you're still in it, making money and risking a little bit if it pulls back because you've been in it. But if you haven't been in it making money as it goes up, I don't want to jump in right now.
Yeah, I don't, and that's why we've said on this show before that selling out of the money puts are my favorite and your favorite trades. I mean, like I said, Jade Lizard is our baby, the zebras are number 2, but they all have an embedded out of the money short put in there. When you're taking a look at something like this, it's very hard to pull the trigger because what would you sell? The 400 put here?
Oh, that's why I said I'm going to pass on my.
Yes.
You know what else I'm passing on? Yesterday, so it's funny. Yesterday we were looking at some of the quantum stocks. So we looked at QBTS, which is D-Wave. We looked at IONQ, which is IonQ. My husband is at this quantum convention, and he saw the IONQ booth and the D-Wave booth, and he saw the people at this. And in the words of I asked him, I go, what do you think of all these quantum stocks, and should I sell puts in all of them? And in the words of Taylor Swift, it's a long time coming. Like, it's going to be a long time before we...
Well, and that's what we talked yesterday at last call. That's what the volatility is telling us. That it's not, the like risk-reward scenario is in the numbers. It's not in we don't know. You and I don't know when it's coming. And quite frankly, they know a little bit more than we do, but they still don't know.
Well, it's just a long... I think he was surprised, like, how much far into the future this is going to be from what he expected going into this convention.
Will it be our kids' kids?
I don't know. I don't know.
Well, our kids see quantum computing. I hope so. Those are pretty interesting. But we do thoroughly enjoy selling those out of the money puts to give us that, but not even in this. Let's look for some implied volatility and get some new trades in.
Okay, just glancing to see if there's anything else we need to do or manage. I don't think so. Our OKTA, we have a short put in here. It's up 25%.
Close it.
Sure. Oh, and there's something, $1.80, that's still decent. Maybe let's put in 50%.
You could do that too.
Yeah, I'll put in a GTC. We don't have a GTC. So GTC for 50%, and that's in. Also, we have that one stock.
That's the only thing that we've had in this year in OKTA. Just a little FYI, I was looking at our year to date.
I wanted to look at this too, this KTOS. That was the one we threw one share. We threw in one share so we could remember it, right? But since we put in the one share, you could see it's up $5 or $6.
So go to the watch list and go to the defense watch list that TP and I put together.
Oh, okay.
You and I added TP added KTOS, but you added a couple of these on there too. So kind of taking a look at the defense stocks, I want to see if their implied volatility is still really high. Can you sort by IVR? Right
here
in the middle.
We go. All right, KTOS is the highest.
Top of the list. And then CW's next. ITA is the ETF. Do you want to take it's $232.
We could look at it, ITA. I don't know how liquid it is. Aerospace and Defense ETF.
Sounds cool. Now, take a look at this. There's no weeklies. You have the standard, it looked like the standard monthly options.
I want to see if we...
Yes. Okay, hold on.
Oh, she's getting very excited about the May options.
Yes. This is what it typically used to look like. So here you can see March, April, right? And there's no Mays because you have to have 2 consecutive months. Old school rules. You had to have at least everybody had to have 2 consecutive months. So in 2 days, they'll get the Mays.
Did you know this was expiration week?
No.
I didn't either until I looked and saw March 2 days. Is this Friday?
Yes.
That would have been a big deal a long time ago. It is not as big of a deal now.
It's a big deal for ITA.
Yeah. All right. So come Monday, we'll have, in the words of Jimmy Buffett, I wish I were on a beach like Punish Pixels, but come Monday, we'll have May options. We don't have them today.
Wait, what does Jimmy Buffett say?
Come Monday. He's got a song called Come Monday.
What's the next line?
It'll be all right.
Good job. I want to make sure you do it.
Steve, I can see Steve now. He's dreaming of a vacation. So we might, if we don't find anything in the 30-day, we could wait on some of these stocks that don't have May yet until Monday.
Yeah, we can. So let's take a look at the 30-day.
It's rough. Look at these markets. 5 nickel at 330.
No, we can close this up. I mean, my original. I was just very excited to see my point being made about the 2 consecutive months. You've got 288 shares traded. If I look at this list, the liquidity. Take a look at the stars. Let's sort by stars all the way over to the right. We're only going to go with a 3-star.
We're going to keep moving until we get to a 3-star.
The only thing is it's going to be
Raytheon, and one of our favorite viewers works for Raytheon.
We don't have favorites, Jenny.
One of our favorites. One of our many favorites.
We love you all equally. They're like our children.
Many favorites. If I go out...
You know what? I said this. I had a painter over the other day, and I'm putting up all these pictures of my daughter in the basement because it's her graduation's coming up. And her
birthday's coming up.
No, well... but yeah, I guess. But
aren't her graduation and her birthday all wrapped around the same time?
Well, I mean, they're a couple months apart, but maybe a couple weeks apart. But we're not having a birthday party. But I'm putting up all these things, and so my painter comes in and he goes, "Oh, is this your favorite child?" I go, "I don't have a favorite child." But there's one I try not to make mad, and it's her. But it's kind of like that. It depends on the day which your favorite child is, right?
Yeah.
So it's kind of funny.
Depends on the day.
Depends on the day.
Okay, so
Raytheon is not your favorite child.
All I said was one of our favorite viewers works for Raytheon.
Depends on the day.
Depends on the day. Now, what will we do here? It's funny. I'm not comparing the Raytheon chart to Micron chart, but it has been going up and up and up. All the defense stocks have
Except for Boeing. Boeing has not had the parabolic run that all the other defense stocks have.
Yeah, but that's hurt by the airlines are taking a hit, so that side of Boeing's taking a hit because of there's more to Boeing than just defense.
Yes, there is more to Boeing than just defense, but when you're taking a look at the basket as a whole, it's got a very large implied volatility. It's a liquid stock.
But so maybe the defense end is going up, but then airlines aren't ordering planes as much. There's a big problem with all the airlines with the oil market.
Did you see
that part of it?
All
is
the airlines popped yesterday by like $2.
We'll have to look at
check
them.
those.
In the meantime, let's see if we want to do anything in Raytheon.
So this is the first one with a 40 rank and a 3-star.
Yeah, it was the highest star list. We could sell. You can get pretty far.
Sure.
180 put, 230 call.
So if you're selling premium in this, you're outside the standard deviation on both the calls and the puts. And you can see that by that little dotted line.
Oh, I gave ourselves plenty of room.
To the downside.
To the 10 delta put. No, the same. It's the 10 delta put and the 10 delta call. It's just $5 wide strikes on the downside and $10 wide strikes on the upside.
Yeah, I was just looking at the dotted line. I thought you were trying to skip a strike in the dotted line.
No. So I just went 10 delta, meaning 10 delta means we've got a 90% chance there's a 90% chance that call's going to be out of the money, or a 90% chance that put's going to be out of the money.
So let's ship this. I mean, now you have wide markets in here. It was the most active in the liquidity provider with the stars.
It's only 3-star.
It's the only. Well, there was 3 3-stars.
That was our
Boeing, Palantir, and that
highest star with the highest rank.
But you've got 30 cent wide markets on the puts. And 20 cent wide markets on there. Let it. If you get filled at mid market, I like it.
I'm going in with $2, and I'm not going to lower my offer.
Done. Done.
Okay, and we're going to let that work. In the meantime, we're going to look at the airlines. American Airlines.
Let's take a look at. You see the pop? So who was it? Somebody yesterday.
Wasn't it ding?
Somebody yesterday. All my kids have their own ringtones, so those are the only ones that can break through. Somebody you have better ticket sales even though the inflated gas price, and then it lifted, rising tide lifts all boats. It raised all the airlines yesterday. So take a look at all of them. Go to Delta, you all.
American had a little bit of a pop.
We have United in there, I think.
Delta.
Yeah.
Delta's pop
That's the one that had, they released their ticket sales.
Delta's pop was much greater than the American. I want to look at, and we never really look at this, but, here, Frontier. I wanted to look at Frontier.
Frontier? ULCC?
Frontier Group. So I only wanted to look at this not because of Spirit, and we watched what happened. We saw Spirit, that was the debacle. Okay, my son has to fly Friday from Cincinnati to Tampa. Frontier was one of the only nonstops, or Delta, Frontier or Delta, the only nonstops. And so he had no choice but to fly Frontier going there. It was the only flight that worked.
Yeah.
I'm not sure what happened, but he had to change his flight. So he went on his phone and changed his flight and said, "Oh, Mom, it was so easy. I changed my flight. I changed my girlfriend's flight. Changed everyone's flight.
How much did it cost you?"
I didn't have to pay a thing. That's what he said. He goes, "I didn't have to pay a thing."
It's because it went to your credit card?
It all went to my credit card. I was like, "Do you know how much it costs? It costs more than your original plane tickets to change your and your girlfriend's flights."
Did it really?
Yeah. Hundreds and hundreds and hundreds of dollars for them to change their flight. And he was like, it didn't cost a thing.
He's just happy. Well, it doesn't cost him anything. He's still under your
But I don't know how he didn't see that.
Well, they make it that easy. They make it that easy.
Oh, anyway.
But this isn't something that we trade a lot of.
I've never looked at this.
With Spirit, I'm not going to touch this with a 10-foot pole.
You know what? I might, just for the heck of it, get long Frontier. If they're secretly charging
parents. It's a great business model.
Okay, so Delta had a big move. Do we want to get into Delta?
We have you all already. So once again, I know they're all a little bit correlated.
No, our U-All's gone. Our U-All's gone.
When did that go away?
Probably GTC hit. Because I had short puts in U-All, and I'm pretty sure mine are gone too. If that had a pop, a little bit, they're probably off. So U-All, going out, 30 days.
Did we never get filled?
Maybe we didn't get filled.
Okay, well then we're in for the airlines. I was just going to say I don't want to be in all of them, but I don't
want to be in with all of them. Let's compare U-All to Delta.
Well, Delta's much lower priced. I'm in with Delta.
But you can get really far.
The Twitter problem is solved, by the way. I just refreshed and I'm in.
Great. Okay, so I can go down to the 80 put in April, 16, 17 Delta, and get $1.84 using $800. That's really good buying power.
Now, I'm a United fan.
Yeah, no,
I'm a United fan girl, so I'm in.
She's in. Have you recovered? Can you go into the club again?
No, I can't eat in it.
I'm just gonna do this while I
can't eat in it. And you know what? Jenny is so nice to me, so I was a little under the weather the first time I went into the United Premier Club. Not the first time, but one of the times I was in the United Premier Club, and they give you these chilled forks, and I still can't eat anything off a chilled fork. Well, so the last time you and I were on a plane, she was so nice. She took my fork and warmed it up in a napkin for me.
I warm up all the forks on the airplane. I have no idea.
But you warmed up mine too, and that was very nice.
They must be in an area of the airplane where it's freezing cold.
They're in the fridge, probably, yeah.
And these forks come out freezing cold, so it's like, here's your hot meal and your freezing cold fork.
Yeah.
So it makes zero sense that they don't warm up the forks.
But I was under the weather, and that is what I associate with my sickness, is the cold fork.
The cold fork, yes.
So
I warmed it up for her.
But nonetheless, I'm still a United fan. That is where I keep most of my positions. It's kind of for me. I like United enough where, you know how I put all of my Chinese products into JD? For no real reason. Yeah. I put all of my airline. Anytime I want to do an airline, I always do United.
Got it. Well, then let's get into United. Hang on.
Yes.
The 80 put, $187. The buying power is pretty good. If you think about that Raytheon spread, and I know Raytheon was a higher price product, but we were trying to sell that Strangle using $2,000 to get $2. Here we're getting $187 using $800. It just seems to make more sense.
It makes a lot more sense. Let's ship it.
Okay.
And then I do want you to pop into Twitter. And I want to say thank you to Ajit. He was giving us a hello to make sure it was working.
Wonder what's going on?
This is when someone on the TV screen looks like somebody in the crowd.
Oh, yeah. Who does he look like?
I don't know. I don't know who they're pointing at right now.
Well, it's going to be, I wish we were, well, we will be next week. It's going to be crazy down here during March Madness when the basketball games are on.
Oh, yeah. It's a lot of fun.
Just wait.
It's a lot of fun during March Madness.
Okay, so Liz, I want to go to this. That you all trade getting $180 something dollars. I'm going to lower this even more. $182 using $800 makes me think, let's cancel Raytheon, because that use of buying power just doesn't seem to. We can find better uses of buying power.
I like it. Well, in Raytheon, I didn't think we were going to get filled on it anyway. And take a look at this. Because the markets were so wide, I was just going to let it sit there and see if we got filled. Only you get 30 cents and 40 cents. It looks like a great trade, but I don't want to pay the offer. I don't want to pay the offer or sell it on the bid.
Okay. All right. Now, getting into Twitter, Ajit says hello. Hello,
He
Ajit.
said hello because he was worried about us with the Twitter. He was trying to make sure.
Trying to make sure Twitter's
That's why
working.
I appreciate you very much.
Love it, Ajit. Love it. Patty Handy, with regards to the 0DT SPX, any studies done on going with a lower delta, 20-ish, with very swifts? After we got that study, I said, let's ask him for next week to move this short strike.
We said to the expected move, Patty, but here's the deal. We're going to do the expected move next week. Then we can keep tweaking and moving this, and I appreciate this because this is what we really want. We had this a long time ago where Jacob would send us, we got into a great pattern with even a lot of the Twitter people and a lot of the people back here that were asking for things, and that's what we're getting into right now. The starting point was the at the money puts. We are going to tweak and move and manipulate it every week.
So next week, that's what we were looking for. Move that short strike from the at the money to the expected move, or 20 delta, or what could be expected move next week, 20 delta the following week, 16 delta the next week. We're going to keep doing a deep dive into these.
And Patty, I mean, I'm guilty. Hi, my name is Liz, and I did the exact same thing at 8:30. At 8:30, I did the farther out delta, $20 wide, and that's why. And that came off within about 20 minutes. At 50%.
Oh, yeah.
The farther out one. But that's not what we were studying today, so I didn't want to talk about that.
But we did have a pop, or this morning, SPUs were down 30 and then they were only down 15 or something.
Yeah.
I saw NASDAQ was down 60 and then it was only down 25. So we did get a little bit of a pop between the open and 845.
Yeah, and that's okay. So there is, I don't think it's a one size fits all, and I don't think there's a right or wrong for any of them.
Yes, Mikey, look. Happy Hump Day, winner chicken dinner and MCL. Net profit of $3.49 since he paid $30 for the 90/95 100 butterfly. Way to go, Mikey.
Yeah,
we were
good job.
rooting for you.
Good job.
Today's earnings: Micron, Arcat, Baba, Accenture, Lunar, CSIQ, and SIG.
Can I tell you one quick fun fact about ACN? I think you know it already, but I'm telling them. So
Yeah, go ahead,
yesterday was St. Patrick's Day, because today is the 18th. Yesterday was the 17th. We were all wearing green. We had a leprechaun on our show, for those of you. And so I was just going to try to have fun, and I Googled, because, Google, that's what I'm doing right now. I Googled any Irish stocks that we should start trading. And there was a list of them, and there's a lot more that are headquartered or incorporated or something in Ireland. But the one stock that popped up that I actually said, really? Deeper dive into AI, was ACN, Accenture. And the reason is, it was my old...
Right.
It was where I used to work. It was in my former life.
Here in Chicago.
My former life. So that's the one that popped up. I was like, they're based out of Ireland? And
Are they based out of Ireland?
They're incorporated in Ireland.
Incorporated in
Or
Ireland.
their corporation is in Ireland. I don't
see.
know that they have a big...
Yeah,
they're
I
not like Red Bulls in Germany. It's not like, I don't know if they have a lot of people there.
Right.
But I was like, ACN, Ireland. Huh.
Interesting.
Sus.
I didn't know. Well, no, I didn't know. Interesting. But it's kind of...
Well... And I hesitate to speak because I really don't know the history of it, but I worked for Anderson Consulting, and then they became
Accenture,
I think with some shenanigans.
No, I don't know what happened.
That's what I'm saying. I don't exactly know the
know
details
what
behind that,
happened.
but they rebranded as Accenture.
Not so fun fact about St. Patrick's Day is that Liz and I went to the bar, a series that's in this building, yesterday after our show. We were trying to film some fun footage.
We tried to get Steve to drink green beer with us. He said no.
Yeah, we tried to get green beer. So there's one bar in this building. We went to the bar, and I went to the bartender and I said, I'll take 2 green beers, please.
Number one, he didn't want to talk to her, but number two, there wasn't any green beer.
They had no green beer. What bar doesn't have green beer on St. Patrick's Day?
You know what? There was one trader in there who was super sweet. He was on his phone. He's like, do you want me to take a picture of you two ladies? And he went to the bartender. He's like, why don't you give him a bottle of Jameson? We did not want a bottle of Jameson.
Or I said, maybe order a Guinness. And then the other guy at the bar was like, that's not green. Well, but it might look a little like St. Patrick's Day.
It was sad. I didn't have a green beer.
I made green rivers.
I didn't.
Well, I didn't make the green rivers.
I
poured the green rivers.
Not make green rivers.
All right, we have 5 minutes. So, any of these earnings that you want to?
I would like to take a look at ACN.
Sure.
LUNR. Are we?
Oh, I have Lunar.
We're out of
probably
LUNR. I believe it's closed.
Oh, we're out of it.
So let's take a look at LUNR, and I want to look at ACN.
Come on, LUNR, Lunar.
Big money, no whammies.
Big intuitive machines.
So we had in
No,
Lunar.
I have Lumen. I don't have Lunar. It's Lumen. It's LUMN.
Okay, well, Lunar has earnings. So let's take a look at this. I've been in LUNR before.
I don't have anything now. $2 expected move. This is tough. It's...
Selling premium is tough.
Yeah.
Unless you're going to pick a direction. No, it closes up.
ACN, Accenture.
$200 product.
Well, yes, and I'm afraid it's not that liquid.
So you've got 228 million
terrible.
shares traded. How many stars does it have?
Oh, look at it. Look at it.
That tracks. I'm kidding. I haven't worked there in 40 years.
Let's just look at selling a put in there, because when was the last time it's been this low? Not since 2020. Okay?
And that's the COVID low, right?
Yeah, so let's take a look. If we went to the 30-day and sold the 160 puts, it's trading 200. If we sold the 160 puts for $1.65, it's using $1,600, so is it 10% return on capital?
Now, if you were to blindfold me and just give me these numbers and not tell me it was ACN, I'd say press that button.
Yeah,
But because I know it's ACN, I don't want it on our...
So if I told you, Liz, you can sell a put, and this stock
This is why I think I would be a better trader if I didn't know it. I always say this. I would be a better trader if you give me all the details and don't tell me what stock it is.
You could sell a put where the stock could fall 30% before the put's at the money.
Yeah.
The stock could fall 30%.
What's the return on capital?
Before the stock's at the money. It's you're using $1,600 to make $160 in 30 days, a 10% return on capital in 30 days. What say you?
I would say hit that button. But it's weird because I think we should start a segment like that where I blindfold you, give you all the information, and you have to decide whether we trade it or not.
Okay, hang on. We're going to play a different game.
Okay.
Close your eyes.
Okay.
Actually, I'm just going to put it like this, where you're not going to see it.
Okay, yeah.
And I'm going to try it.
She took the screen away from me, ladies and gentlemen, so I get to look at her face instead of the...
I'm going to try it. Okay.
Hit me with
Let's see. 10, 20. Hold on. Let me think about this. 80. Okay.
I can ask any questions I want, right?
Well, here, I'm going to tell you.
Okay.
You can sell a put in 30 days where the
30
stock
days.
can fall 20%.
Okay.
20% before your puts at the money.
Okay.
And you can collect $800.
What's the buying power?
$3,800.
$3,800.
But you can collect $800.
Wait, but I'm putting up $3,800 to collect
Yeah.
I would say not in this account.
Okay.
Because it's $3,800.
That was Micron.
Yeah, because it's 30. Because the buying power. So Jenny, I actually really like this because then can I ask questions until we get to it?
Yeah, sure.
Not Micron, but
no, yeah.
But it's that's a great segment because the numbers would actually remove the emotionalness of it because ACN press that button.
Right. So it's trading almost 200. A 30% is a $60 move.
Yeah.
Oh, I guess I'm only at a $40 move. I'm only at a $40 move.
No, I mean,
but
200.
Still.
Yeah, you're fine.
Yeah. All right. Maybe my math was off a little bit.
But the buying power, I'm pretending like I can't see it, but the buying power is only 1,600.
Yeah.
If we can get filled on this, great.
Here's my 165 offer. It just popped up here.
It's a little
There's
wide.
not a lot of players in this game. You could see the open interest isn't huge, but we'll let that 160.
But that is a really interesting concept.
It's a new show, new game, new show. All right, we are almost out of time. It's around 41. I'm just gonna look at bonds. ZB, 114.18. Had a little pop this week after hitting, the one. How low did it get? 113.19.
What do we have in bonds right now?
2 days ago.
We don't have
Nothing.
anything.
We don't have anything in bonds.
It's got a 22 rank. Do you want to take a look at TLT or do we do that?
Well,
do we do it after the fact? We've got about a minute left. Take a look at TLT.
TLT is only 87. The crazy thing, I don't know. I don't mind puts in TLT. I have been.
I don't mind puts or put spreads in TLT, especially through the move.
But there's not.
You can buy something.
You're not getting a lot.
But with this, you're going to bring it up to the 87, and you're going to sell the 87, 83. No.
Or
I would go to ZB. There you go. Perfect.
Yeah, 88, 89, a dollar right call spread, the 87 put, you're getting $1.40.
Sure. It's using, now if we're playing the unblind game, this is using a lot of buying power. There you go.
I'll look at this on the analysis page.
Now, I would like you to add this into my game show where you can buy something for X amount down.
How does this look? To the upside, we don't make much to the upside.
But when you're selling premium, you weren't going to make much anyway.
Yeah. I mean, this isn't like an overnight FOMC announcement. This is just a
durational
TLT trade.
All right, ship it. Ship it, and then let's see what we did today because I'll push everything out as we're going.
And we are out of time. So quickly, today, all symbols. Lulu, we took off our earnings trade. DocuSign, we took off our earnings trade. MCL, we added that upside ratio spread.
Got it.
And UAll, we sold a put. We are still working the Accenture put. I'm going to lower it by a nickel. That's it. I'm going to lower it by a nickel.
Perfect.
And if we don't get filled, we don't get filled. And we are also still working TLT. I will lower that by 2 cents.
Okay.
And that should fill. But I don't know.
When those get filled, we'll push them out. All right.
Okay.
Everybody, have a wonderful afternoon, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow,
everybody.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
chegou, não quero mais acordar. Como dá pra sonhar?
Hey, what's going on, everybody? Welcome to Option Trading Concepts Live. My name is Jamal Chandler. I'm joined by Glenn Freibarger. It is Glenn's day.
Yes, sir. And I get the comfy chair today.
You do. Mikey B is out. Yeah, enjoy it. Have fun.
Where's he? Skiing?
He is skiing, yeah, snowboarding, as the cool kids do. That's right.
Sorry.
He is enjoying some time off. Good for him. And by the way, as a quick PSA, there will be I will be off tomorrow and Friday, so we will both be out. So OTCL, whatever you see, it is not us. It will not be AI, as some people have come to think more recently. But
That's pretty funny. Saw your clip.
I couldn't help but put it out, man. It was funny, man. You know.
Come here. I'm sorry. I know you're probably busy.
He was a little nervous.
Shake my hand.
Shake
What?
my hand, man. Yeah, just shake my hand, man. It's not often that you gotta bully somebody into shaking your hand. How you doing, man? How's it going?
Good.
You okay? It's gonna be a little tough couple of weeks for you. You all right?
Yeah, because I know what you're trying to get at.
I'm not getting at anything.
You know, the Big Ten has how many teams in the?
Actually, I don't know. How many do they have?
8 or 9.
8, right? Yeah, probably.
Ridiculous.
Big Ten was the best basketball conference this year.
Dude,
there's people
but
are
the
just trying to
SEC,
debate that.
They're putting all the SEC teams in too.
How many? I don't know. You know what? I haven't even analyzed this. How many teams from each conference got in? We will certainly hear about it. As soon as one Big Ten team goes out, they're going to be
9 Big Ten.
I feel like you're kind of like me in a way that, considering we both grew up, kind of down south a little bit. And I grew up a huge ACC person. I lived in the Carolinas. I graduated high school in Charlotte. We were damn near getting out of school for the ACC tournament. It was a big deal. They were rolling in TVs of classes. And then now I've been in the Midwest for a long time. You've been to I went to a Midwest school for graduate school. You went to a Midwest school or Big Ten school, let's just call it, for undergrad. We're Big Ten people now, and you almost have to defend that in a way.
But you're right.
But then we also we have this allegiance to Duke.
Yep.
It's complicated.
So that's what we're banking on this time. And it's so tough. Lifelong Duke fan, and whenever they're a 1 or a 2 seed, you're making your bracket, you're like, I know I shouldn't make them just go all the way. But then, kind of like trading, you think, what scenario would I feel the dumbest? And that for me would be they do win and I don't pick it in the bracket. So I gotta have them.
This is why I don't like brackets, Glenn. This is why I despise brackets at this point.
You do the auction house.
Me and the boys are doing the Calcutta tonight. It's going to be awesome. Can't wait for it.
Is it very sophisticated? I'm thinking of like a Sotheby's, a Christie's.
It is, it's really not. It sounds like it, but you just, again, the way it works is a seed comes up, say like a number 1 seed, let's just say Duke, for example, and then everybody starts bidding on it. Now you can pair up with people. Apparently we've introduced a rule this year where you can't pair it with more than one person, which doesn't affect me. It's really me and my buddy who've paired up the last few years. They're all my buddies, but me and a guy of mine. And so Duke comes up, right? $10, $20. Quickly, these things find their value, Glenn, just like the market, just like anything. You can't go out here and try to bid, $100 for Micron when we all know the price is closer to $400. It's not going to work. So if you bid $5 for Duke, somebody's going to come in for 20, somebody's going for 40.
Right.
And it'll get up to its value. And which is probably most number 1 seeds end up being closer to like 80 to 100, somewhere in there.
Interesting.
The fun part, again, it's all about points. And so you get a point for each time you move through the tournament. A 5-12, I always like to use this example. The interesting part about like a 5-12, if you pick 12, then you get, in the 12 wins, you get the points, the difference between the seeds, so 7 points plus the additional point for the win.
Okay.
So that's how it goes, right? And so you do want to find, I always do this. I don't want to put my strategy out there too much. I don't know how my friends are listening. But no, because I wouldn't put it past them.
No, not at all.
Put it past them. But you just want to, the Calcutta, everybody knows about it. See, somebody did a Calcutta the other night. It is the best way to play the tournament. I'm telling you, once you do it, you're never going to want to fill out a bracket again.
Okay, so a couple questions. One, the partner thing. You guys can coordinate bidding up some teams you have no interest in and just squeeze people that way. Is that
so? It's funny because my wife was asking me this last night. She was like, "Do you guys agree?" We have no problems. We know our strategy and everything that we do, whether we do it individually or one of us jumps in and bids on. There's been plenty of times where he bids on something I didn't really care about, but it's part of our strategy. I don't really, it's whatever.
And then 2, all teams must go.
All teams must go.
Okay.
Yeah.
And so
there's no teams left behind.
So what order do you go in?
We actually we basically we'll cut out the seeds in the bracket and we put it all in a little bowl and then
nice,
draw,
perfect.
You draw, right?
Yeah, I'll allow it.
It's fun, man. It's fun. I feel like you'd like it, man. Let's take a little look at the market here and see what's going on. This Fed day, of course, besides being it's Fed day, 1 p.m. Central,
2 p.m.
right?
Eastern.
Yeah, we get the announcement, and then 1:30 our time Central.
Exactly right.
See, this is why I got you here, man. We get Powell on the horn.
Waiting, I think, and this should be a summary of economic projections day.
What does that mean again?
All that means is more data. They meet 8 times a year?
Yeah,
and I think every 4 they release more data than the others. And all this means, I think, for active trading is you get this release right at 2. You have a ton of an algorithmic response, right? And more data to kind of chop through. So perhaps a little bit more of a whipsaw back and forth, quiet out until that 30 minutes later. And then we start getting Fed Chair Powell, in which he starts perhaps a little bit slow, but you just got to be ready for if he decides to answer any juicy questions. So that's the setup on how I think of it, whether you're willing to speculate beforehand or waiting to let it shake out.
Yeah, I mean, they're going to ask him a ton of questions today, specifically around this Iran situation, which, I mean, obviously he has no control over, but they're still going to ask him anyway.
I don't know. He might be pulling the strings here.
Yeah, right. Let's look at the expected move. Wait, you're here for the whole show today, right?
Oh, yeah.
This is a rare occurrence, folks.
So we're good.
This is a rare occurrence. Glenn is foregoing his early lunch to stay with us for the whole entire show.
I know.
Can't be more happy. I know.
I might be peckish by the end. I promise I'll be in a good mood, but I'll be here.
The blood sugar will be low. But, you know.
You're absolutely right, though, that, you know, the question of the day will be if Powell comments on the situation, what he has to say about inflation, yada, yada, yada. The nice part is if you are tracking more of the macro landscape, this sits in the middle of a crazy central bank week. So it's not only Fed Chair Powell talking. Today, we had the Bank
RBA was on
Monday night. We had the Bank of Canada this morning. As expected, hold. But we did see some movement in the Canadian dollar back and forth. Initial weakness on their chair, governor, whatever they call it.
So Aussie, well, hold on, one at a time, because this is interesting, actually. Aussie raised this week, right?
Yes,
they raised,
as expected.
And it actually moved a good bit on Monday, right? You said Bank of Canada was today, and they held.
Yep, a pretty muted reaction, but
TCFX in a second.
We had some back and forth if you're looking intraday. But what I thought was interesting is they did comment on the growth outlook kind of shuddering. So they said that we wouldn't expect growth to continue as expected under this confluence of circumstances. That sent the Canadian dollar a little bit lower early this morning. It's gotten some of its wind under its sail back again, right around that 137 level. But
both of those central banks essentially commenting on the current geopolitical situation.
Exactly right. So, you know, for central banks, this is a really tough scenario, but for different central banks, it's more or less difficult. The Australian central bank was already planning to hike. It was a matter of when, not if. They decided to split vote, but then they said, you know, we're adjusting for this inflation. They could kind of bake in what they were already going to say. They were already going to hike. So easier for them. The Japanese yen, the Bank of Japan, meets tonight, and this is one where they're, you know, in the pressure cooker a little bit more because they meet these inflated oil prices, raging U.S. dollar as of late, and their currency really back against the wall.
And Ireland that imports a lot of things.
Right, exactly right. And so I'm very interested to see if they say anything interesting. They're more prone to try and jolt markets with their commentary or niche tools in their policy toolkit. So that's definitely one to watch overnight. And then into the morning, we have the Bank of England and European Central Bank and the Swiss National Bank, but they don't usually do anything too exciting.
Well, they are Switzerland.
Try and stay out of it, right?
So the European Central Bank, and that's not that. You already did euro, but and then you said also the Bank of England.
Yeah. So this will be. I expect the Bank of England to maybe be a little bit more interesting than the European Central Bank. Historically, they've given more kind of a scenario analysis, which is just another kind of a tidbit that markets could latch onto, what scenario they're expecting more than others. But nevertheless, it gives us, those watching the FX markets, and really, especially for the Fed today, should be across asset classes. It shouldn't move the oil at all, though, right? That should be completely separate.
What?
If any outcome from
No,
FOMC.
no, not at all. I mean, oil is actually the one in the driver's seat. Oil is wrecking everything here. I got to tell you, Glenn, it's been a pretty good couple of days.
All right.
The FX account. I've been flipping things left and right.
Okay.
I mean, I don't advise this for everybody, okay? But look, in my opinion, the way that the dollar has been moving around, I've just been trying to take advantage of that. And so
100%.
Just like Mike, been long the dollar for the most part as it's gone up. For those who, it's always cool to watch the individual names. But again, I've been making my trades based off of this. And so I think I was pretty sure I was long dollar in this general vicinity as it made this move. I kind of flipped out of a lot of positions that was long dollar. Actually kind of got short dollar, and then it did this for 2 days. And I was like, okay, well, let me just get out now. And so now I'm out. And so that actually worked out in a lot of different positions that I had in the Tasty FX account. And it's been good.
Very nice.
And so now what do I have? I am still, the whole time I've been long this dollar CAD, I've been short this USD Mexican. But the euro, the pound, the Aussie, and and the British pound.
Yep.
So of those four, I've definitely flipped them both. And then I closed out Aussie and I closed out British pound yesterday, and I'm holding on to. I'm sorry, I didn't close out. I closed out Aussie and I closed out. What other one did I close? The New Zealand dollar. I closed out those two. And I just left on, as far as like dollar shorts, I left on euro and pound, and I just like holding through. We're going to see what happens here on the other side of the meeting.
There you go.
But it's been good. It's been good.
Yeah, fantastic. That's lovely to hear because, contrary to our good friend Nick Batista, that's been holding the line on a few long-term positions, this market's really favored, getting in and out if you are able to trade some of these ranges, because you're getting a lot of unique price points, right? But also with situations ever evolving, there are opportunities to play both sides. And the worst thing to be here is pinned at one of these extremes, just waiting, right? And so we've seen a lot of activity in your portfolio. We haven't seen as much with that dollar CAD. That really hasn't been moving as much as maybe you'd expect with its historic oil correlation. Its removal from a geographic perspective has kept it pretty out of the loop. But yeah, that Aussie's been swinging more than anything on my board this morning, even more than the New Zealand dollar, which is usually a more volatile pair than its neighbor. And the euro dollar has been super interesting as well. Right now, hovering around 115. If we just take a step back, we started March at 118. So a huge range here. Because if we zoom back into the late 2025, we are really only seeing this stuck between 115, 116. Yeah, really 100 pip range over multiple months. So this has been some pretty exciting volatility here.
That is the word, and that is a great segue, by the way. I know you come bearing gifts. Volatility has been the name of the game here in a lot of these currencies. You got some slides. Let's pull them up.
Yes, sir. Wanted to take today to look at a pretty cool kind of deep dive, different lens that bridges our two, knowledge bases, looking at FX options trader behavior and what we can glean about trading more directionally from some of these trends. So if we get into it, what we're looking at today, we just talked about the euro dollar, but really dollar volatility across the board picking up with some of this safe haven demand conflict with Iran. But I wanted to throw the Bollinger Bands on this chart just for a quick visual of what the volatility environment has been for, this is the euro dollar specifically, which most liquid pair across the globe for FX markets, and been a major participant on a lot of these fundamental drivers. And we can see that this is spanning from kind of fall of 2025 all the way up until now. And for the most part, ending 2025, like I just mentioned, was a really compressed volatility environment, not one we see very often for such a liquid pair. And then coming into 2026, on some Trump comments, had a huge run up in this euro flash volatility, but came in pretty quickly thereafter as the market kind of settled down. Now, heading into March, where we've had a shakeout in the opposite direction, a huge bid for US dollar on some of this geopolitical risk, we're seeing a similar volatility expansion. But my question here is, will this volatility environment snap back just as quickly as it came, kind of like we saw to end January into February? And we've got some cool data to show why this might be a longer term volatility environment. Of course, just thinking about it anecdotally, situation in Iran appears to be far from resolved, given the headlines, but also, the current administration expects it to wrap up quickly. Tracking oil prices alone, you would say there's still some room to run, and volatility across asset classes pretty elevated across the curve. But what I did find on the next slide is, if you're looking at not only just the kind of top of sheet volatility gauge for this euro dollar here, the black line, if you're looking into some of these complex option strategies, you're seeing a lot more participation in butterfly options, buying the wings here, and this is demand, and you're seeing levels that we haven't seen in 2025 at all, and rising very rapidly. What can people make of what this means when there's more demand for butterfly options?
Yeah, I mean, in general, this it's something kind of like that Mike and I employ even in the regular market with SPX quite often, right? I mean, it's somewhat of an expensive product, so to be able to use a strategy like a butterfly, I mean, to the down, and again, this is a 10 delta butterfly, so they're going, probably a little bit out of the money in these directions, just in case there's these big, huge moves. They're preparing for volatility, and this is a cheaper way to do it as opposed to just going way out of the money and buying one option. You're putting on a spread in that it lands in the middle of whatever strikes that they have. You're able to sort of offset any risk. So kind of interesting. I mean, this is, something that they're doing now just to protect themselves because there's big movements, there's big spreads.
Absolutely. So people, even though looking at that graph before, we're seeing volatility pick up a pretty clean moves, of course, more one-sided to the dollar. But when we start to think about what we are trying to expect, a lot more participants expecting a lot more volatility, and preparing themselves financially for possible outside moves to either direction, which is something we haven't seen, through all of 2025, which is super interesting. And why is this? If we go over to the next slide, we can look at the current environment, and all asset classes constantly dynamic. But what we're seeing now is the return of dollar hedging, which is a huge pool of liquidity for FX markets and dollar participation in particular, and something we saw a pretty far stray from under this current administration. We had a lot of dollar demand leave markets and dollar hedging not being as effective for global participant portfolios. And remember, when we're talking about spot FX, we're not just talking about retail traders like you and I. We're talking about huge institutions that are not only balancing their books, but hedging for every scenario. You're talking about global dealing desks that, and a major point that we'll get to on the next one is, what those dealing desks have to do with a lot more of these butterfly options. So when you get the implications for spot FX here is that when you have a whole slew of people buying these wings, this protection for super outsized moves, what does that mean for the dealer that's potentially hedging these moves? Is as we drift towards either extreme, that hedging scenario gets a lot more dynamic, right? Because of all the Greeks that you, of course, know a lot better than I do. But what we can expect from this is kind of a self-fulfilling prophecy for spot FX and directional trading, is if we start to get a quick escalation, de-escalation, those two in particular, we could start to see even bigger moves in the spot market, because once you get around these cluster points, you have a lot more participation on the other side of things, having to reprice very quickly, and liquidity environments actually changing for the worse if this were to happen on weekend markets or not in the U.S. session. So it's a pretty kind of unique situation, and doesn't reveal exactly will the dollar appreciate or depreciate, but definitely tells for active traders when you want to be in a position, when you want to be flat, if there's room potentially for hopping on a trending market, if we do see a pretty unanimous catalyst in either direction, there might be more elasticity, thinking of this more like a rubber band, than markets we've seen in months, maybe even years. What do you think of all this?
Yeah, I mean, I think the top line says it all. The risk reversal year-to-date highs. People are definitely leaning bullish the dollar. You saw the dollar at par the other day. It's trading around that level. It's kind of like oil in a way too. I feel like there's a new level in oil. It's not like the 70s, 60s anymore. It's more of the 80s, high 80s, 90s at this point. Same thing with dollar. I feel like now it's not 95, 96. It seems to be closer to 99 par, and we'll see if it has some legs from there. Honestly, I think is what we're waiting to find out at some point. So things are changing fast, Glenn. They're moving pretty quick.
Exactly right. So
in this environment, for sure.
Yeah, just some important considerations if you are trading spot FX or any sort of directional dollar market is that be wary of your stop loss and take profits, because there could be a lot more illiquidity over shock moves, and there's heightened event risk, not only today's FOMC, but the ongoing conflict, resolution or escalation. But a lot of potential opportunity out there, a lot of unique price points, and of course, a lot of dollar pairs to position yourself.
I mean, heck yeah, when you have currencies moving like more than 0.5% in a week, let alone like almost 1%.
Yeah.
Like what? That is a lot of movement. Even as I look here with the dollar, I'm looking at the daily range. I love looking at this range thing I look at on. It's actually, I got to give bar chart some props. Barchart.com. There's this thing where you can look at the ranges, and I love looking at average true range and daily average range. And the average true range on the dollar over the last 9 days is 0.6%. I mean, that's almost 0.5%.
Exactly
right. Dollar,
Yeah.
What? Like that's a pretty big move in either direction. So you're seeing some major moves to illustrate the point here on the weekly. This has actually kind of been my guide, right? Like, yeah. Going back last week, euro dollar down 1%. What? Okay, well, yeah, I'll get long that one. That's exactly what I did. And then this week it moved up. Like we said, the big moves in the Aussie and New Zealand dollar.
These are the ones that have really been able to tack on multi-day, big moves. We've seen 2-3% moves in this market over a handful of days, and a really nice range if you've been able to be lucky enough to trade it. But
1.25% this week. I'll take that. And there's just the volatility. Like, again, that's, and I've said this in the past, and again, down 2% last week, New Zealand dollar, and was up 1%. I've always said this in the past, things are wild in finance when the currencies are making big moves. That's when you really know things are wild.
Yeah, so we're looking at hour and a half here till Fed decision. We haven't even seen, the traditional kind of coiling before then. That's what woke up this morning and thought, okay, we'll be calm and collected until the afternoon. But the market's really latched onto that PPI data this morning.
I really did. I was actually surprised by that. I thought it was going to be more.
Well, yeah, you look at it and you're like, oh, well, this is outdated data. The only thing that could move it is if it's the price to the.
Yeah, that was the same thing that happened with the jobs report, by the way. Guys, by the way, if you're watching the show, please watch the show on the YouTube. You can get in the YouTube chat, ask questions. You know the drill. For most of you who watch the show, we'll be going through those. We'll go back at some point. The first one I see is, when does Powell talk? At 1:30 Central, 2:30 Eastern. Jamal going snowboarding too? No, Grumpy Mike, no. No, I am not. I have not. I need to. Rob and Maria were on today. They're good friends of the network. I really wasn't sure how people were going to react. People loved it. People loved having them on. Their trip, man.
Yeah.
They are funny.
Great people.
They're awesome, man. That was pretty cool. People liked it. So get in the YouTube chat, ask questions. It'll be cool. In the meantime, I guess it's probably a good idea for me to go over some of the things that I have done today. I was a little bit active. UAL. I did close that position. I was short of putting there. Let's see. Actually, let's go to let's go to that. My positions. UAL. No opening only. Any? No. When did I do? Yeah, from today. Let's do that. UAL was one I was short of putting here. Close this. Close it for $140 gain. I would definitely close out something that should be, honestly, this is an airline. It should be down as a result of oil prices moving higher, but I'm glad it wasn't. And I was able to close it, put in there for $140 gain. I'll take it and keep moving on. Crude, I bought a call spread in here today. I think we're in a higher oil regime.
Yeah.
And this one cost me $600 for the chance to make. It's $2 wide and chance to make $1,400. I'm also short oil stuff in here. I'm starting to trade oil a little bit. There's a bunch of different things happening, and so I closed out a iron condor that I had that was pretty far in the money. My short call spread was the 79.80. I'm like, there's nothing happening here right now. Let me just take take the loss on that, which I think ended up being I originally sold it for $3 and change. I think I closed it for a $400 loss. Par for the course in that one. That's not terrible. I can move on. I bought this call spread, like I said this morning, in case oil has another higher regime, which I kind of believe it will. And then I'm trying to get filled on this iron condor further out, 121, 122 with the upside and downside 80 to 79. So initially I had 80, 81 call spread versus I think it was 69, 70.
Oh man.
No, what was it? It was 64, 65 put spread. So that was the initial, right? And it was kind of like this. Now I'm going further out and like this because oil vol is so high that you can.
There's still something there.
For sure. But in the meantime, I've got this call spread in case it goes higher, which I feel like it might. And if it doesn't, hopefully I get filled on this call spread at some point.
How have you been thinking? Because obviously you're playing both, selling premium and respecting the volatility environment and tacking on some directional plays. How has your thinking about time horizon been there? Obviously the directionless volatility plays you're just looking at I'd assume volatility, but the direction when how this is unfolded has been really murky for me to try and think about when I'm expecting moves to happen.
Well, here's the thing. I really wanted to go in this closer term.
Okay.
Put that long call spread on. But because, these oil, they're not super liquid. I mean, these are kind of wide. I mean, this is a 40-cent wide market right here because it's essentially kind of like a weekly contract. So that's the reason. I would have rather put this call spread.
Okay, I got
my thought process, as far as what you're asking, which I think is what you're asking, I feel like in the near term, oil could end up going to 110 over the next, week or so. And that's why I went 105, 107 call spread.
Yep.
But I also feel like outside of that, I try not to speculate too much on price. I don't know if it's going to 120, 130. Who the hell knows? Nobody knows. But I feel like I have this vision in my head. I don't know how it plays out. I think in the near term it could go to 110. I don't necessarily think it gets to 120. That's why I have that idea of that call spread. And even if it does get to 120, it won't get much over that in the next 30 days, maybe. And that's why I have that iron condor. But it's all just trading, Glenn. I'm just slinging it. I have no clue.
No, I got you. So you just want to, because this is, something that could happen anytime the move you're expecting. So you're giving yourself enough time for that to happen, but also not trying to optimize too much for, timing the move necessarily.
No.
Whatever pop you get, you'll take off.
Yeah, exactly. Gotcha. Yeah, if it does make that big move, say to 110, it would have to go a little bit more because I could at least double my money though, maybe if it goes to 110. And or probably actually if it went to 115, I'd probably close to double my money. I wouldn't fully realize the value of this spread, but I'd probably at least be over 50% gain on that. I'd close this probably and hopefully if I get filled on this Iron Condor, I'd still have that on. That's my way of selling vol because at the end of the day, the vol is high.
Right.
I'm just putting on a call spread to try to capitalize in case there's a move that happens in somewhere in there. So then let's see what else. Schwab, I closed the short put in there for, only a $20 gain just to be able to have some more capital, do other things. I just decided I don't really feel like being short that put right now. I can come back to that at a later date.
Sure.
But I just don't feel like being short too many puts right now, the way the market is acting. Micron. Okay, you guys ready for it? This is the interesting trade of the day.
I know Bodon is in the chat. He wants your thoughts.
On what, Micron?
Oh, yeah.
Okay, good. In markets like this, I feel like we get bigger and more volatile moves. I feel like these stocks, whether it's Micron, SanDisk, and STX, which I call Sticks, Seagate, they have still been resilient despite what's going on in the market.
Yeah,
I'm expecting a crazy move on earnings today. For no other reason than why not is this thing going to keep going up? I would love to see this thing jump like $60 to $70 on earnings. I did a $520, $550 call spread. It's only $260, I think I paid for it. So not much. Risk reward wise, what did I pay for it? I paid $260. And I would have normally, for those who know me, they know I do a lot of calendar call spreads on earnings. Let me show you why. Let's just say we did the 520. And again, that's $60 from here. The 520 call spread is $4.50. I just told you I paid $2.60 for a 2-day call spread.
Yep.
This is the calendar, and this is $4.50. I usually never pay that much for calendar spreads.
Yeah.
Try to pay under $2, $1 and change. This is $5. These options are jacked, and I get there. The vol is high. Trust me.
But they're staying,
right. But I'm just hoping that there's a move, and so I don't mind. And I call it wasting, but I don't mind wasting $260 to see if this thing jumps this big. This is basically $3,000 right here. So if this thing jumps $260, I make $2,700. So that's a nice little gain. I don't mind making. That's a great risk to reward. That's 10x. I don't mind making that risk to reward. I don't want to do it with the calendar spread because $4 and change is just too much for that calendar spread for me. Just for that's 2 days versus 7 days apart. $4 and change is too much. And because not only is obviously these options are high for 2 days ago for earnings, but that shows you that these options are pretty high too. So I was just like, you know what? I'm just going to play it for a ridiculous move. If I'm wrong, it's only $260 off a 25K account. That's essentially not much at all. I'm playing for mayhem. Is all right. I'm playing for here,
but not.
And a little bit of the precedent on that is SanDisk. So SanDisk in January had its earnings. Stock was, let's see, the close was 539. On the open, it was 676. So it jumped 20% on earnings. I'm just looking for a similar type deal on Micron. And you can play any one of these against each other. Obviously, SanDisk is extremely difficult to play. I was also looking at the ability to play Western Digital on Micron's earnings. As you can see, if you look at implied vol, those implied vols are high because they're expecting this thing to move too. But similar, I couldn't find something. So let's just say I was expecting this to jump like 10%, right? Say it jumps to like 330. So let's just go with that. If we did a calendar spread here, similar deal, $6 calendar spread. These things are jacked. They are high. And so I'm not going to do that.
And so when the price of a calendar is high, does that give you more warning that there won't be the volatility crush you're playing for with that strategy necessarily? Or it's just a function of...
I think not necessarily, but that is the good question about that. The good part about that question is if for some reason it doesn't make that move, it will be the vol crush.
Okay.
And so that $6 that I'm paying, let's say on this calendar spread, could easily crush this thing into $3. And, that's just like not even worth it because at least on the SanDisk way upside call spread, I'm playing for the move. If the move doesn't happen, that's fine. And that's just a 2-day thing. But, then with the calendar spread, if I do that in, say, Western Digital, which is basically bid for Micron's earnings, and that calendar spread doesn't work out, then this thing really will get crushed. Yeah. I won't say really, the front month definitely will, which is what you want.
Right.
But I feel like, I'm already feel like, it just feels like I'm overpaying for this. This is really expensive. And I don't really want to do that. So it's better to just like, and again, this is 15-20% out of the money.
Yeah.
If you're going that far out of the money, you shouldn't be paying that much, especially for 7 days. Like this is $600 is a lot. At the end of the day, sometimes you just got to think about it as premium. Do I really want to risk $600?
Yep.
No, that's a little bit much. $200 maybe. In my mind, like that's fine. That's 1% of less than 1% of my portfolio. $600 starts to get a little bit rich when you're talking about something, especially for earnings.
Yeah.
And again, this is such a crapshoot. So that's really what it boils down to. I know this Micron spread. You can call me crazy, but I know this is really far upside, and it is. I mean, these are 15 delta options, 6 delta options, but at the very least, at the end of the day, if you just think about it from the standpoint of money, I'm just paying $260 for this. If it doesn't work, that's fine. I can live with that.
Didn't want to be protected on any major downside
for this. No, it doesn't affect. I mean, it doesn't. Well, the way it affects me is via my spread that I have here.
All goes
so this
back
is
to
how
the
this is how it affects me.
Okay.
If it does tank, obviously the Nasdaq is going to fall. I'm still 43 days out in this, so as much as I probably should be worried, I'm not that worried.
Okay.
If for some reason, here's the real master plan, Glenn. If for some reason this Fed meeting sees us jump up in the market today and we get upwards of 6,800, I'm going to sell an MNQ future against it, and that'll protect me a little bit to the downside.
Nice.
I actually just took off another. That was speaking of, that's the one more thing. Sorry, I didn't mean to take this long with my positions, but SPX, I had a super bear, so I just literally did that earlier in the week. In the March cycle, I was long this put spread, and I was short this call spread. I did it the other day on Tuesday morning. Yeah, I mean, it's only Wednesday. Jeez, it feels like it was days ago. But it was literally yesterday morning when we moved up.
Yeah.
We moved up big on Monday. I didn't expect us to move up big on Tuesday, but we did. And when we did, we got to 6,800 in the futures and 6,750 in SPX. I was like, cool, I'm getting short here. And I sold this call spread to finance buying this put spread. And I was able to close it earlier which worked out nice. I collected $2.10 to do it. I closed it for $3.90 round trip. That's a $600 gain. So I closed that earlier.
Nice.
And that was one of my shorts. I will definitely reapply it if we somehow move up big today.
Yeah.
We get to, because the inflection point in this market, clearly to me, 6,800 in the ES, 6,750 SPX. We've faded off of there. So somewhere between 6,800 and 6,850 in the ES contract is the inflection point. We'll see if we get some movement upside today, but yeah, that's what it is. So all that to say, I'm ready for these movements.
All right.
This is my type of market, Glenn.
Yeah.
This is what I do. It's what I do, man. That's what I do. Let's see what we got going on here. I see somebody. Is it Robert Darcy? My man. We're becoming really cool really fast. You're from Miami. I love that. You went to Miami Coral Park class. I love that, bro. Didn't know that. That's what's up. Love to see it. Yeah, I already answered the MU question. Cool.
Is that by Coral Gables? Is that what you call it? Coral Gables.
Yeah. Okay. Oh, yeah, I see you. Flashing the Espanol there. I see you.
Yeah.
You got a little N on the Espanol. I know you do.
Girlfriend got mad at me. I lost my Duolingo streak over St. Patty's
My wife
Day.
is doing Duolingo heavy right now. She's doing Spanish. Yeah. I was on that like a couple of years ago. I've chilled out.
We have a wedding in Mexico in November, so
nice.
I'm sticking.
Nice. That should be fun.
Yeah. Absolutely.
I mean, a wedding in Mexico is not a bad thing.
No, but it's a different thing if you can't speak.
Yeah. Well, I mean, you know what? So wait. So are you a little worried about that? You want to speak a little bit? Why don't you watch you should watch the what's the Mexican channel? I mean,
Narcos.
The Hispanic channel. What is it? Like with the news and all that.
Yeah.
It's on the tip of my tongue. You should immerse yourself in it. You should just watch the news. That's what we used to, when I was back in the day when I was in high school, I took French, which obviously is useless. We used to like senior year, I was in AP French. We used to watch the news, and then we used to they used to ask us questions. The teacher used to ask us questions after. Monsieur Poston used to ask us questions after, and that was hard.
Yeah,
I tell you learn it quick.
Yeah,
you should just watch the news.
All right.
You'll just figure it out. That's what people do, right? When they come to the new country or whatever, they just sit and like watch the news, or even better, you watch cartoons. That's really what you do. You got to watch a little bit.
All right.
You got to do the work, Glenn.
I know.
You got to do the work.
I know.
Univision.
Univision.
Thank you. Univision.
Nice.
Telemundo, Univision.
Yeah,
Thank you.
Telemundo.
Thank you. Just blanked on it.
Yeah.
Thank you, James. Drawn, can you please show us example of how you and Mike are setting up long-term butterflies in SPX to go along with the year-long trade? Well, I can't say I'm setting up year-long butterflies, but I do currently have Mike has one. So I guess this is where you're at. Mike does have a downside butterfly. I did not put one on recently, but let's just say March 31. And I think Mike has this on. I think Mike's long-term, I think he has a 6,600, 6,500, maybe. His short strikes might be 6,600. I can't remember. But he might have one of these on. He might have got that thing for like $5 or $6. I can't remember. But this is an example of that. I mean, you can certainly do that if you're worried about it to the downside. The thing about butterflies is, and this is probably after conversation for today, considering we were talking about butterflies earlier. Butterflies, let's just say you bought this for like $5 a week ago, and now you're up $200 on it. And you're looking at that big fat like max profit of $9,000. I mean, you're not even going to come close to that until this gets, within 3 days of expiration. And then this might be showing a profit of like $2,000 with an additional 7 to go. And therein lies the part that messes with your head. Because you're like, man, like even right now, you're like, I got this thing for 7. I could make $9,000. No, you really can't. It's not even going to come close to that until you get really close to expiration. Right? And that's how it works. And so the same thing, particularly in this time with high volatility, these 6,500 puts are going to stay bid for quite a while, right? Even if right now, say this was 3 days of expiration and SPX, well, let's just look at it. 2 days of expiration, and we are, this is out of we had the 6,600, 6,500, right? Well, shoot, sorry. Let's just say the 6,600, 6,500, 6,400, right? That's that current spread. I mean, that's really far out of the money right now, right? But let's just say we're closer. Let's just say 6,600 is our strike. So let's just say the 6,700. Let's go 6,650. Let's just say you were smart enough to put this on recently. 6,650. And sorry, what am I doing? What did I say? 6,700, 6,650, and 6,600, right? So you were smart enough to put this on more recently, right? And that's not even 100 wide. That's $50 wide. But let's just say you had this on. This is kind of how it would be. Say you probably put this on for like $6 a week ago, and now all of a sudden you're up this amount of money. You still have, and this is just with 0 days ago. This is not even Friday. Matter of fact, it's better if I put it on for Friday. Let's just say 6,700, 6,650, 6,600. And say you had the wherewithal to put this on, not that long ago. I mean, this is 2 days ago. Yeah. This is your risk profile, right? You're still not even close to the max profit yet. Mm-hmm. This is kind of how it works. So you feel some sense of protection, and it does protect you to some degree. But when you think about it from like profit and loss standpoint, like you're not even close to your profit and loss, and you're still holding this thing. So you have to make decisions every now and again, whether you want to take it off for, again, say you put this on for $4, you're up $200, close to 50% profit. That's great, right? I mean, that is a great profit. Some people will say it's not even close to the max profit.
Yeah.
So therein lies the thing. Like it provides some type of protection. It provides some type of, sense of security, but it doesn't do everything that you want, right? That's kind of like the idea. It does give you some sense of protection. Now, this is on a huge product that's moving really big. In the situation of currencies, they are moving big relatively, and there are real inflection points that are a lot more, I think, more meaningful than 6,650 is to the SPX, right? Like par is a lot more meaningful to the dollar than 6,650 is to the SPX. And so that's why people are centering these on, like I would imagine for these currencies, they're centering their center part of the butterflies around these really interesting areas, these really interesting inflection points with a lot of volume, right? So that's kind of how it goes. So yeah, that's what Mike is doing. He has a SPX butterfly to the downside to sort of offset a little bit of risk. I right now don't have any. I'm not, I am worried about the market, but I'm also just relying on different hedges that I've had at times. Again, I had that super bear on. I took that off because I just feel like that's prudent in a market that's moving around a lot. But I don't have any butterflies on currently. And I should say to the downside, the only one I do have on is an upside butterfly, I think by the end of the quarter, 6,850, 6,900, 6,950. That would be there. But in the event we do, I have one.
No Fed speculation, no 1 days.
Nah.
If you were trying to get a market move for the Fed's decision and commentary, would you go 1 day out? Because
yes,
right, because he will be talking until around settlement. You don't want any part of that, and vol will still be
if
free.
We drop below 6,700, I will try to get the super bull trade on, selling the put spread to finance, buying the call spread. I might either do it for 1 day or I might do it for Friday.
Gotcha.
Just because sometimes we come in on that Thursday, and there's still another adverse move. I don't know. So, yeah, it's tough. In this environment, it is tough to predict.
Yeah.
But yeah, I'm not putting anything on for 0 day. If anything, I'm going to put something on for tomorrow. Probably going to do a spread. It's just too much to do.
Well, I hope your MU works out for you. That would be.
Yeah, it could be fun. It could be fun. It could be fun. We'll see. We'll see how these things play out.
What do you take on?
I am not muting my mic before I clear my throat because there is no mute. Okay, sorry about that, buddy. What do you want me to do? You're just gonna have to bear with what's going on here right now. I know I can be such a d-bag sometimes. You know, I just feel like it. Sometimes I just feel like it.
Nothing interesting to you? Metals, crypto options.
Yeah, I know. I still have IBIT. I actually have long shares in here, and I'm short a call against it. I actually added an ETH A position. It suckered me, Glenn, once again.
Yeah, no,
it was such strong momentum early in the week. I was like, finally, this is the positive momentum I want. Put on a zebra, and look what happened. What can you say?
Yeah, the one good thing is like this environment shouldn't be good for crypto at all. Like the rate expectations, geopolitical risk, everything chopping. It shouldn't be great at all, and it's still holding in.
Yeah. I love that you laughed at that. Thank you. I appreciate that. Yeah, it should be, right? You would think normally in this environment that, everything else in the equities is really struggling. Let's go into crypto. Nope. Hadn't really been that. I will say, crypto has still been hanging on to that 70K, right?
100%.
Like it hasn't completely tanked. I think that's interesting in itself. But yeah, I mean, I'm not really, betting the house on this event today, honestly. I mean, if we get a really big move, like I said, if we get, all of a sudden like 100 handles down, I'm interested in, I already have longs. I'm interested in possibly trying to get long pair, maybe. Like if we get down to 6,600, I think that's been the low area of what we've seen more recently. If we get to 68.50, again, I think, I guess I'm really 100 handles wide at this point. We get to 68.50, I would like to fade there because I got enough long deltas that if we go higher, I'll still make money.
Yeah.
And that's the way I'm thinking about it. So I'm thinking about big moves. I'm not really paying attention to any minuscule moves. And I mean, when we sit here, markets are down 40 handles right now, 67.30. 10-year yield is positive.
Yeah.
4.23, almost 4.25%.
That could
All
move.
is up.
That could move this afternoon. It's one of your.
I feel like it will.
Implications.
I feel like it will. Yeah, 111 right now on the 10-year note.
I can't get a read though whether it's like we have such hawkish expectations baked in, but I also can't imagine Powell says anything that's like, "Oh, we're not worried about this. Like we're sticking to our guns," because markets and their projections have already been disconnected on. How many rate cuts the market wants versus they're saying they weren't going to do any soon to begin with. So,
yeah.
Look
at dollar almost
Giddy up.
are today. Giddy up, right? All the major currencies are down at the moment. Aussie, British pound, Canadian dollar, euro, like they're all in the red. I mean, we're entering the holding pattern period officially now. It's almost it is time, folks. That's it. That's all we got. You're still here? Go home.
It's just my mom.
I was watching Ferris Bueller's Day Off. You've seen that before, right? Yeah. See, it's required watching. I think Errol still hasn't seen it. We got to get him
That's
watching.
pretty funny.
Thanks for checking us out. Appreciate it. Glenn, thanks for hanging in there the whole time.
Oh, yeah.
I love you, man. Fed meetings not too far away, so hang in there. It should be an interesting day. Probably interesting 2 days. We'll see what if this leads to a 2-day move here. But we'll be back next week, actually. I don't know what production has in store. We'll talk to them about it. We'll see what they put in our time. But Mike and I are going to be out the rest of the week. Enjoy the rest of the week. And then also continue to watch Tasty Live. We're always putting out this content. We love you guys watching. Appreciate you watching all the time. Thank you so much. If you want more from us, of course, you can reach out on Twitter. I'm at Jamal Chandler. Glenn is at Glenn Freiberger with an A. It's like rappers who use their real names.
A one N.
A one N. One N.
Said I had two today.
That's right. That's right. See you guys later. Thanks for watching. Enjoy Tasty Live.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Sentir o gosto do sol, andar por cima do céu, fingir que nada mudou depois de ter você. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Um minuto longe de você, eu já não sei esperar. Madrugada chegou, não quero mais acordar. Madrugada chegou. watching my tongue. If it ain't kinda necessary, then I will be done. I am human.
What is going on, everybody, and welcome back to Risk and Reward. Market's in a little bit of a holding pattern right now as we wait for the Powell speech coming on in about an hour from this moment. I'm joined as always by my wonderful co-host Daryl. Daryl, how you feeling? What's going on?
Doing well, brother. Yeah, we got Powell today. I know we're going to experience a little bit more volatility, T-minus 60 minutes over here. So it'll be fun hanging out with everybody up until, Futures Power Hour, I believe. Yes. So it'll be a good time. Let us know how you're managing your positions. I know that's going to be on the forefront of everybody's mind. So excited to get into it for today.
It's funny, like when it's such a foregone conclusion that there's going to be no change to rates. It's like everybody's like, "Oh, Fed decision day," and it's like, is there really a decision? Like,
right.
I feel like Fed decision day is being used lightly here. It's maybe Fed guidance day would be a more fitting, nomenclature. Is that the word? Is that a word? Somebody let me know if that's a word. Nomenclature? I think that's something.
I believe I've heard it nomenclature.
Yeah. I think I had that. I think I had that. But
it's a nice one in the vernacular. I like it.
Yeah.
Nice
it's more just about the guidance. It's going to be about whether the Fed is sounding hawkish or dovish or neither as we head into the end of the year. If there is any indication that we could potentially get a rate cut by the end of 2026, which the market is increasingly pricing in the probability of no rate cuts by the end of 2026.
Especially with this oil.
Yes, especially with this oil, inflationary concerns, all of these things. So, it'll be an interesting one, but definitely the forward guidance is a bit more interesting than what's actually going to happen today. We are down just a little bit on the day. VIX slightly elevated back up over 23. SPX trading at about 66.70 right now. This chart is incorrect. This is for Live Nation. My charts are having a problem at the moment. So we'll just look at the positions here directly. Affirm, the shining star of the portfolio today.
Yes, sir.
Just keeps on moving lower. I love to see it. Down another 6% today. Yep. I hope it'd be great today if Powell came out and said, these buy now, pay later services are really causing inflation. We should really maybe think about getting rid of these things. That's something that I would greatly enjoy.
Yeah, I mean, debt is at an all-time high, if I'm not mistaken. Go ahead, throw on some of that Affirm on there. So, hey, I don't think it's too far-fetched. I wonder whether it's sing on Polymarket for him to mention something like these types of services. No, I'm just kidding.
I believe that the efficient market will properly show that these things are not going to get bailed out. If Affirm defaults, the government's going to say, that sucks, man.
Yeah, 100%.
Good luck, though.
I can't believe you lasted this long. Wow, you guys had a good run.
Yeah, but they are not a bank. Their debt situation is only going to become more dire, in my opinion. Aside from that, some of these pennies moving a little bit. I don't remember who told me to put on up yesterday.
Was it? It wasn't Jared or JT, was it?
I don't know.
I don't know.
Was it Jared or JT?
They're like, is it green right now? It might have been me.
No, nomenclature.
Nomenclature.
That's right.
I think is that how you?
Well, I mean, nomenclature is a word. That's not what I was. That's not what I was looking for, though.
What did you say? I'm already forgetting.
Nomenclature is what I said. Is that like a?
I'm forgetting.
Yeah, but nomenclature is not the word I was looking for. I thought I was on. Maybe I'm just speaking nonsense. Webster's, get this cleaned up. Add that to the dictionary. I just made it up. Resolute getting hammered again today. Yes, it is. Unfortunately, it's been strangely volatile on Resolute as of late. But yeah, moving back down a little bit. Still up on the calls. Still up on the shares from that super low level, but is getting punched a little bit. Up, as I mentioned, we're up. 48 cents since purchase, or sorry, 4.8 cents. Yeah, since purchase.
There we go.
We are talking about fractional cents here with a 57-cent stock. A light that I threw on the other day, also logging a good day today, up, what's that, 5 cents, 5.5 cents on the day. Still down in aggregate. These calls, as I mentioned, I got slipped on entry, so these are actually still just break even. We are down about, what's that, 24 cents? Since we put this on, it was like, mid-80s. That sounds about right. Other pennies, where's my FIO? FIO right here. We are up on this position, about 12 cents there, but nothing too crazy going on in penny land aside from this up, which is looking nice. Just go to $10. I don't need anything crazy. Just smooth $10. I'm out.
Yeah.
Aside from that, it's just the short delta with the market trading down a little bit. The short delta is jumping out in the portfolio. Metals logging a little bit lower today. Finally getting some movement on these this silver short call vertical. It's been despite silver slowly sliding with the nature of this and trying to harvest some premium here. It's been a slow mover even though we're well out of the money now. But I am happy to see silver with the break below 70. That makes me feel a lot more confident about what about the future with this. I was saying yesterday it was sketchy when it was just hanging out at 72. It's like any given day this thing could just pop to 80 all of a sudden. I'm feeling a bit more confident with this down now.
No, I wish I could snatch that one out of your portfolio. I wish I had a little bit of short delta on the metals once again. But hopefully they continue to slide. But I think you kind of got them at the top of that range when we're consolidating a little bit. So I think great positioning on that one.
Yeah, got the Shake Shack shorts, the tongue twister as always, panning out pretty well for me. Needs to stay under 95, continues to sink lower, so pleased with that. Here's another vocabulary trivia question for everybody that I don't know the answer to off the top of my head. There's alliteration, which is when all the words start with the same letter, but there's a different word for when all the words start with the same sound. So if somebody could give me that in the chat, that'd be great. I want to say ellipses, but that's not. I don't think that's what it is.
I don't know.
That's something different. But if we got any,
I think if you said it, it might ring a bell.
Yeah.
Anyways, yeah.
But yeah,
cool.
there's
we're all back around to that.
Yeah, if anybody's got that.
We're getting back on the vocabulary rules, and I like it.
Yeah. We gotta, gotta stay sharp. It's
I like it.
Sharp. I took AP Lang. Okay, I made a 5 on the AP Lang exam. All right, I know things. I can write a rhetorical analysis. But yeah, target shorts going well. These Baxter longs are up on the day despite a slide in share price, but a little bit of inflation on the ask on the side of this premium. This is a giant spread, so kind of a fugazi move.
It might be alliteration. Is it not? Or it's not automatopoeia or rhymes, but is it alliteration?
Automatopoeia rhymes? Consonants? Consonants sounds right. Well, alliteration is like Sam sells salads. It's like they're not all the same sound. It's just the same letter. I think there's a different word for like Shake Shack shorts.
Yeah,
where it's like those are all SH words.
We're getting closer.
We're getting
closer.
It might be consonants. Consonants sounds like that could be correct. Maybe.
We'll roll back around to it.
We will.
We'll see.
But yeah, just short day, and then Live Nation randomly logging another good day for me. Pleasing to the eyes. But that's pretty much what I got. Not putting anything on in the face of this Fed meeting right now.
Yeah.
We have some big movers. Oh, I just happen to be looking at the right chart right now. We have some big movers in the chip stocks. See if this will work. It does not. Let's kick over to your charts. Let's go over to Errol.
Yeah, we can
take a look at some of this Micron. MU is a big mover today, reporting earnings after the close. And yeah, this memory space as a whole. We talked SanDisk at length yesterday. Micron is another memory stock in that same vein. And yeah, it's been on a real rally up like 300% in the last year.
No, it has. Let's go ahead and zoom out a little bit more here. Let's go to the daily chart. I mean, this thing has been on a tear. Wow, the last week and a half, this thing is still moving. No wonder we were creating some content. I think someone brought up you made something on Micron.
Yes.
Maybe a week ago, Micron's back in the headlines again today, and this is the exact reason for that. So 62.5 IV rank. We got earnings after the bell. What's today? What's the date for today? Is today the
18th?
Is today the 18th?
Yeah.
So after the bell today?
Yesterday was St. Patrick's Day.
Cool.
Structured around whatever holiday we had most recently, but yeah. So Micron going off today after the close.
You're not doing anything over here in earnings, are you, for the day?
I'm not. It's a scary spot. I really never like to trade earnings at all-time highs because it would take something better than just regular good to like push this higher. You'd need something really great, kind of groundbreaking to really get higher off all-time highs. But in this memory space where there's constantly moving targets, constantly increasing demand, I wouldn't put it past Micron at all to just raise their full year guidance by 30% or something after the close.
Maybe they just utter AI differently. I don't know, just say like agentic AI. I don't know, say something fancy on AI. I don't know. I don't know what it's going to be, but we'll see.
Yeah, LLMs.
LLMs, throw something fancy on there.
There's a lot of buzzwords that could be used to push your share price.
A little sprinkle.
Exactly. What's going on, Soul Train? Good to see you. But yeah, Micron, definitely something that all eyes are on today.
Yeah.
Lululemon is another mover. I'm not exactly sure why, but they're up big today.
They needed it.
Yeah, they did need it. And this is one, I don't know, I'm sort of, there had to be earnings or something that I'm just missing here.
I'm not sure if they passed too long ago, but it doesn't seem like it's going to be in our near future.
Yeah.
Premiums are looking all right.
But yeah, a little bit inflated. This is one that I was eyeing for a potential short opportunity, but it's sort of the opposite of Micron, where it's so beaten down that it's like, do I really think they could go lower after this move? Maybe. I mean, maybe we see like a little 2% pullback tomorrow if this is a bit of an overextension. But, when we're talking multi-year lows, it's like I don't know that I necessarily want to get short in the face of that either, unless it's firm. So it's yeah.
They're making some moves though. It's looking like Lulu did beat.
They announced
their
they will
earnings,
reorganize their board.
and they're going to be reorganizing their board. So I mean, those are some pretty pivotal moves.
Lulu announced they will be reorganizing their board. Thank you, Neo Mage. Appreciate it. Yeah, I mean, I wonder to what extent reorganization means, because it's like I was saying with Target. It's why I'm so bearish on Target is because when you just do an inside hire, it's like you didn't really shake anything up. So are they just gonna shuffle the pieces, or are we gonna actually get some people out, get some fresh minds in, and see what we can do to spin this? But competition for Lululemon just really has increased as of late. There was a time like, I don't know, 10, 12 years ago, like when we were in elementary, middle school, where Lululemon had such a crazy chokehold when it first came out, and those headbands, all the freaking like $40 to $60 headbands that everybody was rocking. You don't know what I'm talking about?
When we were kids?
Yeah.
Lulu was popping before then?
Yeah, Lulu was like when they kind of first started to hit the American market, and they were like this new super trendy thing. I remember all the girls had Lululemon headbands. It was like a status symbol. They were like ridiculously.
I remember
the female equivalent of Nike Elite socks, and it was happening on the same timeline.
Wow, when you put it that way, I do recognize the headbands. I do remember the headbands, but I didn't recognize that Lululemon was the brand behind. The push during all those things.
Yeah, and then there was this gradual Vera Bradley was jumping around the same time. I could go on, but then they slowly create more and more market share. But then all of a sudden there's these competitors entering the market. You got Viore now, which is like the exact same product in the same space.
So they almost got repopularized in like 2020. Let's just say,
certainly,
right? And then I think we saw more like the one you just had mentioned, Aloe.
Yes, Aloe.
Aritzia. Aritzia, I think they carry a lot more things as well, but they have their line as well that competes. So 100%. I totally forgot they got repopularized.
Yeah.
We have.
I mean, they just kind of were popular there for a long time, and it was a trendy name in the stock market as well throughout that run. But
that actually kind of threw me for a loop. I can't even believe they stayed afloat so long to gain the level of popularity that they have today.
Yeah.
Yeah. Anyways.
So just an interesting spot for Lulu. I don't know how they managed to recapture that market share, or if they can. Obviously, they're still like the OG name in the space, but I know that just when I think about going to the gym, like 5 years ago, it was like majority Lululemon stuff you would see women wearing in the gym.
Agreed.
And that has definitely shifted now to where there's a good mix. I see a lot of the Aloe, a lot of the Viore. I have some Viore stuff. I really like it. The Viore, the pants with they're really nice.
Lulu pants were getting popular as well. I remember seeing Nick pick up some in the Lululemon shop
Lulu
a few years back.
I'm talking about women's clothing here, but Lulu has made a lot of headway into men's clothing too. I have a couple pairs of Lulu shorts that I really like. But it's just there's a lot more options in that space now. It's not like there's one high-end athletic wear brand anymore.
100%. I'm still waiting for Reebok to come around though, and Under Armour.
Question for Gus and Arrow. Oh, I made a buck with Lulu short put earlier today. Good looks. Question for Jeannie. How do you approach buying power versus maintenance margin versus excess liquidity? I assume you mean maintenance margin versus excess liquidity. You want to take that one first?
Yeah. I think it really just depends on your style, your comfort level. I know there's percentages that you can risk of your portfolio and your buying power. But for the most part, I keep about 80 to 90% of my buying power available just because of the fact that I want to be able to snag 2 or 3 of the micro contracts if we need to, if an opportunity presents itself. And this is a little bit of a smaller account. So that's the reason why I keep open so much buying power. But it's really just going to depend on the individual and the assumed risk you're taking on. For the most part.
I would say I definitely weight buying power the most heavily among those. In terms of my personal analysis, the other two are sort of secondary. It's very rare that I'm ever actually on margin. I will sometimes use my stock margin and things like that when I make some of these, penny stock trades are happening on margin. But buying power certainly carries the most weight. That's sort of what I'm tracking in terms of my portfolio allocation, how much outlay I have. It's buying power is the main metric. I'm usually a little bit more exposed than Errol would be. I'm usually, I would say, in an environment like right now, where there's all this uncertainty and turmoil, I'm about 50% cash. I have about 50% of my buying power deployed. In times of a little more certainty, or when we're ripping straight to the upside, like coming out of last April, that was a situation where I had I had like 40% of my buying power sitting in cash. We get hit really hard, and then I just deployed like crazy. I had like 90% of my buying power deployed, buying all the dips in April, and then stayed that way through the middle of the summer until I started taking off some of those longs and restructuring a little bit. But yeah, in times of normalcy, I'll be at about 25% buying power ready to deploy and have 75% out. And it's always, and it's easy to rein things back in too if I ever want to. I keep everything so long dated so that I'm able to manage all of these positions at one time. But if there ever were some sort of cataclysmic event or some type of giant uncertainty event that's approaching, it'd be really easy to rein it back in and get back to 60, 70% cash if I wanted to.
100%. But yeah, it really is dependent on kind of just how you structure things, because to Gus's point, right, like a lot of the times I'll use up maybe 10%, maybe even 5% of the buying power that I have just in the position sitting in there. Like right now, I think we just have a call spread for QQQ. And then sometimes it'll jump up to 90% being used in a specific moment. But whenever we're using all that buying power into a specific trade, it doesn't mean all of that buying power is up for risk whenever we're in a given trade. So we might be, I know for myself, I have some rules in a specific trade. I won't sit in a trade and draw down more than $250 in a single micro trade. So it might sound like, wow, $9,000, $10,000, $12,000 worth of buying power all at once sounds like a lot. But there are fixed risk parameters, built around that.
Yeah, and to that end as well. I mean, and something I've said on air before is that I pretty much like 1% buying power is like a standard trade size for me. That's generally where I try to hover around. Then there's like a scaling confidence meter that goes on there. You could almost think about it as like evaluating each trade on like a 5-star sort of system, where a 5-star trade is something that I will deploy 5% buying power for, and that's the absolute maximum I will ever deploy on a single trade is 5% buying power. When you do things that way, especially with my standard 1% buying power trades, it's why I'm so comfortable, letting things go to zero for lack of a better term. Like you guys will hear me say a lot, oh yeah, this thing's down 90%. I'm just gonna let it run and see if I can't get a slightly better exit than what I'm at now. The reason I'm so comfortable doing that is because I just have 1% buying power in every trade. If I take a 1% portfolio hit on something, it doesn't really matter, because if I have 3 other 1% trades that are all at 33%, it just cancels right out. So and then let alone some of the times when I go undefined risk and you can make north of 100% if you really pick your direction right. So there's a long-winded answer to your question.
100%.
Super under the radar brand for premium activewear. Flag nor fall. I'm not familiar, but that's I'm always looking for those sleeper brands like that, especially if they have good prices. So I'm with that. Young LA is another one right now. That's really big.
Yeah.
Dave Powell speak already? Kids seem spooked. No, not yet.
We have about.
Are we the kids? We're not spooked.
We got about 40 minutes
I ain't
left.
afraid of no purple tie.
I can't even see the purple tie. I'm colorblind. But I was taking another look at SanDisk, SNDK, and I know we've been seeing a lot of volatility in here. We pulled it up yesterday. The markets are still a little bit wide, but I think we can get a decent fill in here. And I was looking at the May 15th expiration. I don't know who else has a position on in SanDisk. But looking at the 820, 830 to $10 wide, if we could collect at least what is it exact third of that? Like 3,333 or 360, whatever the case might be. But we're kind of in that ballpark. So I mean, if we could get an 820 for $3 wide, then that would put our break even at around 823. I mean, we could sit comfortably up here. I don't know. I could see, SanDisk could catch more volatility to the upside and really surprise us with the 800 print. But it gets to a point. I mean, at this potential short, it looked attractive yesterday, and now it almost looks like we're putting it in another leg to the upside. So I think I might have to get a little bit involved over here on SanDisk. So we're going to deduct some more buying power. Funny. Now we're going to deduct a little bit more buying power from the portfolio, see if we can get SanDisk on here for a fill. I mean, we could get 350 for the 820, 830. And honestly, would love to at least have 800. So, I mean, being this far out feels nice. 67% pop. 350 extrinsic, obviously. $650 worth of buying power. $650 max loss in case this thing wants to balloon to the upside. So we might try and send this one through.
Yeah, I say shoot it. This is one that could catch a sentiment move with Micron after the close today. But I don't think that it would take a basically 9% move right now to get you outside of this range.
We're gonna,
a 9% sentiment move would be incredible.
I'll go down to we'll go down to like 340, 335 or 340. We'll sit it at, and if we don't get filled, we don't get filled. But if we can get filled before earnings, before the market closes today, that'll be really nice.
Yeah, certainly.
Yeah, we'll leave it there. We'll leave 340. We're 20 points away from the mid price. That's a pretty wide market. It's moving around.
Yeah, it is a wide market. I mean, 330 would be 2-1 on that risk profile. If you wanted to make that your bottom dollar, guys, I went ahead and went risk define with a 405, 410 short put vertical, 23 DTE and MU.
MU. I know what's
the current price? 465. Yeah, I think that's that's very reasonable.
Looks exactly like SanDisk.
Yeah, I mean, even if it does look exactly like SanDisk.
Yeah.
I mean, even if earnings go poorly today, I mean, you could tolerate a 10% move to the downside at those strikes. And then if earnings were to go so poorly somehow that it took a 10% dive, I think tomorrow would just be a green day as we eat some of that back up. It's very, very seldom there is a justified 10% move after earnings. And that would be the very, craziest extent of a move that we could really get there. So yeah, I think that's safe. I think that's a good conservative way to attack it. I like this one too for the call side.
I look at Soul Train trying to edge me out of this position. Come on, Soul Train, you don't tell me that right now. No, I'll keep it on here for a little bit. Already used up the 3-day trades for the week. I think I might have like 1 or 2 left. So if I choose to get out of that position, SanDisk, before the day ends, that'll count as one. No, but jokes aside, we'll see how that one plays out. If this thing really balloons to plus 800, I know we have 60 days left till expiration. We won't do anything impulsive, but we don't mind stepping outside of this position if we need to manage the risk, because plus 800 after the earnings tonight would be a wild move, and I don't know if that would come down in a favorable time frame.
Yeah, I mean, and it would just, and it's earnings on especially as it pertains to SanDisk, it's earnings on a whole different company. It's like, how? Because if SanDisk makes a move up over 800, what did Micron do? Is Micron at 550?
Absolutely.
What would we be talking about?
Is that far-fetched right now? I mean, if we look at Micron, I mean, just a week and a half ago, Micron was trading at 358, trading at 465 right now. Over 100 points in less than 2 weeks.
Yeah.
So is 500 possible? Maybe. I mean, it has the volatility to do it.
But every $100 is progressively harder than the last.
Absolutely.
You'd be talking about another 20% increase on their valuation if this were to run to 550 by the end of next week. When we've already had a 300% increase in the last year, really a little bit shorter than a year for Micron. So it would be a tall ask. I do think that Micron could move higher after earnings tonight. I don't think that that's necessarily out of the question. Like I said, they could just say that demand is way up and we're raising our guidance 25%, and that would obviously give it a bump. But it would take a lot to move SanDisk enough to get over that range.
No,
the 58 DTE is a long time. I don't know. A lot can happen.
I don't even like the 58 DTE. I bet in like a week or two, it's going to be like break even. I'm going to be like, let's go ahead and take this off. Redeploy this capital elsewhere. Back into the futures. I know that's exactly what I mean by that. But yeah,
$32 expected move on Micron.
That's a pretty big expected move, and who knows, we might exceed that. So we'll see what we get there.
Sure, but I mean, even if that expected move comes through to the upside, we're looking at 497
plus,
and does that push SanDisk over 800? I don't think.
You know what? What is the expect? So I know we're inside the expected move over here. Good lord, that's a massive expected move for the 58 day expiration. Did we get filled? We didn't get filled yet.
Yeah, still working. I'm going to show best earnings ever. They've already said memory shortages might continue until 2030. Yeah, I mean, I think that's like I said, I think that's very much in the realm of possibility. But that's the thing, though, is that if everybody's expecting that, I doubt that you're completely alone in that belief, nice boy. How much of that is already baked in, and then that raises the question: do they need to have a better earnings than the best earnings ever, which is sort of what everybody's beginning to price in, and we're seeing that massive move to the upside today. So yeah, I don't know. It's a tough spot. That's why these earnings, when things are at all-time highs, are so dicey to me. Stay away.
Yeah. It's almost like, man, is a risk reward in your favor, because at the end of the day, I mean they can beat earnings by the most they've ever beat earnings, and this thing could tank to the downside and give back everything that it's given in the last week. So with that being said, we'll just make sure to line up the risk reward, make sure we're comfortable with that. And we'll keep ourselves updated on if this SanDisk position gets filled on our end. With that being said, anything else top of mind? I think that's going to be it on my end. We'll see how the MU Micron earnings goes. We'll see how NASDAQ pans out. Whenever we return tomorrow, we'll give an update on everything we've been doing on NASDAQ and whatever opportunities we'll look for next. But I think that's going to do it. Oil's been really interesting. We'll keep an eye on that as well. Really want the oil short. I'm going to be hands off for a little bit, but that is another one that's going to be fun. That's going to be it on my end, though.
Yep, that's all I got as well. Yeah, that'll do it for us for today. JPOW speaking in 34 minutes now. So everybody stay tuned for that. Futures Power will run right through it. Thanks everybody for coming to hang out with us. We really appreciate you taking the time. We never take it for granted. Errol and I'll be right back here tomorrow, same time, same place, 12 o'clock noon Central Standard Time. Stay tuned for Futures Power Hour coming up next. We'll see you guys next time. Peace, guys.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This was
awesome.
Not a paid, you're not getting paid for this advertisement.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Thin, and sometimes I bear my claws. Forgiving me, forgiving you. We're all learning to live in truth. All I can do is what would love do? What would love do? Love would love you. What would love do? Love would love you, love you. What would love do? Love would love you. What would love me? Love would love me. Love would love you, love you. Put down my halo, put down my wings, realizing I can't fix everyone or everything. You are human and you have your own path. And if you need me, I'll just wait here until you ask. Forgiving me, forgiving you. We're all learning to live in truth. All I can do is what would love do? What would love do? Love would love you. What would love do? Love would love you.
We're back. It's Wednesday, March 18th, 2026. This is Futures Power Hours sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, we're here together on this Wednesday. It's usually a Westwater Wednesday, but we do get 8 meetings a year, 8 Wednesdays a year in which you come on the show, which can only mean one thing. It's a FOMC meeting day.
Buckle up, everybody. This is going to be, if nothing else, entertaining.
How wrong was I in thinking that things like PPI didn't matter because they're from the pre-war days? Well, when they show directionally that inflation is actually heating up prior to the start of the war, it certainly raises some eyebrows and further underscores the challenges the Fed will face in delivering the rate cut that the market so desperately thinks it needs, thanks to the labor market issues that have been cropping up in recent months. But it's not happening. PPI came in much hotter than expected this morning. Not even like 0.1%, Ilya. The expectation for the month-over-month reading here, I was looking at 0.4%, comes in at 0.7.
Yeah.
That's not the direction we want to be moving, folks.
We got a core rate at 3.9. 3.9.
3.9 up from 3.5. The headline was up
back to the post-COVID high.
Post-COVID highs, and this is
essentially.
Data set.
Let's be clear. Not the post-COVID inflation highs, the post-COVID inflation fight highs. So after the peak was in March of 2022 at 9.7%, but then of course the Fed turned the screws on everybody, and we fell as low as 1.8%. This 3.9 matches January of 2025, which is the post rate hike cycle normal period, and this is the high. It hasn't been higher than this.
You just made a really important point there throughout all that. I want to pull the signal out of that, not calling the rest of it noise. but PPI peaked in March 22.
Yes.
CPI did not peak until June 22 that year.
There's a pipeline here.
There is a pipeline here, and that means that, let's just say this is the peak for PPI. CPI is going to be perhaps rising over the next 3 months at a minimum, and we're already above the Fed's target. So with that, Ilya, we have our slides for today. We have our title of today's show, which is the one hope that we really can't get the Fed to say. Powell, I know it's your second to last meeting. Maybe not. Maybe you're here for a little while longer. But given this back, the worst thing the markets want to hear again is the T word. Please do not say transitory today, Chair Powell, because against this backdrop with stocks down and bond yields going higher, oil prices testing 100 again, in CL, in Brent, they're back to 110. This is not the time or the place to look through the inflation supply issue here.
Yeah, I mean, I think when you look at what's going on here, right, you get a sense for why the Fed, and you got to give the Fed credit, why the Fed was ahead on this in January. What was the Fed telling us in January? We saw it in the commentary. We saw it in the minutes from that FOMC gathering. The Fed was worried about inflation and saying, this thing is looking like it might be a little stickier than we wanted it to look. And yes, we're still expecting that the tariffs will work their way out of the equation. But what's going on here in the service sector, let's just keep going in that direction, because if we don't, we need to be careful. And we're not in a rush to cut rates. If anything, the economy has surprised on the upside of expectations, and that already is going to put some pressure on prices just by way of economic activity. And they were prescient. Look at these PPI numbers. It's a similar thing as what happened last year with the employment situation. The Fed started warning about the labor market well before the data came in to support that. And yet they were out in front and they got it right. So what kind of a message are you going to get from a Fed that was already starting to tilt in a less dovish direction and then got an oil price shock? Surely they're not going to be terribly dovish, is my sense.
No. And, the market doesn't think they're going to be terribly dovish. Do you notice that column on the right side of the screen here? we usually don't do the same spotlight 2 days in a row on Futures Power Hour. And perhaps yesterday we shouldn't have done the CME Fed Watch if we were going to look at it today prior to the Fed. But alas, it offers a nice reference point.
Yeah.
Because yesterday the market was not pricing in a 1.07% chance of a rate hike at today's meeting. That's correct. The market thinks that there's a greater chance of a hike than a cut when the Fed meets later today. Now, the Fed is not going to hike or cut right now.
Yes.
But that just shows how severe the inflation data has moved recently, not just from the observed figures in today's PPI numbers or the PCE that we saw, or even the CPI, but in the market's expectations of how inflation is going to evolve moving forward, that just by the mechanics of how the market's pricing, looks like that maybe a hike could be potentially on board. So what does that leave us then? September still is the most likely time when we're going to get the next cut. And I think that makes sense. The Fed today, when they give us their summary of economic projections, they're going to push back on any timing or language that would lead us to believe June was possible. I don't think they're going to eliminate the possibility of a cut altogether. So maybe that's enough to keep the market content. But there is a real issue that they now have to contend with because inflation has a higher baseline starting level. And after that PPI report today, the market wakes up and gets some non-great news about what's happening over in the Middle East. Israel and the United States, apparently, they went in and attacked the South Pars gas field. It's a gas field that Iran and Qatar actually share together. In Qatar, it's known as the North Field. So depending upon the reporting that you're looking at for this incident, you're going to get different names. This field in Iran, the gas that comes out of that field is used for domestic electricity generation and production. This is not for foreign exports. So Israel attacking Iranian domestic energy infrastructure, I think that's a good place to start with oil for the day, where it's back in a little bit here, but you do see that Brent has that jump back to 110. And against the backdrop of that already gross PPI data with a Federal Reserve meeting coming up around the corner, we have our S&P 500 pulling back. So a little bit of vindication from yesterday, Ilya, where you and I, despite having 2 days of pain in front of us, or rather behind us because of an equity market bounce when we're both positioned choppy sideways to leaning short deltas, broadly speaking. Today feels a little bit of vindication so far, although we still have the major hurdle of the Fed to clear.
Well, that's right. So if you look at what's going on here, it's once again this kind of oil-driven thing. Oil pops a bit. We basically get into the top of the recent range where we've been consolidating essentially since the beginning of the week. If there was kind of one headline since the beginning of the week that I think gave the markets permission to unclench the grip on oil, it was that Iran said the Strait of Hormuz is not closed but for enemy ships. As if to say, look, you just have to give us a call and then we're not going to shoot at your boat. Now, that's not great, obviously. And also, that's the same regime that says we don't want to attack our Gulf Arab country neighbors and then lobs missiles at them. So who knows? But the markets seem to think, okay, this is enough to think that maybe the lockup isn't as bad as we thought. It's bad. It's just not as bad as we thought. But since then, oil hasn't gone anywhere, and today it's kind of higher in that range. And so the result you get really across the whole cascade of assets, stocks lower, bonds lower, dollar higher, down the list. And so you get this sense that you've had a retest of the bounds of the trend. And in the S&P, you can see it really clearly, where there's this defined slope of lower highs and lower lows. And we kissed back on the retest. You have it there on the chart, perfectly illustrated. There is that underside of the range. It lines up with the bounds of the down move. We retest right there, nudge it, and come right back off. So the key now, what does the Fed do? Right? If this is your textbook, former support becomes resistance, it is retested, good night. Then the next thing that should happen is a break of 66.
Well, yeah, you parse the technical tea leaves here. So you get this push above the 1 week moving average yesterday, perhaps notable because we did not close above it prior to, that since March 4th. We make this run up towards the 1 month, towards these former swing lows. And instead, while we push to a new high relative to yesterday, it's not much more than here. We go down to 67.15, and then we're below yesterday's low, which means upon trying to get back above former support turn resistance, instead we carved out a bearish engulfing bar, a key reversal of sorts, and a key reversal that brings you back below the 5 EMA, which reinstates the 5 EMA, the 1 week moving average's negative slope, negative rate of change, which compounds with the 1 month and the 50 days already negative rates of change. MACD trending lower, stochastics. I mean, this is bad momentum. It's a gross setup right now. If you're looking at this from a bullish perspective, it's for a market that's rolling. Yeah, it's rolling over right now. It feels like it's rolling
trader
over.
reading page 1 of a technical analysis textbook would get a setup painted like this and go, oh, well, see, there you go. There was a big uptrend, then there was a period of consolidation. There was a rounding off of a top. The way you knew that there was a turn was the neckline on that top was breached. The market orderly went down, found the next level of immediate support, retested the broken neckline. That's your signal for entry. It could not be more technical analysis 101 for a bearish reversal setup.
I mean, we should have this. I'm just Googling this here so folks could do this themselves. This is not cherry picked, but if I were to open up a rounding top chart pattern Google image search, right?
Yeah.
I mean, just look at this.
What are we saying here?
Breakdown,
what are we saying here?
Rounds to neckline. I mean, is that not that image that we're looking at right there? Is that not?
It certainly looks like
thing?
it. I mean, here's the thing. It's tempting to go, it's too cute. It's too good. This is going to suck you in and pull the rug out. But until you get the confirmation that the rug is getting pulled, and this is where minding your risk reward and being nimble comes into play, you got to take the setup at face value.
Setup at face value is that this could be a rounded top or head and shoulders pattern where the neckline is 68.25. And if we have our rejection today and the Federal Reserve giving us their statement in 15 minutes time, Powell being, as noted yesterday, the high priest of passive investing, he gives the green light that the cuts aren't coming because of inflation. And all of a sudden it feels a lot like that, first quarter, second quarter Fed meeting type of vibe that you had from 2022, where the Fed is not giving the market what it wants. And so the market walks away disappointed. Hikes, cuts, it doesn't matter. This is a psychology game. It's a confidence game.
Yes.
The market needs to feel like the Fed has its hands on the steering wheel. And so that's why I'm begging Fed Chair Powell, which I know he's listening here, prior to the meeting announcement, don't say the word transitory. Because if you do, and you seem to suggest that this is not going to be a longer term issue, the market's certainly acting like it is. It's going to make it seem like the Fed is not necessarily, again, both hands on the wheel. If this is a rounded top, Ilya, we treat it like we were doing a head and shoulders measurement from the top of the range to the bottom. You double that distance. The Fibonacci retracement tool here on the platform can accomplish that. We can just go to the highs and go right to the low that we drew from the midpoint of December. That does give you a 65.50 downside target. So staying short today against the highs, or we can call it 68.25. Staying short against 68.25, which is 100 points, but we're looking for effectively another 175 to the downside. It's a decent risking one to make 1.75 if you're trading this from a pure futures perspective. And by the way, though, we can size up short long put spreads down there to get something a little out of the money convexity in case this thing starts to run.
That's right. I mean, that's really the key is if you achieve that objective, and that's where you find yourself, then what you will have done is broken the support that's been holding up this thing all the way from, let's call it, the early part of October last year. The next bogey, big picture after that, is somewhere around 61.80, maybe 62.40. So if you play this out, and you go, right, the implication of the break that's already occurred is that we clear 66. If we clear 66, we might be in the upper 61s, lower 62s next. And that starts to look a little bit dicey.
Well, that's a very different, much more significant major topping pattern.
That's right.
Then, right?
That's right.
We're not there yet, but we were highlighting the continuous ES contract yesterday as opposed to just ESM5. And it was noted that you had this little band where all the lows were carved out in January, February into early March, which coincided with that 1 month moving average yesterday. And that's exactly where the market is finding itself failing so far today. It's not a great technical setup in ES. It's not a great technical setup in the NASDAQ right now.
That's
fading,
right.
falling off of its highs. The Russell is still having its trouble at bounding around the halfway mark of its trading range, going back to the November lows, January highs here. And vol is starting to creep up as well. So I'm having trouble, despite being the optimist between the two of us. Hard to, I think if people just started listening the past few days, they would have difficulty distinguishing the two. But this is not, there's nothing here technically, there's nothing here narratively, there's nothing here fundamentally in the short term that makes me think that the concerns that we've illustrated and will be illustrating in the coming days, we have a nice little special report series coming together on the not just oil implications of what's happening in Iran, but how it reverberates through other futures products like natural gas, even corn, wheat, soybeans, et cetera, things that aren't traded here on the platform or even don't have tradable futures, but we still want to watch them as clues. All that's not going away. And so this inflation problem with PPI rising 0.7% month over month, 3.9% on the core in a data set that's delivered ahead of the war of Iran, the oil impact is not felt there yet. That gives the Fed no breathing room to do anything at all in the short term. And if they were to start cutting rates, talk about getting inflation running away. Treasuries would sink. They would die on the vine. So we have our own problems here. I'm not convinced that we're going to get the 2-3% move lower here today. But the market's down and it's staying down around the Fed seems entirely plausible. And that's how I'm leading position-wise.
Right. I mean, I think this whole thing is almost guilty until proven innocent. The setup has been clearly that the market is concerned about the things that we're talking about here, because here we are, it's in defensive mode. So, and everything is kind of lining up in this sort of, oh no, inflation risk, not enough rate cuts, extrapolate from there. And you go asset by asset and you see it. So you, even just looking at the equity indexes, Russell in particular is giving you a sense that this is not just growthy. This is sentiment. This is the cost of money. Because frankly, if this was just growthy, Russell would be down the most, and it isn't. So you look at this and you say, okay, so what's going on here then? And I think you have to take it at face value until the market decides that it has heard something from the Fed that it can think is a mood shift. And it's possible that what the market does with this is they go, well, look, you saw us defensive ahead of the thing. We were expecting something untoward. And then what comes out ends up being not as untoward in whatever subsequent analysis. But you get the Fed come out and say, yeah, you know what, we're looking at this thing with oil. You heard us on the tariffs. This is the same thing. We just don't know. So we think we're on course. We don't think anything has changed. Maybe it has. We're just going to wait and see for now. We have no answer. And maybe the market goes, well, they could have come out and thrown up their hands and said inflation everywhere as far as the eye can see. But they didn't. La-di-da. You're telling me there's still a chance. So with that, you could get a sentiment shift and the Fed will have done nothing. So watching the price action here is very, very important.
Yeah, I mean, I wonder how much of the Fed's confidence they can instill into the market. After we had Silicon Valley Bank and Signature Bank go down that weekend in March 2023, The Fed ultimately is able to hike rates later on because they're conveying to the market, listen, we have an important goal here. Our mandate's to stop the inflation risk. This is not a systematic or systemic banking issue. And so eye on the prize. We're not going to let this little ripple in the short term that's not showing signs of systemic stress push us off the course of what we're trying to accomplish right now. I don't know if the Fed can instill that confidence in the market.
This is a different thing.
It is a different thing. And then you go into the Fed meeting here, and there are a few things that are leading, right? If I were to look at the growthy stuff like telecoms, I'd say, oh, wow, this market must be really holding up. The economy must be doing really well. Semiconductors, they bounced here the last few days. I have a small bearish position on it here as a hedge to the downside in case that neckline breaks. And you go around and you go, all right, hold on a second. Industrials, that looks pretty close to teetering. And then financials have already broken down. And even if we are generous with our interpretations of where support may be, the swing lows that we had in late May after the relief rally following the Taco Day or Liberation Day, Taco, whatever we call it now, that Tuesday.
Tacos Day?
This is a rejection of that low. So you could see that depending upon where you look, the banks aren't feeling the healthiest right now. KRE, the Russell regional banks, which had been breaking out, they looked really, really good. They now look like crud, losing their uptrend, holding below their weekly moving average. So this is, again, it's been a very offensive time. Capital preservation is the name of the game right now. I'm not here being a dummy saying, oh, low volume, low volatility, set it, forget it, go fishing. Although I'm sure we'll have a point to do that again sometime soon. Just not now. Tis not the season.
No,
not the season.
Not now. Just not now. And
so being nimble here, by the way, Ilya, today the Fed meeting moves. You find yourself, the market's running. Powell says something, and all of a sudden ES is flat in the day, and it's going up, and it's going. Take the position off. Reset it. Get yourself a little bit more time. Don't be afraid to take a small loss. Move on.
Yeah. I mean, and it's not like you can't find differentiating narratives here. We talk a lot about Brazil. Brazil is up today under the surface of this index. And it's one might argue because if oil is more expensive and Brazil has oil to sell, probably not a bad thing for Brazil. If the US and China are more at odds because the US wants to use the Iran situation and the implications for controlling the Persian Gulf there as leverage. We saw the president put on pause his trip to China. Maybe he was hoping that he would have had this done by then. But you don't have to struggle to see the dominoes. You control Iran, you control the Gulf, because then everybody around that Gulf is a friendly. You control the Gulf, you have leverage on 40% of China's energy supply. You have that kind of leverage, you can have a very different kind of a conversation about your economic rivalry, but also about how much does China want to keep propping up Russia. You get less of that, you unspool the Ukraine war. I mean, it's not difficult to see what the prize is here beyond the rhetoric, but you see something like Brazil and you go, well, looks like there's U.S.-China competition under the surface of this entire thing. Well, who sells oil to both and maintains a neutral posture, and who's China's go-to backstop for things like soy and oil when it doesn't get along with the U.S.?
Here's an oil headline for you. The foreign minister, Aragachi, has announced about 15 or 20 minutes ago, which you see here over the last 15 or 20 minutes, oil going down, that he's in discussion with EU Foreign Affairs Chief Callas over the Strait of Hormuz. Likewise, hitting a few minutes ago, the Trump administration expected to lift summer gasoline regulations to help curb energy prices. So oil getting a little 1-2 headline punch here, down about $2 in the span of about 15 or 20 minutes. So not nothing. You're not necessarily seeing it filter through into a significant equity market rebound where going into the Fed, this thing was moving sideways. We're up 8 points off the lows, and we're still, 70 points off the session high, 80 points off the session highs from just 5 hours ago.
4 minutes until 3 minutes now until the great and powerful announce their forecasts. So I don't think anybody's going to commit here one way or another.
No, and it's been a fairly light volume day so far, all things considered. I mean, actually, that's not fair. It's 1.08 million contracts traded now. It's almost 2 p.m. Eastern, so people tend to trade a little bit on the lighter side when you get into a Fed meeting day. The fact that we're already at a million
Understandably.
just shows how much background noise there is right now, given the news flow and the images that continue to flood social media and traditional media to that extent. I think the concern here, if I'm looking at this market and I was getting bowled up yesterday, which I know you and I were not, the
Right.
volatility has come back in over the course of the session. IVR has been steadily on the rise from 30 to up now into the, we'll call it mid 30s, 33 and a half or so. It's not a huge, enormous push to the upside, but you're seeing that here in equity markets, where with the headlines that we had seen earlier today, oil vol had also started to make an appearance again. Now, granted, it's coming off as the session goes on with some of the headlines about Aragachi talking with the European defense or foreign chiefs there. Nevertheless, if oil vol is going back up intraday and so is equity market vol, you just committing on the directional bull side right now. It's one of the reasons why I've been so apathetic and against it in the past week or so.
Yeah, I mean, it's very tough to want to look at this and go, yes, this is a buy the dip opportunity as any other. Clearly, there is something else going on here. Certainly, those comments from the foreign minister jive with the comments over the weekend that we talked about before, where he said, hey, the strait's not closed. If you're not an enemy ship, hey, strait's not closed. And I think this is why the Europeans turned around and told the president when he said, hey, you guys should send ships here to open the strait. And they said, we're okay. We'll just be over here. You go. It's all you, buddy. Go ahead. And here we are.
I'm just thinking it just hit me.
Good.
This summer gas price change. Today's March 18th. Spring does not start until Friday. They're talking about changing the rules for gas in the summer, which doesn't start until June. Why would they be talking about changing regulations for summer gasoline if this war was wrapping up and its impact was not going to be felt for months?
European gas prices, for what it's worth, up something like 50% since this thing started.
Ilya, we have a Fed meeting coming out any second here. I have my Fed statement tracker comparison tool loaded. We're going to wait to see what the FOMC statement itself says, 6730.
And of course, the forecasts.
And the summary of economic projections due out here as well. Those have not hit the screen just yet. I am waiting, and like everyone else on the planet, refreshing the Federal Reserve's website, which is a
Here we go. We got the statement.
The statement is coming out.
Rates unchanged.
Which is no surprise, and they certainly weren't going to be raising.
Economic activity expanding at a solid pace. Job gains have remained low, and the unemployment rate has been little changed in recent months. Inflation remains somewhat elevated. There we go.
Oh, does it? Okay.
There we go. Short statement.
Very short statement. Let's look at the actual
Stephen Mirren dissented. He wanted a quarter-point cut. He was the only dissenter. Waller off the dovish committee, apparently.
Here's the inflation forecast update. Fed previously had inflation this year at 2.4. It just jacked it up to 2.7%.
No cuts next year.
They are likewise telling us that wherever we end 2027, Ilya, this is it. We're coming to the end of the road for the rate cut cycle in the, purview. So in the next 3-year window, if they don't think that this is going to be, thus far they're signaling, that they don't think this is going to be a bigger inflation problem.
They are signaling, however, again, that growth is going to be faster. I mean, take a look here. GDP revised higher. Unemployment rate nudges up a little bit, which tells you you're in that environment where the labor market is disconnected from economic activity. Economic activity proceeds, but the labor market is soggy. The jobs picture, of course, and the Fed's made this case. How many cuts do you think will it take to resolve a demographic issue decades in the making? None. infinite, you're asking the wrong question. The Fed has no ability to change anything there. And increasingly, you're starting to hear from Fed officials, and Raphael Bostic comes to mind. He spoke about this in recent weeks and said, guys, baby boomers are retiring. They're the biggest cohort. Their participation rate is like 50% and lower, whereas everybody else, all the other cohorts, are 80% and higher. What do you want? There's also an immigration crackdown underway. Yeah, the labor market is soggy, but what are we going to do about it with rate cuts?
Can we do the Rorschach test here real quick?
Mm-hmm.
This is the current dot plot. This is the prior dot plot. Okay. So this is the old one, and you can see how
it's like one Stephen Mirren no longer has a job at the White House.
Well, you see here, just the distribution is fairly even, going lower. And now all of those have started to crop back up above 3%. You're not seeing that filtering below 3%, even longer term. It's starting to, okay, rates are not going anywhere. We're not going to have the flexibility. This is a higher for longer. This is a higher for longer dot plot. It's a Federal Reserve that's right now signaling, in my view, we're going to have to hear what Powell says, but they think that inflation, because they don't have all the information ahead of them, they're hoping inflation's not going to be too terrible. So maybe they can still give us the rate cuts this year.
There's no change in the rates outlook here at all.
But it's just that they're not going to give us it into June. And then with that move in inflation, once the cut happens, that's probably the end of the road.
Well, we'll take a look at what this means, right? So the Fed comes out, it moves around a lot of the internals in these forecasts, and yet nobody wants to commit to any change in the rates themselves, right? So what's Powell going to say? Guys, we're back to tariffs. This is March last year. Last year in March, we told you we don't know what's going to happen with these tariffs, but they could be inflationary, and that could be sticky. We'll see you later, though. We'll talk to you in June about what we think this could mean, maybe. And only like into Jackson Hole do you start to get the sense, you know what, we think it's possible these things could be a one-off, et cetera, et cetera. But substitute tariffs for the way the Fed talked about them and substitute that for this oil shock today, I bet Powell's going to sound pretty similar.
The only changes, you talk about this being a short statement. They said the unemployment rate previously had shown signs of stabilization. That's now the unemployment rate has been little changed in recent months. And then they added in a section here, quote, the implications of developments in the Middle East for the U.S. economy are uncertain. Which if you look at I think that's actually a really astute way to put it, because if you think about inflation's going to go up, but given the structure of the economy, given that we're now a net exporter, is it going to be as negative for growth as it would have been had this shock occurred 20 years ago?
No. I think clearly. This is not the 1970s, clearly.
It's not the 2000s. And taking into account the changes in oil prices and the changes in inflation and the changes in wages, to get back to like that demand destruction level that everyone was so fearful of, $100 to $120 a barrel in the 2000s, that's like $170, $190 a barrel in current day dollars. That's not to say that we can't get there. Very possible we get up there. If we get up there, I'm not nearly long enough oil and short enough stocks. But the uncertain developments here. So isn't 2022 kind of the template then, as this goes on more and more, where the U.S. economy never fell into recession in 22? It never got to stagflation. It was just high inflation with churning labor markets and
a very aggressive Fed.
So we don't have a super
very
aggressive
aggressive Fed.
6730 here, Elliot. We got to move on to the bond market as we get ready for Fed Chair Powell's press conference at the bottom of the hour. Bonds have lost gains over the course of today, given the move higher in oil. And I say gains relative to where we were in yesterday's session and show. But with oil prices coming off the last few minutes, we've seen a little bit more stability here. It's a doji-ish type of candle in notes and bonds.
We're still sitting at that level.
I was looking for a move above 115 yesterday on a closing basis to give me a little bit more confidence insofar as that swing low that we have on March 9th appears to be a line in the sand. And if had we gotten that close above 115, it would also represent a break of the downtrend since the war started. And maybe, just maybe then we could say, okay, we've priced in the instability of oil and the inflation expectations. Now is the time where the actual, this is going to be bad for growth and yada, yada, yada. Globally, I want to get exposure to treasuries at these yields while I can get them. Time for the safe haven play. Obviously, that's not a story I'm going to be telling myself here today, but what do we make of this move now? We're up a little bit post-Fed. We're broadly speaking down on the session. We couldn't hold the move higher thus far. Oil is off. Are bonds even that interesting to you right now? Do you trade them long, trade them sideways?
They're interesting. They're interesting in the sense that, well, first of all, I'm already short. And that's going to continue, it looks like. Because the same kind of backfill on a break and then retest and extension back in the direction of the trend here, which is down, that you see in the S&P, you seem to see here. So, yes, there is a little bit of friction here as we test the backside of the break. I mean, you can see here, even just in the most recent step up from, let's call it, the past several days, you lose the hold, you come back down, you're retesting where there was a little bit of friction on the way up. There's a little bit of former resistance turn support just right there. And so, not surprising, Powell hasn't even spoken yet. And that's where the meat is. That's where he has to come out and explain what all of this stuff means. So if the markets end up not liking it, there's still momentum here to the downside. If the markets, by the way, don't not like it, but essentially come out and say, well, we looked soggy ahead of this. We didn't think it was going to be good. It wasn't good, but it wasn't worse than we thought. Then maybe you drift sideways or even catch a little bit of a relief. But you get in the price action leading up into the FOMC a sense of the market's default. And the market's default is not for this to go higher. It needs something to change for this to go higher. And that's not changing. If anything, the situation in Iran has become a little bit more complicated because we've had confirmation that National Security Chief Ali Larijani has been killed, along with the leader of the Basij and his deputy. So we're looking at a situation here where, I mean, people were talking about this guy like the Delcy Rodriguez of Iran. Like, yeah, he's a hardliner, but he also understands where everybody's bread is buttered. He's a pragmatist. You could deal with him. Well, no more. So the situation is not going to get better before it gets worse, it looks like. As we talked about before, whether the administration anticipated that Hormuz was going to be an issue or not, and whether they really thought about, okay, well, the economy is in a different place. It can take oil that's a little bit more expensive. We've been talking about this for a few days now. It's not oil. Oil is just a little piece of this thing. It's fertilizer. It's aluminum. It's all the refined products that go into plastics manufacture. All of it is trapped in the Gulf. All of it with significant economic implications and significant inflationary knock-on if the strait's not open soon. So it's not surprising that the markets default to lower bonds. And unless the Fed chair says something just astronomically supportive, which seems very unlikely, that's the path of least resistance.
Rich Clarita, who's now a former Fed vice chair.
Yes.
He just said that
former Fed vice chair.
He says that oil futures show that this inflation problem will be dissipating.
Okay.
That's not what oil futures
That's
are
not
showing,
what
my
oil
friend.
futures show. And this is why in most trading operations, the analysts do the analyzing, the academics do the academics, and the traders do the trading.
I don't know what he's doing there. What we do know is the Fed is effectively telling us that they think this is going to be short-lived. That's what those forecasts tell me, Ilya. The Fed is not going to commit to this being a huge problem yet because they obviously don't have all that information in front of them. We're speculating that this will be.
Yes.
If this meeting was a month out from now, I mean, the next meeting is in May.
The market may well walk away from this saying they didn't sound the alarm. They didn't not sound the alarm, but they didn't sound the alarm.
Powell's tone is going to matter so much.
Yes.
Tell us what's uncertain about this. Like the oil stopped flowing. You know, Powell gives any sorts of details. The comparisons to 2022 are going to be running off the charts.
Yes.
So just don't say the transitory word, sir. That's really, you can tell us that you think it is through your projections, but do not say the word. Maybe this is the threading the needle that the market needs here today. If it's any part of the market, though, it's not metals. Metals are getting hammered here again. This is killing me. Am I allowed to say that? Killing me? Oh, there's that bear flag we were talking about. Looks like it did happen.
I'm not mad.
I am. Certainly at myself.
We did talk about it.
When does the pain end, Ilya? It's another new low in volatility today. That is the bugaboo here for oil traders. I want to point to the 50-day moving average, which we have not put a close below, and I need to go longer than that because it's been such a long time. We haven't put in a close below our 50-day moving average since August. If we're taking a look at our chart, today could be day number 1. Would that be a major warning? Would that be the towel for you? Would that be just like, hey, if I'm a bull in this in any form or fashion, it's over. Pack it in. The major trend support is dead.
I am holding both sides of this market, and the difference is duration. I think, frankly, it's very impressive how well gold has held up, given what's going on in the dollar and in yields. If traditional gold were what we were looking at here, the surge in the dollar and in yields would have crashed this market back somewhere, I would think, in the direction of 4,400, those spike lows from earlier in the year. I would think surely a test of 4,200 wouldn't be far behind. Look at what's going on in bonds. Look at what's going on in the dollar. This gold market is holding up remarkably well, all things considered. So I'm short the futures, as we've discussed, because it looked like it was going to leak lower. But that's a tactical idea. On the flip side, I'm also short puts, but 60 days out. And so what I'm looking for is for gold to have some kind of a kerfuffle, some kind of a adverse reaction to what's going on with inflation expectations and the dollar and yields, and then to go back to, I'm a deglobalization asset and the trend is up. I'll see you in 3 years.
$50-day moving average. That's the ball game. Silver, likewise, feeling worse zone. Absolutely. Now definitely in the feeling worse zone.
Yeah, I mean, if you close in the spirit of the 50-day moving average and sort of coinciding with horizontal levels, there's the February 17th low, 48.54, let's say. Let's round it down, 48.50. You close under 48.50. The next stop is the 46-ish area. So if that's what it is, then I might have to rethink those puts. But we'll see.
I mean, life comes at you fast. Silver here, that uptrend bounce that we had, now losing the uptrend from the lows in February and the beginning of March, running the past few days into the 50-day, into the 1 week, rolling over below the 1 month, all of which have a negative rate of change here, and volatility falling to its lowest levels that we've seen. Forget this little jostle jiggle here, but realistically, volatility now is back to where it was mid-November. This is not the place for longs. My metals, whatever I've done in metals the past 6 weeks, has been getting smoked.
Well, and this is kind of the idea behind the way I've been doing it, right? Because the futures are essentially a delta one kind of a trade. I've got the futures on themselves. They're not options. So I want to be exposed to what's happening near term that way. And then with the puts, 60 days away, a little bit less now, that dilutes delta exposure. So the idea is that I want to be bullish longer term, and I want that to matter more longer term. So as time expires, my exposure to delta gets greater and greater on the puts. And so the idea then is I want to be less exposed to the long side now and very exposed to the short side, and then over time have there be a handoff. And then I just have to worry about when to get out of the futures. But when this thing is going to break down, if it breaks down, the idea is, well, at least I'm not so exposed on the long side because I'm so far away in delta duration terms that the futures end up being more impactful. And the trade ends up making more than it loses, essentially, on the other side.
That was the case here in copper as well. Copper, the volatility continues to come in for what it's worth. You can go over to CPER real quick to check that out. It's a 35.7 IVR. But as you can tell from CPER, that's a pretty nasty little gap open lower. This is a future so over to HGK6. And whatever neckline support bounce off of the February 2nd low that's been holding us up here near 560, that is giving way in a major way today. This is a 3.2% loss. So a little bit of a rollover here. This position had been working out neatly. Now it's not. 5556. Another one of the metals punching me in the face today. We'll have to watch for the close down here, Ilya, but this is starting to look technically, I want to say, unhinged in all the places where you don't want it to be. So there was growth holding up a little bit better, maybe liquidations for safe havens. That's still happening. You know, the market's telling us that Clarita can say that it looks like that oil futures say this is going to dissipate soon. If it's going to dissipate soon, why are people still, getting away with throwing out safe havens to raise cash?
Yeah, it doesn't look like it.
Does not look like
the market has that confidence and has the same idea of what soon means.
67.19 here in ES. I know we're working products right now, but again, below 67.15, that is a bearish engulfing bar, outside key reversal here in the S&P 500, because we would have moved above yesterday's high and we would be closing below yesterday's low. Powell, of course, could change all of that in a heartbeat. But when we look at the structure of the stock market, Elliot, before his remarks, I would remind everyone that continuous ES contract ran into its 1 month moving average today and has immediately fallen back from it, which is to point to oil as a catalyst for all of it in this market. I know we just talked with metals here, but gas, oil are pushing higher after some of the more headlines. If you're watching Twitter like I am, a ballistic missile just hit a energy and oil facility outside of Riyadh. So Iran is now clearly tit for tat. You want to hit South Pars? Then we're going to go after Riyadh.
And by the way, Saudi patience for this will run out eventually. Even Saudi patience eventually runs out.
Saudi patience aside, 95.50 here. So it's basically an unched day after creeping back up towards 99, 100. Brent crude, which is more directly related to what's happening coming out of the Gulf as the global benchmark, you can see that's still very much holding on to its gains of 3.66% on today's session. You had mentioned the contract, the European benchmark for natural gas, which has been going bonkers recently. Today, that's up another 6.2%. So yes, oil itself, CL may be in, but if only this reasserts the view that right now, given the broader energy market sweep, we have to be thinking about selling puts on pullbacks. There is a short-term call spread here that I could liquidate for a profit here, and the spreads are certainly tighter than they were on first call the other night. But anytime a pullback here, that headline from earlier today, summer gas standards are being changed. It's not even spring yet. What kind of disruption are we talking about that requires summer gas standards to be changed? a very significant one, which has been our concern here the past few days.
Yes.
So, Ilya, I'm at 29 days in the CLK6 contract. I really, in terms of this disruption working its way out, if we get an off ramp, you're not going to see it per se in CLK6 because you're going to need several weeks to get oil pumping back through the pipelines and for the supply to rebuild. Oil does not just move through a pipeline.
It's not magic.
It's very thick substance.
There are physical things that have to occur.
A different viscosity than water. And so it moves through the pipelines a little bit slower. And so to that end, I would think that if the market is convinced that this is a problem that has now gone away, it's going to be the mid portion of the curve, your June, July, August expiries, where you're going to get the biggest declines in price because the tightness in the market and the spot market is still going to be present here. Even if we get a ceasefire tomorrow, they're not going to get the oil back out of the ground that's been shut in the next 29 days. So if I'm going to be thinking about selling puts, that's what I'm getting to here. If I'm thinking about selling puts right now in oil, it's going to be in the CLK6 contract. I likewise want to give myself a little bit of time because I can go out a little bit further. So, 85, 86 here, maybe to start poking around. But 85, 86, 13 days out is still right around a 2 to 1, 3 to 1. And it's still giving you 65% probability of profit. The floor has been raised. If we punch through 100 or not, who knows? But I feel a hell of a lot more certain selling puts in oil than nearly anything else I'm doing in the market, which may not say much because everything else I'm doing in the market kind of is sucking wind. And it's been sucking wind for a few weeks here.
Yeah. I mean, you look at this and the price action is really telling you. It's telling you exactly that the market does not have confidence that this thing has unclenched. And it's jumping at headlines, sure. But in the grand scheme of things, where are you? And what is there to bet on? So, yes, vol here is relatively elevated, but frankly, in the grand scheme of things, an IV rank of 72, given current conditions in the CLK contract, I mean, that's just testament to how high oil vol has been to tilt this average, that we're at 72 and not something meaningfully higher. So is this the place in this environment, now that you've come in a little bit, frankly, on IV rank, just because you're in this sort of holding pattern now? The market seemed to have kind of put in, here is a fair price for oil before Powell speaks and before something else happens on the ground. Let's see. But if it's already come in a little, how much sideways vol extraction do you really expect unless the war has a breakthrough development in it? And is there a breakthrough development? We've been talking here about an idea, and frankly, something to keep in mind here. We just passed the key deadline. There was a Persian holiday on March the 17th that the crown prince in exile was trying to get people to come out into the streets for.
He's a clown, but go on.
There was an opportunity here, for example, for U.S. and Israeli officials to say, we're not going to bomb that day. And let the people actually show where they're at. And let the street show where it's at. For now, that's not going on. And of course, they're not going to come out while there's missiles raining on stuff. So the question is there some kind of a moment here where, obviously, we just took out the commanders of the Basij, we just took out the National Security Council head. There's going to come a point here, and maybe it's not yet, where there really will be a breakthrough. And that breakthrough is going to look something like, we pause the bombing to let the people uprising occur and see if it does. And then see if there are still any security services to suppress it. And if there's not, well, that's your turning point. But until that happens, maybe you've seen all the vol contraction you're going to see.
No, the vol contraction with prices staying elevated to me is the gut wrenching. Oh, the market's no longer uncertain that prices are going to be staying up.
That's right. That's right. The market has decided that the bad thing has occurred.
So where does that leave us? Ilya, I recall a conversation about a week ago where we were looking at 88 prior to the market closing out its book. And then we finally got that breakout and we've been staying above 88. So keeping in mind that 72.4 IVR, thinking 85, 86, maybe getting a little bit closer towards that 88 level, 87, 86, 87, 85. These are the places where I feel like we should be poking around on dips. I'm going to do it there. Lord knows that I need the help. And I just have far too many deltas in oil, but it's what's going right now. So someone wants to fill the 86, 87 short put spread here, add in another short put spread in oil on a day like today. Happy to do it. Makes sense to me. Ilya, we do have just a few minutes left here. So we're just going to bump over to the dollar real quick for a brief technical note before we head back to the wind down the show. DXY yesterday fell back into support. We only touched on this ever so briefly, but former resistance still holding as support.
That's right.
And today it's not necessarily breaking down. So King Dollar with oil back on the up and up, not necessarily CL, but Brent with European and Asian gas benchmarks going higher once more. Gold continuing to break down. This liquidity phase of the crisis, it may have crested, but it's not over. And so the dollar to me feels like it still has some potential room to run to the upside here. That gold flag breaking down and the dollar holding its triangle breakout are the most important things. But Ilya, we're going to be talking.
And critically, by the way, the Fed didn't take away any rate cuts in the forecast and the dollar is holding up. The Fed is now the most dovish of central banks. We're going to get the ECB, the BOE, the BOJ coming up. All of them are minded to hike now. Not the Fed, and the dollar is holding up. Believe the price action, folks.
Powell speaking starting in 1 minute time here. S&P 67.23 beforehand. It was like 67.25 when the policy statement was released. So really no big jostle there. Powell's tone obviously matters most. On the other side of Powell, will it be March madness or March sadness? We'll see. We do have a bunch of ECB central bank rate decisions coming up over the next few days, including the ECB and the Bank of England tomorrow morning. So if you're trading 6E, 6B, euro dollar, pound dollar, or any of the euro pound crosses, keep those in mind. So Ilya, we need to run because we need to go catch Chair Powell. Hopefully he listened to today's show. Don't say the transitory word. You and I will be back later for overtime. So we'll break this all down for the good folks, 4 Eastern, 3 Central, but I'll be there first with Nick at 3:30 Eastern, 2:30. Last call. So good luck trading. Stick around. More Tasty Live coming at you next after a brief break.
Nicky, we are back, son, and nothing puts a smile on my face like this, man. Mr. TP, Tasty Extra. How are you, TP?
All right, guys. Time to sober up.
Drink some coffee.
Why were you drinking all weekend for St. Patty's Day into Tuesday?
Yeah. Nick, both hands.
I have never seen you with a drink in your hand, and I've known you for decades.
I'm not a big alcohol guy. It doesn't do a whole lot for me. And Tony,
well, it does a lot for me when I look at you. I got to tell you that. It certainly makes it a lot easier.
Whatever. I don't want to say in all seriousness because it's not the end of the world. But I don't know, like Tony. I don't know if you enjoy wine. Our old partner Scott Sheridan. He was a wine guy. He could select wine from 1,000 different ones. Me, it's okay. It's a liquid. It has a general wine flavor. And part of that is I don't have a good sense of smell. I do not have a great sense of smell. I blame that. So, and I don't know. It's whatever. So, Tony and Nick, I don't know if you guys enjoy wine or not. Personally, I could take it or leave it.
I am subject to drinking more of it because of my wife. She likes to get inside the bottle to handle me for most of the night. So I have to drink some wine with her.
I haven't got that like taste for it. Like I don't know.
I'm not like Scott. Like I drink anything.
Like, it's just like generally I either like the wine or I don't. It doesn't really.
I go Italian just for my pseudo heritage.
So the question is, after your wife has her fill, is it one of those, does she whip the glass at you or whip the bottle at you kind of?
I'm going to take the fifth.
No, it's more like a.
I'm going to take the fifth, and I'm going to change gears here. Since you live in Texas, oil's at $98. Have you gone with your? I know how you can search water with 2 sticks. Can you find oil with 2 sticks?
Oh my God!
Gone over
the things
the divining rod or something. Can you?
I'm digging, Tony. I'm digging. As soon as I sign off with you guys, I'm going outside and I'm digging.
All right. You probably should. Up almost 2.5%, 3% here.
So the big thing, and I don't ever remember this being true in Illinois. In Texas, you can buy, let's say you buy a house and it's sitting on a piece of land, whatever, half acre, whatever. You got to make sure that you have the mineral rights. It is possible to buy a piece of land, build a house on there, and only own the surface, and you don't own what's underneath. So a guy like Nick could say, oh, I own the oil underneath your property. Nick comes out with a derrick, starts drilling for oil, nothing I can do about it, at least as far as I know. And that's called mineral rights. And the other big one, the big one that's heating up is the whole water thing, the water rights. So oil's important. Water is becoming a bigger issue here. Anyway.
Okay.
Yeah, we don't have that issue here in Illinois. We got nothing. We just, it's mostly just taxes. Like there's nothing good on our property. It's just taxes and crime.
And you're happy to pay them, Nick. And
I love it. I love it here. It's snowing. It's freezing outside. The wind, like it makes your face all dry. It's wonderful. It's wonderful. TV.
Oh yeah, and when your nostrils freeze when you breathe in,
right?
It kind of seizes up the nostrils,
right?
And I still think March is the best when the streets are still like the sidewalks are still frozen. And there's still that little path, that little footpath.
Oh yeah, the
of icy crap.
Yeah.
And it's all dirty and gray and stuff. That is peak
should come back,
Chicago
TP.
winter.
You should come back. Just come back.
You know what? It's there. I have warrants outstanding in Illinois. So here's, what's interesting. So everybody's looking at this FOMC meeting. Understandably, I get it. What's interesting, Nick, is over the past day, the probability of a rate hike has gone from basically 0 to non-zero, has gone from 0.1% to 0.9%. The possibility of a 25 basis point hike. I don't know if you guys talked about that yet, but it's changed over the past. It's literally overnight. And those numbers, go to the CME FedWatch tool makes it easy. Go to the CME, you look at the numbers, and it shows you all the upcoming FOMC meetings, and the probability of a rate cut has dropped, and a rate hike has gone from 0 to non-zero. And part of that is fears of inflation, obviously. With oil, like Tony, like you said, oil's back up to $98. At least the futures are.
Volatility is bid, TP, too, up $1.23, flirting with 24. I'm talking about / VX here. I mean, it's higher than it's been, even the S&Ps were down 35 as they are right now earlier today. So volatility definitely, maybe for that reason, maybe for oil, maybe for all the reasons.
I think it's all a big ball of.
Yeah, we never know.
Volatility wax, but I think right now, at least the story is, and I'm not a big news guy, but the point is, this is right now, this is kind of a news-driven market, and apparently somebody blasted the Iranian oil feed, like the quote-unquote upstream stuff. Okay, fine. Crude oil's up a couple of bucks. SPOs are down. When I last checked, they were about $20 when I last checked. But yeah, Tony, the uncertainty is high. They're jacking up the volatility. People are scared.
Yeah. Yep.
Understandably.
Yep.
So,
sure.
All right. Since everybody is looking at the FOMC meeting this afternoon, coming out at 1 o'clock, I did a little analysis to you people about looking at ZB versus ZN volatility. Now, this is something that I've used for years when I first started trading down at the Board of Trade, trading 10-year note options, and I would look at the 30 years and just sort of started to generate generate these ideas. What I'm talking about is, and Nick, this is the nice thing about ZB and ZN. They're both $1,000 a point. Their futures tick sizes are the same. In other words, 31.25, right? The options still both trade in 64ths. So you can really do kind of an apples to apples comparison between ZB and ZN. The question is, which one, if you wanted to sell premium in there, maybe you don't want to sell strangles in there. Okay, maybe you do, maybe you don't. Maybe an iron condor. Maybe a short call spread, maybe a short put spread, something like that, because volatility in bonds has crept up a little bit as they've sold off. So here's the way I approach it. Is this the best way? No, I'm not saying it's the best, but it's a way that I use to just pick ZB or ZN to see if one offers a little bit higher return than the other. So let's go into the first slide.
Okay.
Or the second slide, I should say. And this is just a graph, okay, of the 30-year minus the 10-year yield. This is the interest rate differential. And one of the things, and I know, Nick, you're going to bring this up because you always do, is you say, well, I know that interest rates change in the 30 years. The amount they go up or down is different than the 10 years. You're absolutely right. The differential does change. So back in, let's say, January of 2025, the differential 30-year yield minus 10-year yield went from 0.2, 20 basis points, all the way up to 60 basis points, 70 basis points. You're saying that isn't stable. And you're absolutely right about that. But let's go into the next slide. Actually, the next 4 slides. It's all kind of the same thing. So that's looking at 14 months. Okay, if we go to the next slide, that drills down into, it's the start of that graph. It's from December 2024 to April, that 4 months. So when you look at it in a tighter time frame, it went up maybe 10 basis points. Okay, maybe. And even shorter term, it was more like 5 basis point changes. If you go to the next slide, it's even less. So what I want people to look at here is here's going from April to August. Again, a relatively flat line, which means the basis between the 30-year yield and the 10-year yield isn't changing much, which means that they're both moving up and down. The yields are moving up and down kind of the same. Okay? I'm going to get to that in a second. Let's look at the next couple of slides kind of quickly. So we go from August to Dece, then in the next slide. And again, very flat. Dece up to the current time, pretty flat, within, let's say, 5 or 6 basis points generally. And this is going over 4 months. If you go down into an even tighter, let's say a month, it's pretty flat stuff. Let's go to the meat of what this is. So I like to look at implied volatilities. There's another metric called DV01. It is the dollar value of a 1 basis point change in yield of any treasury. Any treasury. Could be the 30-year, the 10-year, the 5-year, the 2-year. It doesn't matter. They all have this DV01. What it means is if the yield on the underlying bond changes 0.01%, 1 basis point, the notional value of the future will change by a certain dollar amount. So if here the DV01 is 134.71 for the 30 year for ZB, right? If the value of the bond is, what are the bonds trading, to 115 or something like that?
Yeah, 114.5 now. They were 115 this morning, a little over.
So let's just use 115 to make the math easier.
Sure.
So the value of that bond is, remember, wait a second, it's $1,000 a point. So if they're trading at 115, the value of the bond is 115,000. If interest rates drop 0.01%, 1 basis point, the value of the bond would theoretically go up from 115,000 to 115,134. Okay, that's what that DV01 represents. You can get the same thing for ZN. The DV01 for ZN is about half of what it is for bonds. Why is that the case? Because a 30-year bond is more volatile or is more sensitive to a change in yield than a 10-year is. And that's because of duration, and I don't want to get into the whole bond math underlying that. That's a different, you don't need to know that part. What you need to know is what the DV01 represents. And here we can see DV01, 134.71 to 64.35. If you divide those, it's about a 2.09 ratio. Okay. So what it's saying is that bonds for 1 basis point change would change 209 times what notes change. And we do this when we trade the note over bond. You know, we'll buy bonds, sell notes is kind of a pairs trade. We've seen this ratio up to like 2.5 or down to 2, that sort of thing. The ratio of the DV01 moves around. So that to me is a metric of volatility. But wait a second, what about IV? Let's go to the next slide. So if that is DV01 divided by the 30-year divided by the ZB divided by the Z, and the ratio is 209. So it suggests that the ZB is 2.09 times more volatile than ZN. But here's what I did. Next step, let's look at the actual implied volatilities of the ZB and ZN options. Do the exact same thing. ZB IV is, what do I have, 11.2, ZN 6.4. The ratio is 1.75. It's lower. Okay, a couple of reasons for that. Remember when we saw the volatility of the yield? In other words, it's not a perfect up and down one. Maybe one's up 105, 1.5 basis points. Another one, or 0.95 basis point change from 1 month to the next. That sort of slippage away from the parallel yield curve is part of the reason that happens. But in practice, what it means is that if we go to the last slide, the reason that's happening is that the IV of ZN is relatively high compared to the IV of ZB. That's all it means. So if you did this, and I didn't do this exercise, I think it was worth it. If I took the bond volatility to 11.2, divided it by 2.09, I'm going to get something under 6, right? Probably, under like 5.5 even. So what that tells me is that the ZN volatility is a little bit higher. Is it wrong? No. The market isn't wrong about this stuff. But if I'm going to choose a short premium strategy and I don't have anything else guiding my behavior about choosing ZN, choosing ZB, the yield curve is going to do this or that, I don't know anything about that. Tell me where I can get a little bit higher return on my defined risk strategies. I look at these ratios right now, it's pointing towards ZN. That's how I would choose between the two of them.
Makes sense. Makes sense. Good job. TP, you always bring in the tea, my man.
What do you think happens with bonds coming into the FOMC
Yeah, go to your crystal ball. He's putting you on the spot.
I don't think so. I sold some like true to my word. I'm short some premium in ZN right now.
Yeah.
I might take it off at right before, but it really hasn't come in at all. I know it's that's what it is. Tony, you're absolutely right. The vol's bid. I don't think anything's going to happen. There's going to be the S&Ps are going to be up or down another $25 in the 5 minutes after. Okay, they're probably going to heave around. Personally, I don't think it's going to. I think they're going to keep rates the same. I don't think that's the headline today. I think people are watching it, but I think, Tony, to your point, the what's going on in Iran and all that stuff. I think that headline is dominating the market today, as opposed to the FOMC.
Very
That's
good.
my take.
I totally agree with you. I totally agree. That oil. Put it all in there as oil trades 98. This is the area that it's kind of fell from before. We'll see if that still happens. Volatility definitely bid in there. If you look at the Ivy rank in oil, it's 78 now. It's moved by about 7 or so. And last time I looked at OVX, semicolon CGM.
You know what? Hey,
yeah, go ahead.
Just to put a cap on this, Tony, it seems like the times we've seen this before, the shooting wars over in the Gulf, we see oil at 120, 130, 140, that sort of stuff. We're not seeing that right now. I think that's interesting.
Well, let's hope we don't for the sake of humanity.
Yeah, no
but
kidding.
102 or just under 102, up around 6.5%, a little bit more. There it is, 102
Oil
right now.
volatility.
On oil volatility. Yep. All right, TP, we're going to take a quick 90-second break. You want to stay tuned and watch this. We got Rob and Maria coming in. We're going to talk a little bit about markets, of course, but we're also going to talk about March Madness. We're going to take a little step back, have a little bit of fun here. As the EME S&Ps are down 50, that's 0.75 of a percentage point. Russell's down 1.25. Dow down about 1%, which is $460. NASDAQ down 190. Great scalp on you from trading the NASDAQ from the upside.
I mean,
you didn't want to take the 20 handles. Now you love the 20 handles. I know.
20 handles are good, but I gold and silver, not good.
Gold and silver, not good.
They got me. They caught me like a.
Odd, down $140 on gold, and silver down $3.31, 4% versus 3%. We'll be back in 90 seconds. Thank you, TP. We got more after this. Rob? Nikki, we are back, son, and enough out of you. We've got these guys in the house. We got Rob and Maria. Bring them on, please. The moment I've been waiting for. Slow clap.
Good morning, everybody. Thanks for having us here today. I'm Maria. This is Rob. And I have to tell you something. He is so excited to be on the show that he's speechless, which is something that never happens.
That's true.
Yeah, I know he's definitely not speechless, okay? I know that. Rob is never speechless. So I know we're going to get a lot from Rob today. No problem.
So how are you guys? How have you been? It's been a little while.
We're very good. Very good. Just trading away. Just everything's rolling along.
What did you trade today?
What didn't I trade today? I'm just getting prepared for the FOMC, basically.
Okay.
And you got
everything that was 70 and 80% up, I took off because you never know what he's going to say.
Makes
so
sense.
I took my money and ran.
Mm-hmm. Since we started our YouTube channel, we built a studio in the basement. I hear up there yelling in Italian back and forth. She trades with AI every day with you build an AI agent, and it's just for ourselves.
Basically, when I first started, it took me about 9 months to get her all pre-programmed, and I have it all preset that if I have a stock symbol and I want to know about the stock, I just input that symbol and she will give me all the presets that I need to make a decision on that trade.
So you're trying to put me out of business is what you're doing.
Yeah, I mean, hey, we're getting replaced very quickly, okay? This is moving quicker than we thought. So, but you guys use the API. So a lot of people have used the API and are doing these sort of, programmatic trading. Is that how you're doing a lot of what you're doing now? And are you taking kind of the ideas and things that we've talked about here before and kind of programming some of that positioning?
Well, basically, I trade primarily NQs.
Okay.
And that is only because I remember a long time ago, they said, if you had only one trade to make, what trade would that be? And that stuck with me. And you guys said we would always do NQ with the ES.
That was Nick and Mike. Yeah.
Yes.
Yeah. Gun to their head.
I was doing those, but I've graduated to the NQs now. the naked puts with the NQs. That's what I
You're
meant.
trading this morning. I saw MU come across and Synopsis and
Same thing, naked puts.
naked put. All
I
naked
got
put.
out of MU because of the earnings.
Because of the
You
earnings,
never know
yeah.
what's going to happen.
On February 20th of 2020, we did not know what a put and call was. We started watching. Tom and Tony were great. Don't get me wrong, but they're a lot of fun. The real business end of this stick is Nick and Mike Butler. And we watch Mike in his whiteboard, and Nick does something called I don't even know if he still do it, Anatomy of a Trade. And I would watch those hours and hours and over, and I made notes and everything. And fast forward to today, I will be doing 35,000 zero DTE SPX on Tasty Trades platform this year. And it generates about 100% rate of return. I mean, it's just a nice steady. We started a YouTube channel, and since October, we've been tracking a $30,000 account and $1 million account. And both of them are up. The $1 million account's up like 500 grand since October, and the $30,000 account's up like 15 grand. All just based on that. And then we do the Crazy Ivan thing based on the NQs. You guys said ES, but Maria, former banker, looked it all up and.
Yeah, I'm more comfortable with the NQs.
With the NQs. So.
But we do have something called the Crazy Ivan, which is just a glorified naked put on the NQs. And basically, we only put them on. I only put it on if the market is down at least 300 points, and then. And then I would put it on only if I get another 200 points down. So it has to be a major crash. And, and I asked for an exorbitant amount of money.
I didn't tell you, but they want us to come on top.
You've been buying the dips.
So you're selling puts into bigger down moves, pop and volatility.
Exactly.
This is like, volatility.
It's a classic trade.
It's a classic
at market
trade.
highs or
a classic trade, and we trade completely differently. I go in 45 to 60 DTE. I always go in at 12 delta. I used to do it every day because we live on the beach, and I like to go swimming and surfing every day, but she got all pissed off at me for she watches the charts constantly all day long. Once I got the robot going, I'm never inside, right? It's the ring.
And I don't need you. See, I used to get pissed off because I depended on him to tell me about this stock and that stock. Now I don't need him. I have my Vera, which is my AI. So all I do is ask her everything all day long.
And you take a screenshot of the Tasty Trade platform, you put it in there, and then she tells you what to do, or not what to do, but suggestion. And then you fight with her in Italian.
Not in Italian.
I love it. I love it.
So it's great. And things are great. It couldn't be any better. We're having a blast, and it's all works, and it's all because of you guys. 100% because of you guys. And, the other thing that people ask us on the channel all the time is, well, why do you trade at other brokers? I said, well, a lot of people argue about commissions and fees, and you guys are the lowest, but that's irrelevant. It's all about the slippage. You never talk enough about slippage. Fees and commissions are pennies, slippage are dollars. If you have 5 cents less slippage at Tasty Trade, that's $5 on a trade. If you can find a different broker and save 10 cents, who cares? Right. I'll pay 10 cents to save $5 all day long. And the other thing is tech support people don't know about is if you call tech support at Tasty, you got some crazy system so that my tech support calls always go to Marty or Quentin, no matter where they are. And so then your tech support people, they know what the hell type of trade. I don't know
because they speak Rob is what it is. They speak Rob.
The type of trades you are. And so that is actually really been very, very helpful. And the other thing is, I cannot tell you how many times you guys said all these, trade 30% of buying power. These guys are so stupid. I know math. I'm going to go 70, 80% buying power. And old Clink calls me one day and said, hey, Rob, we need $2.2 million and you got 30 minutes or I'm going to start closing you out. Like, what happened? And call Marty. What did I do? He said, how much buying power you were using? 70. He said, did you see the show? Yes. What did they say? 30. He said, now you know why.
So have you adjusted your trading to that now?
That's what
That's it. I go 25%. That is it. Hard stop.
Hard stop.
Because when I do my NQs, I'm in a little deeper than he is. My DTE is usually around 16 to 18, and I only go out about 32 days.
So your deltas.
My delta,
Yeah. And so we used to fear down days. We'd be sleeping at night. Oh my God, it's going to go down. We're going to get a margin call. Now we go to bed. We're like, please, Maria, please God, help Maria, help Nick, help Tony, and please make the market go down 400 points tonight. Please, I'm begging you. We need it to go down so that we can get into the market, so that everybody else is panicking, and we're selling stuff that we used to sell for 150 for 600. We're cleaning up. It's the easiest money you ever made because you got
there's risk. Everything's risk.
Right. Your buying power is your risk and some.
But I think the key here.
I've seen the videos. Roll down. It's fine. Don't worry about it.
The key here
all
is
I can tell you is since February, like last year, I had to roll one. Right. I rolled once, and I rolled it because what I do is I'm at 12 delta. So if it gets to 250 before it gets there, I roll it. That's what I do. And so this on the cues. I had to roll it once, and that was in October, and I rolled it to January, and I got out in November. So the other thing is I always close at 25% profit. So I'm really conservative. She's the gambler. She's the gambler.
50%. I know. I squeeze us.
You're crazy.
No.
Let's switch. She makes more money than me, so
let's switch gears for a quick second here and talk about gambling, because this really is gambling. You're my March Madness guy. Full disclosure. Well, hold on. Full disclosure.
Right? It's the same. It's all math. For me, it's not gambling. It's all math. It's one of the reasons I like Hood is because the guy said, someone interviewed him and said, well, people are really against gambling, and gambling. He said, well, what's gambling? And they said, well, gambling is when you pick the Chiefs to win the Super Bowl. Well, he said, oh, we don't have gambling on our website. Oh, no, you don't. What do you have? Predictive markets. Well, what do you do in predictive markets? You pick Kansas City to win the Super Bowl. Isn't that the same thing?
Yeah. So I would say
they figured out how to get around. So let's talk about. Well, let's not call it math. Let's call it gambling. Okay.
Sure.
For those of you that don't know, my background is my grandmother and grandfather were college professors at Princeton with Einstein. My grandmother was a mathematician. She was a German professor. They translated German back and forth. They always spoke in German. My grandfather was a physicist and also a statistician and mathematician and instructor. All my aunts and uncles worked at Los Alamos on the bomb. They were nuclear physicists. On Sunday nights, all we talked about was gambling. Not gambling. All we talked about was numbers primarily. I knew that my phone number was the square root of 2 when I was 8 years old. At 10 years old, we would always play cards because it's just math, right? And so I learned the game of blackjack when I was 10. I started dealing at 12. I started counting cards at 14. My dad started taking me and my brother on cruises with him, and he would play cards, and he would look at me, and I would count the cards because I could count a 6-deck shoe, which very few people can do. It's just a learned skill. It's all just learned skill. It's just math to me. It's just math. And so then I started getting kicked out of casinos and became a lawyer, and things progressed. I started the first online sports book, and then Janet Reno, as the attorney general, invited me to stop doing that. And I started an education online company and took that public, retired at 42. And that's when Maria and I started trading all the time. And then we did options with you guys. So that's my background. Okay. Mm-hmm. My grandparents gave me an abacus at age 10. My grandpa gave me an abacus at age 10, slide rule at age 12, book of random numbers at age 14. I looked at him on my 14th birthday, dead in the eye. And I said, Grandpa, why do you give me an abacus at 10, a slide rule at 12, a book of random numbers at 14? Why only on those birthdays? Nothing on the others. He looked me straight in the eye. And he said, if I gave you at any other date, that would be odd. Grandpa took 5 years to land the stupidest grandpa joke of all time. This is the kind of weirdness that I come from. So please bear with me. All right. So for those of you that don't know, let's pick a day. February 9th, 2024. I came on this show. I told you in every sporting event, and by the way, I don't watch sports at all. I've been making millions of dollars gambling, never watched sport, haven't watched sport in 20 years. Super Bowl, doesn't matter. I told you at every single sporting event, there are 3 teams on the field, the home team, the visiting team, and the officiating team. Nobody looks at the officiating team. February 9th, 2024, I told you Bill Vinovich was the referee of the 157 referees that had ever refereed NFL games. He was at least a touchdown further under. I told you, take the first half under, the second half under, the first quarter, second quarter, third quarter, fourth quarter. If there's overtime, take the under. And Nick will tell you, who else do we always take, Nick?
Those money line dogs.
The money line dog. Look how smart he is. Look at you.
pays attention.
There's not a ton going on up here, but it's okay.
It wasn't mine. That is just awesome. Money line dog. That's good for you. So how'd we do? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 and 0. My phone goes crazy ever since 12 and 0. Thanksgiving this year on my YouTube channel, I told people money line dog and the under. Always money line dog and the under. We went 20 and 10, won another 120 grand. When you gamble, again, it is silly how smart you guys are. Bet small, bet often. Thank you. Bet small, bet often, right? Take how much you can lose, not how much money you have, how much money you can lose, divided by 100, that's your unit. If you can lose $100, your unit is $1, right? Bet small, bet often. It's exactly what you guys say. It's scary, right? It's scary. I can lose $1 million, so my bet is $10,000. I play blackjack for $10,000. I bet on sporting events for $10,000. But the money is immaterial. Whatever your number is, divide it by 100 so that you don't care. That way you can go swimming and surfing and not give a crap about what's going on in the games. All right. So NCAA, what is the most popular days in Las Vegas? It's not Christmas, it's not Super Bowl, it's not World Cup. It's the first 4 days of the NCAA starting tomorrow. Impossible to get a room unless you're a high roller. Go to Caesars Palace Sportsbook. It's a blast. Okay, why is that? Because we have 48 games in 4 days. It is a gambler's dream. Dream come true. Excuse me, not a gambler's dream, a predictive markets individual's dream.
There you go.
It's a dream come true. They are going to be giving away money in the next 4 days. Let me explain how. And I know, Nick, I heard you this morning giving away all the secrets. I heard you. You don't think I listened.
It was a teaser. It was a teaser of what's to come.
But you were spot on. So at least, again, I know you're listening. I'm so proud of you. So here's the way it goes. You're always going to take the money line dog and take the under. When I say take the money line dog, that means you're going to, because they're the dog, let's say I want to, and it's always to win. I want to take the money line dog and I'm going to do it to win 10,000. On a typical game, say it's 5 or 6 is the spread, I'm only going to have to put $7,000 or $8,000 up. So at the end of all this, my buddies will say, "Oh, Rob, we went 40 and 18, and we really killed it on these games. How'd you do?" And I'll say, "Well, the 48 games, I lost 30." They go, "Oh, you went 18 and 30. How much did you lose?" "Oh, I won 120 grand." Why is that? Because on the winners, I win 10 grand. And on the losers, I only lose 3, 5, 7 grand, whatever it is. So I can lose a lot of games because at the end of the day, it's about how much money you make. It's not how many games you win. That's immaterial.
It's P&L. We say this all the time.
P&L, right? P&L. I'll tell you a story about George Steinbrenner sometime. My dad put him on the U.S. Olympic Committee. He was head of the U.S. Olympic Committee. A great story about what your focus should be. We don't have time for it. Beth gave me a hard 5 minutes. Let's keep going. We got 2 minutes to go. Let's keep moving. All right. So now, when it comes down, and I hope somebody's recording this. You can go back, listen to it in slow motion. You got until tomorrow morning to make the bets. All right. So now, we got it. All the games, any game, football, basketball, hockey, doesn't matter. As Nick told you this morning, money line dog and the under, always. Okay, why is that? Because we're not betting sports. We're betting math. We're betting against bettors that are, I'm not going to say stupid, ill-informed. No. So what happens is everyone bets on the favorite and the over. Why? Because the favorite, they say, "Oh, I get to win. Yeah, I want to win. I want to prove I'm right." And they bet on the over because everybody, score, home run. They love all that, right? So it's just like in options, right? It's like all I do in the SPX is I just look at I backtest 7 million trades every single weekend. I look at where are they selling premium. I don't want to sell there. They're selling there because there's so many sellers. They're only getting $1. I'll sell over here and get $2. It's just math. I don't care about the charts or who's Trump or any of that stuff. All I care about is where these, I'm not going to call them idiots, ill-informed people. So, okay, we got ill-informed gamblers, right? And so we're going to go the other side. So that's why we always take the money line dog and the under. Now, here is the dirty little secret about basketball in the college ranks. Not NBA, college ranks. They have what we call boosters, and boosters donate lots of money to the college, a nonprofit institution, to help the athletic team. Mm-hmm. Boosters are rich people who like to let's not say gamble, we'll say enter into predictive markets. And they would like to win some of their money back. So they go to the coach. I think Krzyzewski is retired, so we can say he was famous for this. Bobby Bowden was famous for this. And say, Coach, I gave you $1 million this year. It would be great in the first round if you covered the spread. And the coach would say, well, I don't look at the spreads. No, you don't look at the spreads. Of course you don't. But we are favored by 23.5. And I cannot stress to you enough how me and my other 25 boosters here, who each give you $1 million, who pay your salary, who give your kids now NIL money, it would be thrilled. We would be thrilled if you covered. Okay? So what happens is, how do you know they cover? And sometimes you'll see they'll be up by 22 points. It's a 23.5 spread, and they'll call timeout with 6 seconds to go. You go like, what are they doing? Right? They bring it in, and they leave the best guys in there, the superstars. They leave them in till the end of the game. And so they're going to cover. So as Nick said this morning, if it's a 10-point spread or more, maybe 10.5, you want to forget about what I said about taking the money line dog. You're going to bet the favorite, and you're going to give up the points because they're going to cover only in the first 2 rounds. Why? Because the coach can just leave the big boys in, and someone said, oh, you ruined the Sisters of Mary. You drove them into the ground. Blah, 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 blah. I say, hey, what do you want me to do? You know, these guys are really good. Look how good they are. They're going to be going into the NBA next year. Oh, my God. We beat them by 100,000 points. You know, the Sisters of Mary, that's okay. And the Sisters of Mary, you know what they say? We don't care. We got to be on TV. It's fantastic. And here's the other thing that helps you, the Rudy effect. The Sisters of Mary, unlike the big teams, the Sisters of Mary got a lot of guys that are in their 4th year, right? And the crowd's going, Rudy, Rudy, Rudy. And Rudy, some guy way down at the end of the bench who's been on the team for 4 years, has never played a single game, and his mom and dad are there, and his grandma and grandpa are dying sick. They're in a wheelchair, and they're going to see him play his last game. And the coach says, Rudy, get in there. Well, Rudy stinks. That's why he was on the Sisters of Mary. That's why he played four years and never got in. He's terrible. And now he's playing against some guys that are going to be in the NBA next year. Of course they killed him. It's fantastic. So what was the question?
Under.
So I'm gonna let Nick before we go here. You did a wonderful job. Yeah. I'm gonna give Nick. What are we doing, Nick?
We're doing the unders.
All the unders on every game.
All the unders, the Booster Buddy bets, the top 3 teams minus the spread. Everything else, money line dogs to win your unit. So our unit's $100. You can bet to win your unit total on the money line dog. Mm-hmm. Everything else to your unit. First half game unders. Bet them all. We're doing all that. Rob and Maria,
we're gonna put you on the spot. We're gonna do all these.
Thank you so much for coming on. We appreciate having you on. Where do we find you guys? I know we have mariashoetrade.com.
We are
Maria
on YouTube
now.
What's it called?
Maria and Rob Trading.
It's Rob and Maria Trading. I think it's not first Billy because I named it.
You have Rob and Maria on YouTube trading.
It's Rob, but it's something like that. It's look. We don't get any money out of it. We don't care. If you go and look at it, great. If you don't worry about it. It's fine.
Awesome.
You know what you can do is you'd be nice if I could get 5 minutes once a week or once a month on this freaking show. That would be nice.
I don't know.
We'll see how you do on these bets. Yeah, maybe we'll lay it on then.
I don't think we have that salary for you, Rob, laying around. I don't know. This is a tough one.
All right, let's take a quick
shout out to Frankie. You see the picture of Frankie behind me?
He's a devil, is right. That was the best caption you had up there. Good job, Maria. Good job, Rob. We'll take a quick 90-second break and come back. We got more Tasty Live after this. Peace, guys. Thank you so much.
Thank you, Rob and Maria.
Bye.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But I mean, stay a while. Take your jacket off.
No. I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on, take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
I'm just going to wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Hello again. It's Wednesday. It's FOMC Wednesday. It's also PPI Wednesday, right? A lot of things going on. So, as you know, last Friday the 13th, the close, that was kind of the final washout of all the selling. And on Sunday and on Monday and on Tuesday and into this morning, it was just buy. Because, I think we all have a decision to make in how we choose to put our money here or there. And, two extremes. One continuum would be you can use logic, discernment, the examination of historical trends, support, resistance, patterns, areas of consolidation, overhead supply, that kind of thing. to try to project where you think things are going and the circumstances which might occur that would have you dispatch that theory. Like, I'm wrong when this happens. So just straightforward logic and good sense. Or you could listen to the bloviating prognostications of a flatulent old man, and go with that, which seemed to work for a few days because people were buying based upon the war's over, we won in the first hour, oil's going to drop like a rock. That's a rock, not a rock, and so on. And based upon those soothing bromides, people thought, cool, stocks are on sale, and they dived in, and it worked. And during this, 3 weeks of war, it's worked a number of times. Just soothing words. It'll be fine. We've won already. They're rude to keep blocking the street because we've won. That's not fair. That's the big thing. It's not fair. It's like a 5-year-old. Not fair, not fair, not fair. Well, what is it? All's fair in love and war? Not really. The fact is that from a charting perspective, tops are in. And I expressed earlier this week concerns about a little bit of piercing here and there of some of those overhead supplies. But for the moment, things have turned south, and it's only happened in the past few hours. Because we climbed all through, to the wee hours of the morning. Massive, massive jump. Because people seem to have a really short memory. I mean, for example, there's the Trump coin, the meme coin, Trump coin. And some months ago, because it did dreadfully, but some months ago, he made an announcement that for the biggest holders of the coin, you could have dinner with me. And so people bought it up and bounced. Went up for a couple of weeks. And they had the dinner, and there were photos of the dinner, and it looked kind of like the meal you would get on an airplane. And then started falling again. And on Friday, just this Friday the 13th, it's like, big announcement, biggest holders of the Trump coin get to have dinner with me. And they bid it up again. Now this time it started falling almost right after instead of a couple of weeks. But my point being that, wait, didn't they just do this? Didn't you see the results from last time? A brief period of exultation and excitement, and then goes back to its broader trend. And that's kind of what's happened in the stock market in recent weeks too, because there have been declarations of victory and annihilation and obliteration and all this other stuff, and there ain't nothing been changed. And so once the fog clears and people blink their eyes a few times and look around, then the selling starts again. And it's also of aid that this morning the latest inflation data came out, and it is white hot. And this is with government data, by the way. I mean, it's not necessarily true. This is the government is telling us that instead of the 0.3% month-over-month inflation data, it's 0.7, over twice as high. And it's not an anomaly either, because this is the third month in a row that has been above expectations. So, and then Powell, who probably just stopped speaking, they didn't change rates the way I thought they would, but he's not exactly giddy with optimism either. So all of which boils down to the fact that we are down. It's not some calamitous state. We're down about 1% on the NQ and as much as 1.5 on the YM. But it's red. It's going the right direction. And there's been nothing. Just one last thing when we get to the charts. We're going to go lickety split because I'm yakking so much. One other important phenomenon recently with the charts is that between Monday and Tuesday night, a lot of the equity futures pushed above what I consider resistance, and then they fell below it because kind of a failed bullish breakout. And last night, between Tuesday and Wednesday, not only did they do it again, but they did it even more so and went to a higher high, except for the YM, which didn't do that. It went to a lower high. But the ES, the RTY, the NQ all made a higher high versus the night before. Glad I didn't see that. I slept through it. But that flopped even harder. So there have been attempts made to do a breakout, to shake off these Iran war blues, and they haven't worked. And we're at the lows of the day now, and we should look at some charts. So I'm going to go to brisker pace than normal because I talk too much. Here's the diamonds. We're down nicely on this, about 1.5%. We've got a new gap on this, that orange line right there. So yay team. So this is the lowest level we've been at since back in the day. This isn't my platform, so I have to like look around a bit to find out what I'm looking at. Oh, whenever this is, I guess back in November. So it's been months since we've been at this price. I made mention yesterday about volatility, and I spoke of, like if this were a stock chart, you'd want to buy it, it's bullish. Well, look at what's going on here. 15.8% overnight. This is UVIX. We've got a nice pop on this one, and just like I said, here's the spider, down a little over 1%. Hello. That's not what I asked for. There we go. We're slipping below the overhead supply on this one. And unlike the YM, we're not at new multi-month lows. We're basically in the vicinity of the lows we saw on Friday the 13th. So all the gains from Monday and Tuesday are gone. And so this is mercifully Tuesday's peak. Appears to be sort of putting a stake in the ground in terms of where resistance is. Over with the cubes, they're stronger in the respect that they're less weak. They've not completed their pattern. It'll take some doing. I have every confidence they will complete their pattern at some point. And then the heavens will open up. And so we're still kind of grinding around there as we have for months and months and months and months. SMH, which has been particularly hoofy. I know why it keeps doing that. I keep accidentally clicking on that, which is a feature I don't like. So I got to aim for the symbol. SMH is down a little, but it's red, and we're well below the broken trend line. And broadly speaking, it's looking good. So that's breaking down nicely. And there are other ETFs I've mentioned kind of just offhandedly as short ideas. Those are going, ironically, I'm not short them, but they're going really well. XLP is one. I remarked on this one a couple of weeks back. It's down over 2% today alone. As you can see, it's just an absolute free fall. This is the consumer staples. And then XLB is the materials. And this one been slipping nicely also. And in each of those instances, you can see a nice little price gap. Also, I stumbled upon IBB today as I was crawling through all these charts. And this is the biotech sector. And it's got a nice little top on that one too. Let's just slap a rectangle on this to make it a little more evident. Something like that constitutes the distribution top. So, food for thought. As far as, where to hide in all this mayhem, there's hardly anywhere. I mean, the one and only thing doing well is oil. The energy companies, XOP, XLE, your Exxons, your Chevrons, your Phillips, your British Petroleum, Petrobras, et cetera, et cetera. But, things like precious metals, which one would assume, it's war, let's get gold. The bloom's off that rose. Gold peaked way before anybody was even trying to find the Strait of Hormuz on a globe. We peaked on this one way back here, and we have been selling off paradoxically almost since the war began. So this is down hard today, over 3%. And as I've said, and I use these exact words, I normally love shorting anything as long as it has a ticker symbol, but I've shied away from precious metals based on nothing but, oh my, they're precious metals, there's a danger. No, they're not. They're just charts, and shame on me for ascribing any subjective properties to them that would ameliorate my interest in pursuing them. I mean, it's just that's just a chart. But it's too late. I'm not going to touch them. So gold's plunging. The miners, GDX, which until recently were just printing money. The miners have also turned south. GDX is down today well over 6%, almost 7%. It has been tumbling day after day in the past couple of weeks. And again, contemporaneous with the war. And even worse than that is the silver miners, SIL, which are down almost 7% today and have been also falling hard since this all began. I mistyped that. I meant to type crude oil. Let me just punch it in manually. Oh, hello. Oh, that's bad. Oh, you're seeing all kinds of stuff. Okay, edit that out, will you? This is, I hope nobody saw anything. If not, you should take me off the air. Forget it. Crude oil's up a little. How's that? XOP. XOP is at almost at a lifetime high. Not at a lifetime high. It's doing well. It's up. And is at a multi-year high. And then XLE is also blasting higher, but that is a lifetime high. As far as shorts go, and I'm going to have to just give like 2 seconds to each of these. I've just got a handful of those that I'm kind of fond of right now. There's Dollar Tree, DLTR, which is down today, about 3 1/3%. I mentioned this one yesterday, I think. I'm not sure, but it's got a nice little top there, reversal top. There's also HIMS, HIMS, which is down almost 6% today. Pretty much everything's down, as you might imagine. I haven't gone anywhere near energy, thankfully. But HIMS is reversing away from that pop it had seen about 7 trading days ago. Intuit, INTU, is also down a bit more than 2%. We have MasterCard, MA, huge company, and they are down about 3 1/3% also, a nice gap down on that one. Not sure what the news is related to that, but it's hardly matters. I mentioned Tiger the other day, TIGR. This is Up FinTech, TIGR. This is up about 4.5%, down about 4.5% also beneath that resistance line. A couple more, almost done. ServiceNow, NOW, and this one's down about 2%. And one last one of these, Qubit, QUBT. This one is down a little more than 3%. So just a whole hodgepodge of good stocks. This is zoomed in too close to really see the pattern, but it takes a while to load the charts. I don't want the show to be 2 hours long if I did the whole data set. So I just kind of zoom in and we can look at what's going on recently. You know what? I'll just wrap it up with Bitcoin. As I said yesterday, at the risk of jumping the gun, I went ahead and shorted Bitcoin again by way of BITI. And so far, so good. Bitcoin is down on this futures over $3,300. I had expressed concern we might get as high as 81,000. Maybe not. Maybe 70. However high it got, 76,000 is all she wrote. So it's a nice reversal today. And as I said, the instrument for this that I took is BITI, which is itself up about 4.5% on the day. So it is exactly the bottom of the hour. I'll say goodbye, and we're past another FOMC. What is that, the second one this year? So 2 down, 6 to go. But hope you're doing all right, and I'll see you here on Thursday. Good night.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
All right, so the X date on a stock, what does that mean?
The X date for a stock refers to the X dividend date, which refers to the dividend of that stock. So if you have a short in the money call and the extrinsic value is less than the implied dividend, then you would be at heightened assignment risk. So the X dividend date is something you want to make sure that you are aware of so that you can either roll or close that position to avoid that extra assignment risk.
What does it mean when you hear the term pin risk?
So pin risk refers to options that are usually on a round number and the risk of a pin at the end of the day or the end of the expiration for that underlying. So this typically is applied to SPX or very liquid underlyings that have monthly or weekly expirations where the stock price or the ETF price or the index price is right at an even number where a lot of volume and open interest is.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Ring the alarm, boys! Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mr. Vecchio, we are back, my friend, for the last call, and it's a bloodbath. Jerome Powell has left us for dead. E-mini S&P 500 futures down 80 points, touching the lows that we saw earlier this week. You got the NASDAQ down 280, the Dow down 758, and the Russell down 36. Russell and the Dow, the weakest of the group here. You got oil. It sold off about $2 in the last 30 minutes or so. It's now back up $1.51, a little over 1.5%, 97 here on the oil futures. Volatility perky, 2450. It's been steady and percolating all day today, near the highs of the session right now. You have bonds down 17 ticks. That's the lows of the session, or just off the lows after rallying off of the 113 handle. You've got gold and silver both getting just killed here. Gold down $150, about 3%, 48.56, and silver down $3.66, a little over 4.5%. Bitcoin as well, 71.2 right now. It's getting whacked. Oof. He had the purple tie. I thought it was time to buy.
It was time to buy. S&P puts.
Ooh.
Just got the wrong memo.
Ooh.
You know, there was all these questions about Powell potentially leaving as Fed chair. Will he leave in May? Will he stay on? And he seemed to indicate that he'll be sticking around. But it already seems like there's a new Fed chair here. And I wish I thought of this myself. But Peter Bookvar, who I believe has been here on the network before, tweeted this out. Oil's the new Fed chair, as it were.
Oh.
So, Nick, today you're looking at a market that's not getting anything that it wants from the Fed because the Fed can't give it anything right now when inflation's doing what it's doing. And then you had this really bad PPI data this morning anyway, which I was reading through the line items this afternoon. Apparently, fresh vegetable prices were up 49% between January and February, and egg prices were up 93.6%. So I don't know if those numbers are right. If they were, I certainly missed it. I bought a pack of Eggland's best eggs for $2.99 the other day at an 18-pack on sale. So,
ooh, nice.
But the reality here is that the market's not getting any help from Powell, and this problem in the Middle East, a lot of uncertainty, as the high priest of passive investing just told us. Which, hey, I had a reason to be such an old man yesterday on Let Me Explain, by the way. Now we look at the market here. Okay, thank you very much.
Yeah, you did. But come on. The Fed wasn't going to give us anything today. Did anybody actually think we were going to get anything? We've priced out rate cuts. We have no rate cuts this year. It's off the table. What's different from what he said than what we knew yesterday? I mean, he said the same thing for 5 years now. Wait and see. We're not sure. There's tariffs and uncertainty and blah blah blah. It's the same thing. Same thing. I don't see what's changed.
It's a good question. Sometimes people that are in positions of power like this, who have their hands on the levers of the economy, when they give their opinion, it gives the permission structure for people to finally change their mind. Imagine if you're more of a significant, longer term investor, you're a portfolio manager, wealth management, and you start liquidating positions at the start of March, but then Powell comes out today and does all these things and the market rips, right? How do you explain to your clients, like, well, the Fed is still supporting the economy. They're doing their emergency measures. Like, why did you get out of the stocks? So, but when Powell comes out and says, yeah, no, this is really uncertain, and we're thinking about 2022 a little bit here, by the way, stocks go down and you go, okay, well, this is why we're getting out. Well, look what happened in 2022, folks. Stocks were down most of the year as the Fed was dealing with the supply chain shock issues stemming not just from COVID, but from Russia's invasion of Ukraine. Who's to say that's not going to happen again? Good day to delever. 66.90 here on ES right now. Nick, I'm looking at the technicals there. You want to pull up that daily chart? I know you don't have a 1 month moving average on your screen, but if you did, you'd see today that we ran into it and were rejected by it. And with the move above yesterday's high and potential close below yesterday's low, which would be 67.15 or below.
You doubt me. I have my moving averages. Okay.
Beautiful. Well, there's your bearish engulfing bar.
All right.
There's your key reversal, right? And if this was on the other side, as I always do my little inverted chart test whenever I'm feeling bearish, just to hold myself intellectually accountable. Like if this was the other way around, we just had a bullish engulfing bar bouncing from our 1 month moving average, I'd be over here with you saying that we're going to Valhalla, brother. And so just the opposite. Looks like we're going to hell.
I don't know if I buy it. I mean, I think I like the idea or the argument that you make that now that the big powerful person has said it, that you can act on it. I get that. I think that's a fair assessment. As a long-term investor, you wait. The market's just doing its thing. I'm going to wait till Jay Powell says it. That's fair. It still seemed a little bit wishy-washy on the whole thing. He talked about the employment situation, lots of uncertainty there. I mean, it felt like he left himself a lot of outs to go either way, to be hawkish, to be dovish. It felt very wishy-washy. Did it not feel that way to you?
It did. There's a silly analogy I used in 22 and 23. The market just wants to make sure the Fed has both hands on the steering wheel at all times.
Okay.
And it's not busy like yelling at the people in the back seat. And for 2022, it's like these people aren't even aware of what's going on in the road ahead of us. So we better de-risk. And then once it became clear the Fed understood the severity of the inflation problem, the market started to stabilize. And by the end of the year, we were rallying again, even though inflation hadn't been defeated. So, I mean, today, Powell's saying, like, listen, we're taking this day by day. We have no idea what's happening here. There's a lot of fog ahead, but at least they have their hands on the steering wheel still. They're not looking through anything or ignoring any problems. But Nick, I've been keeping track of some of the headlines that have come out in the past 2 days about this issue. Just these are the kind of things that tell me that this conflict isn't going away anytime soon. And just in terms of a trajectory here, thinking about this, March 22 is when PPI peaks, CPI peaks in June 22. Today, we just got a huge PPI reading that pushes the core up to 3.9%. So that's all before the oil gets priced in for the invasion of Iran. We're probably looking at a meaningful bump here outside of expectations for inflation in the next few months. So here's to substantiate that. These are headlines from the past 48 hours. White House issues 60-day waiver of century-old shipping law to move fuel domestically. The U.S. is considering summer gasoline rule changes to diminish regulations to lower gas prices. Nick, it is still winter technically. Spring does not start for 2 days, and they're talking about changing summer gas regulations. I mean, the lights are flashing. They're flashing here. this is a supply chain issue like COVID, like Russia, Ukraine, and you need to proceed accordingly. So I am very defensive right now, and the market looks terrible. This is the worst I've felt in a very long time, my friend.
Oh, man. Man, Micron won't save us today, you don't think?
No, I don't think so.
Damn.
Not whatsoever.
No. All right. That's fair. I will say one of the things that I've been watching, and you're mentioning oil here, oil volatility near the lows that we've had since, kind of the pop off that we had 2 weeks ago with the Iran situation. Doesn't that kind of speak to the fact that, the market's kind of saying, maybe the powerful people are going to do some things to help alleviate this situation. And if we saw an oil print, let's say in the 80s in the next couple weeks, doesn't that flip the entire script? Aren't we back? Is that not like, are we back? If oil's at 80, the Iran situation's still going on. There's bombs flying around. Things are getting blown up. But everybody says, you know what? It's going to be taken care of. Well, how does the market look in that situation?
Probably calms down. And you're probably looking at the window here in the next 10 days where we're going to see peak fighting and efforts just because of our munition run rates. We're going to have to de-escalate at some point if we want to keep this going on. So maybe it goes more of like the Israel-Gaza cadence where you're October, November 23, that's really like intense focus by the markets. And then I don't want to say it fades into the background, but it becomes less of the primary driver on a day-to-day basis. Maybe that's what happens with Iran here. We continue to strike them. They continue to launch missiles, but they're so degraded that it's not 200 strikes a night. It's 20, and those can be mostly deflected. And so perhaps it just keeps a floor underneath oil. And I think actually that's the best way to do it. I think when you look at the market here right now, it's up $3 off the intraday lows that we had around the Fed meeting thus far. So this thing is continuing to whip around. It was negative at one point this session on futures power hour. That's certainly not the case anymore.
Yeah, it was down. But it was down almost $1 at one point.
If we get sell-offs, we have to take the opportunity to treat it as there's a floor in place. And I say that because vol's in, Nick. Vol's in, and prices are still going up. The market is less uncertain about where oil prices are going to be in the future, and it's for the wrong reason.
I don't know if I'm on that side. I think oil has found the reason volatility is staying sticky, but at the lower end, is that oil has found its kind of high range until this dissipates. Like, I think that's what the market is saying. You've had the curve kind of come up in the back end. You've had volatility come down to a very high, but not as extreme as we were at range. It's kind of telling you like, yeah, we're out of whack here, but we might be like the higher end of the out of the whack range. That's what it feels like to me. So I feel like that's kind of something that leans me a little positive. What I will say I'm not so positive on, and I think it goes against everything you're saying, is the move in the metals. How do you explain to me the move in gold? So you're telling me inflation is going to be off the chain to the upside. Oil is going to be off the chain to the upside. We're going to continue fighting for longer and longer. How do you say, and into that, gold's going to be down 3% today, and let's call it 25% from highs, 20% from highs? How do you justify that?
Nick, if I could justify it, I wouldn't still be sitting long.
Okay.
So I'm not having a great time. Real yields have gone up, and the dollar shot up here in a very quick order over the past few weeks, and those have historically been reasons for gold to be sluggish. And I get the longer arc here, where during times like this, gold tends to benefit. So what's the issue in the short term? Well, if it's the rising real yields and the stronger dollar, gold is at the end of the day a hedge, right? It's not your primary investing vehicle, even if it's something that's outperformed the S&P 500 since the year 2000. It's a safe haven. And so when you need to raise capital, are you going to sell your stocks if you need to, or are you going to sell your safe havens first? Sell your safe havens first to raise that capital.
What do you raise capital for?
Well, if you're a Middle Eastern
Inflation's going
country, if you're a Middle Eastern country, or you're someone who's trying to pay for goods moving around the world right now, getting gold anywhere is exceptionally difficult because most of the boats are clogged up.
Sure.
So what's been the best performer here? If you need to raise cash and you're a fund You sell the thing that's up 60% since the start of 2025. You sell the thing that's up 140% since the start of 2025, and you use that to paper over losses and dollar cost into your primary basket of assets, your equities, which is if you're a US-based hedge fund. Metals are not the vehicle that generates your income. It's if you're an equity shop for the most part. And even these pod shops, these multi-strat shops, metals are a subset of the broader picture. So it just doesn't surprise me that there's some harvesting here. I'm getting smoked, Nick. I'm getting killed. I'm getting killed in the metals. I'm not having fun. It's not a good time. I'm not even here for a short time. Right? It's not even a great time. It's nothing good. I feel sick. Hopefully oil fixes it for me because I have a lot of oil to counterbalance that.
Yeah, I'm short upside volatility in oil, so I've been talking my book, but I am certainly long gold and then much smaller, but silver as well. It seems like there's an opportunity there, at least if things get too kooky.
Could I just point to the fact that, again, on the oil curve today, as you go further out from the front month, the percentage gains are increasing?
They're getting more in line. The curve is getting flatter. I mean, the last time we were on in the middle of last week, these back months were in the low 70s, and we're getting into the 80 handle, the high 80s, even 100 and some odd days out. We were talking about how it looked like, the current market was addressing was pricing the situation as something that would go, be done with pretty quickly. And now it's pricing it as something that is going to go on for a little bit longer.
It's going to go on for a little bit longer, it looks like, which means that if you're thinking this is going to go on for a little bit longer, going a little bit further out in time can generate some positive roll yield. If you're a trader, last week we mentioned this is one of the benefits of an ETF like USO, which during times like these generates positive roll yield. I also think that given now that we have a bunch of oil that's shut in, if I'm thinking about selling puts, if there's like a big ceasefire that happens, the CLK6 with its latest expiration in the cycle coming at 29 days, I don't think that's where the aggressive selling would be because there would still be tightness in the spot market up front.
Yeah.
It would be more about the M6, the N6, right, going out into the summer months here. So playing this on a day-to-day basis obviously matters a lot. But if I think that oil is the bigger problem, I'm going the mid-months are getting more of the activity right now, the bigger lift. If this thing is resolved, the front month is not going to be the one that comes in. It's going to be the other contracts as you go out in time.
I agree with you on that. I think that's a good point. My other question for you. So market's down, 1.33%. We're kind of at the lower end of where we were trading earlier this week. Going back to, let's call it November, December-ish. I mean, if we talk about the E-minis, this was kind of the lows in, middle of November into December where we bounce right back. You have a bunch of the big name stocks like, I look at NVIDIA every day. It's down $1, about 0.6%. You got Meta. It's down like 1% here, $7 and change. Microsoft is kind of the biggest mover of the group here. You got Apple, which has basically it was unchanged for most of the session, selling off a little bit today. Google selling off a tiny bit today, but nothing. We're not seeing any craziness. Is that good?
It's orderly.
Is that good? Is that good to you? Does that mean like if you're bearish, quantify me bearish is kind of what I'm asking. Because
I think this is good if you're bearish. It's not panic. No, we're not seeing this is not a panic. This is not a panic move. Mag 7 ETF hasn't broken through the yearly lows yet, for example.
Yeah.
MAGS. It's been struggling to get back through 63, which is probably a line in the sand if you look where it was consolidating above for portions of 4Q and earlier this year. And since then, maybe it's just flagging down here, getting ready to have another break to the downside. So very orderly right now. VIX, what's the IVR on ES? Still in the 30s?
Yeah, we got 35 IV rank.
If you're bearish, people would want to see this thing go to zero if you're bearish, but you want this to happen in little drips and drabs because it gives bulls, having been on the other side of this for so long now, but it gives people like you and me, that was just 0.5%, right? Like I can try to buy the dip.
Yeah.
It's just a little cut. It's a little neck.
Oh, so you think this is a trap?
This could probably be a bull trap. But I'm neutral to net short deltas right now, so this is working out in my favor.
Okay.
I'd like a bigger move to the downside. And if we get like a 2.5 or 3% downside day and the VIX flashes above 30, then we can go bottom fishing. But until then, this is not the cycle high in IVR for ES or NQ, even though we're sitting at the session lows.
We have the 30 VIX.
Do we again now? Did that happen today?
No, not today. I'm talking about on Sunday into Monday.
That's what I'm saying. That's what I'm saying. This is orderly today. This isn't a 30 VIX environment.
No.
This is nothing.
Yeah, this is nothing. You got an option expiration on Friday as well. One of the big ones. You got anything else this week that really matters? Was this it? Like, what does tomorrow look like in your mind? It feels like to me that tomorrow is just a chop fest inside move.
In a perfect world, gold's up $150. Stocks are down 100 points. Oil's at 105. Tomorrow, probably more downside.
Okay.
I'm watching the news headlines. If the Middle East is any gauge of what we've seen today, the spreads between oil and Brent are blowing out. The spreads between Omani and CL, they're blowing out. Everything is just gross. It's just not, there's no turn yet in the narrative. And oil vol IVR may be in. Well, this is going to be, it's an interesting trading environment. I'd hate to be an investor here trying to call the low, but trading this, Nick, I mean, being nimble is the most important thing right now. Being willing to change your mind. I certainly had a big change of heart at the end of last week. I'm feeling a little bit better about it today. I wish I had a quicker change of mind in gold. But, you mentioned the expiry here, by the way, with Vixpiration, okay? Do we think there'd be more or less supply of volatility coming into the market after a day like today? Would people want to have more volatility to hedge the risks through the next expiration window? Yeah, yes. Of course they would. Why wouldn't they? So I don't know if we should be surprised. It's very orderly right now. This does not feel panicky.
No.
Yet.
No. E-mini S&P 500 futures down 90. We're near the lows of the session here, 66.82. The NASDAQ down 332. The NASDAQ and the Russell basically down the same, or the NASDAQ and the E-minis down the same amount here. Are you worried about those small caps?
For sure. I think I'm very much going back to my 2022 playbook, Nick, where I think the market doesn't really overreact in the first quarter when you're thinking about S&P. It gets hurt when Russia invades Ukraine, but then it ultimately rallies through a portion of March. There was the whole media narrative at the time that Kyiv was going to fall in 3 days or 3 weeks.
Yes.
And then the market goes, oh, this isn't going to be short. It's not going to be quick-lived. This is happening. And then supply chain issues creep into the picture. So
that's it's just
22.
If I remember,
whatever worked for you in 2022.
2022 was all about the mags, was it not? That was Nvidia. It was
tech over small cap.
Yeah,
and small caps with their smaller moats, with their limited balance sheets, they got hurt. Sensitivity in the domestic economy, they got hurt a lot more, and so. On a relative basis, the NASDAQ is doing better than the Russell today, and it's been doing better than the Russell since the start of the war. So perhaps that's what you do. If you want to get your bullish tech exposure, maybe you need to be a pair trader here for the foreseeable future.
I kind of like that. I wish I still had that on. I had it. Well, I guess the NASDAQ has been weak the last couple sessions, so I might not have been that good of a trade. But
let me ask you, Nick. I've been doing a lot of talking here. Is there a level in the market? What are you looking for to feel comfortable layering on the bull side? We always tell people when volatility starts to go up, right? Be ready to deploy your capital. When it's really, really low, take your shots, but keep your powder dry so you can deploy it and harvest the vol once. Right? How are you approaching this now? Because the volatility hasn't blown out and stocks are struggling again.
I'm doing it mostly via diagonal spreads. I mean, I've started to nibble on some long NASDAQ here. I think I just don't see any of this, why this matters for the AI trade. I don't see why this matters for tech stocks. I mean, it just doesn't, that's where I lean long. Like, I'm not messing around in some of the small cap stuff. Actually, I have some short delta in IWM, so that has helped. I'm too long the metals and that is hurting me here. I'm short upside volatility. I would say my overall position leans neutral to bullish here from a delta perspective, but the core of my trade here is that all the things that are happening right now are inflated. I think the oil fear is inflated, so I'm short upside volatility. I'm long gold, and some short some volatility there, but I'm long gold and silver, which I think is just kind of based on the move here. I'm long the NASDAQ because I think that's going to be, if we have a bounce, I think that's the strongest of the group. I'm short Russell because I think that's going to be the weakest of the group. I think across the board, I'm short the idea that this is the end of the world.
It's not the end of the world, Nick. It's the birth of a new one. A worse one.
Worse one.
For now, I mean, look, we get our wipeout, we get our washout. Where does this market fall to? I see 6,550, 6,500 as a potential washout point. And like, if we get down there tomorrow, you have a completion of a rounding top in the S&P. And I know that you don't really use technical targets during these emotional times, but I would think then you could start to say that maybe the worst of this impulse, this corrective move off the highs is rounding out. And I got to go back to this view, Nick. We benchmark wars. Russia-Ukraine is still raging on 4+ years later. The market has not cared about that for a long time, even though there are legitimate supply chain issues that have resulted from that problem. We eventually worked around it.
Yeah.
The world will work around these issues at some point. But in the near term, it's just going to be a mess. So don't get married to any of you. Tomorrow, if we're at 68.50 in ESM5, I'll know I'm wrong, and this thing will look like it had just bottomed. And, from hell to Valhalla, my man.
I mean,
we'll start singing a different tune.
To that point, ES 6,500, let's call it 2.5% from here. That's like nothing. If you think that's kind of a spot, it's 2.5% away. Like it's nothing. That's a small. We were at this point 2 days ago. It seems like, it seems a little rough in the market right now, but it seems like this is nothing to me. Maybe I'm crazy.
Usually, you'd rather be optimistic and wrong than pessimistic and right, but there's just a lot of evidence on the table that a lot of the people who are logistics folks and supply chain folks that were freaking out in 22, and I was saying at the time, I wonder why these people are freaking out. They're freaking out again. And they were right back then. So I defer my expertise on the matter to the folks who, unfortunately, only stick their head out of the ground when winter is coming.
That's fair. I will, before we go, I'm going to mention Frankie, our Taiwanese source, mentioning the volume right now. You got E-mini S&P 500 volume, 1.5 million contracts. Very, very light for a day like this.
Absolutely. All things considered.
I think that goes to the whole kind of orderly thesis here, or at least feel to the market. As we drift into the end of the session here, E-mini's down almost 100. You got the NASDAQ down 370. I got to say, I think this is probably the first time we've had a little bit of a washout into the end of the day, which has been something that my dad and I have been talking about, like looking for, a close on the lows. We haven't really had that. We're going to get that today. At least it looks like it right now. With volatility up at 24.65. You got oil up $2.17. The Dow and the Russell, the weakest of the group today, down about 1.75% here. Maybe Micron saves us. Help? I don't know. It's kind of in play. Memory, new kind of, spot in the semiconductor story now.
Well, if it doesn't, Kospi's toast overnight.
Oh, yeah, that could be a big one. That'll be the story tomorrow. We'll see. Mr. Vecchio, thank you for joining me. Hope you had a fun session today. We're going to take a quick little 90-second break and come back with more of Tasty Live. You got Overtime coming next with Chris and Ilya. Stay tuned for that. We'll see you tomorrow morning. Peace.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses.
Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Well, Powell's probably not leaving. It's Wednesday, March 18th, 2026. This is Overtime. I'm your host, Chris Vecchio. He's your co-host, Ilya Spivak. We're here to take you through the next 26 minutes as we wind down this trading session. What a day it was. Powell speaking this afternoon after the FOMC releases a very short statement in which they underscore the uncertainty around Iran, something that's not lost on Fed Chair Powell this afternoon during his press conference when he repeatedly tells the world that he has no idea what's happening next, and everyone should take the summary of economic projections with a grain of salt because who knows where this is all going. It's not the message of confidence and clarity that you want to hear from the high priest of passive investing, Ilya. And so equity markets here, as we wind down the day, are sitting at session lows waiting for Micron earnings. Maybe that can save the day. But certainly, we face our challenges because oil is staying up here, continually bid across the curve. I do see from my producer here, Josh, saying Micron is now out. He'll get me those in the chat real quick. 5-minute chart here, Micron 468 down to 462. EPS came in at 1220. Adjusted EPS 1220 versus 9 expected. Adjusted EPS 1875 to 1955. It looks good. Doesn't really matter, I suppose, at the moment.
Yeah, I mean, that's the real question is like, okay, yeah, but. And so you get this little spike because the number is solid, but does it matter in the grand scheme of what's going on here? No.
No, Josh, you could put up the charts here as we look at the S&P down at 6670, 6669 here after hours, and it's going to bounce around a little bit as we deal with the Micron earnings. But Ilya, these charts kind of stink right now. They got worse from when you and I last spoke an hour and a half ago on Futures Power Hour when ES was trading closer to 6730 or so. We now find ourselves marking off that bearish engulfing bar. We do see that we moved above yesterday's high in ES. We now have closed below yesterday's low in ES. It comes with a rejection of the 1 month moving average, former horizontal support turn resistance. Oh, and we're back below the 1 week here, which now gives us the 1 week, the 1 month, and the 50-day all in bearish sequential order with negative rates of change. My friend, what do the bulls have right now? Are people just really understanding that Wile E. Coyote has run off the cliff, if we want to use the analogy from First Call on Sunday night?
It's the analogy I've been using for a while. And I think that's what we're learning is that Wile E. Coyote can run for a very long time before that is noticed. Because really, what are we talking about here? We're saying that, oh, we've had a shock that's going to delay rate cuts. Okay, what has the market been concerned about for the better part of a year? That the Fed is not going to deliver enough rate cuts. So this is, before we start sort of getting the weeds of what's going on the ground in Iran, what's going on with all the various kind of moving parts here, where do we ultimately end up? There are really two inflection points, it looks like, in this story. And one of them is today. And both of them come from Fed Chair Powell. The first one is in October, where the markets get a Chair Powell who does a press conference, not unlike this one, where he is, shall we say, in a feisty mood?
A little ornery.
You know, comes out and basically says, yeah, thank you, everybody, for distilling the obvious for me up here. I really ever so do appreciate it. Yes, I know where the trend in inflation is. Yes, I know we would have been at 2% by now if not for a series of shocks, including the tariffs and now this. So, yes, I thank you for your pointing this out. It's not like I'm the Fed chair and this is all I sleep, eat, and drink all day long. But no, we're not going to do anything about it. Because what can we do about it? We don't even know what it is, which echoes what was there with the onset of the tariffs. And of course, now, what was the message from the Fed? You know, we thought that the goods inflation was going to go down faster and it was going to be a one-off, and it's not going down as fast as we thought because, hey, turns out the economy is stronger than we thought, weak labor markets notwithstanding, because they're weak for things we can't do anything about. So, okay, can we make labor force participation higher? No. So there's a demographic thing there. What do you want? So the through line here was Fed chair came out in October and told markets, you expect more cuts than you're going to get. The S&P stopped rallying. Now he's coming out and saying, well, we don't know what to tell you exactly, but we can tell you that none of this amounts to rate cuts. That much seems pretty clear. And maybe it will, and maybe it won't. But if you thought we were going to do something soon, let me disabuse you of that notion now. Because we don't know what this is, and we don't know how to deal with it. And our mandates, our intention. Here's a real short statement. Here's a very candid display of why we're not doing anything. It's that the tariffs won't fade and now there's more inflation shock. Thank you. Have a nice day. If ever there was an SCP to skip, this would have been the one. I mean, he said this verbatim.
Ilya, Heather Long, who's the chief economist at Navy Federal, put together a bullet point list today that was sent around of 6 things that Powell did. 6.
Mm-hmm.
I'm curious, which of these do you disagree with? 1, Powell will stay on his chair until a new chair is confirmed by Senate. 2, he'll stay at the Fed until the criminal investigation is, quote, truly over, unquote. 3, only 1 cut likely for 26. 4, no one knows the impact of the oil shock. 5, this is not stagflation in Powell's view. It's nothing like the 1970s. And 6, there's, quote, effectively zero job growth, unquote. But he doesn't see that as troubling because there's no labor supply growth right now.
I mean, that's basically what we've just outlined. This is all of what he said. About the one thing here that sounds a little bit more like a commitment than what I heard Fed Chair Powell say is that there's likely to be 1 cut this year. He did not say that. He said there's going to be whatever change is appropriate is the change that we're going to do, and we're well positioned to do it. He pointedly did not specify the direction of the change.
He may not have specified the direction of the change. That's true. The market's not liking this set of 6 observations, though.
No,
it's still not stagflation, right?
And it's a good distillation. I mean, those 6 points in a nutshell is what he said. I'm just nitpicking.
Oh, I think the stagflation one is important to consider because I've been saying this for the past week. Like, this is not stagflation. 4% unemployment rate and GDP that's still growing. That's just not it. Stagflation is declining growth or contraction plus high inflation and high unemployment.
Yeah.
So maybe directionally,
and high is not like a little high. It's like high.
It's like 8% inflation plus 6% unemployment plus like the economy contracting by 0.5% on an annualized basis. That would be stagflationary. Yeah. That's not where we are right now, and that would be worse than where we are right now for what it's worth. Yes. The economic impact of all this, as I've argued, as we've seen people like Greg Ip argue, and I've argued it because I've seen people like Greg Ip argue it. I've looked through his numbers, run them myself. The GDP impact of 95, 100, $110 barrel oil is negligible, if not slightly positive for headline GDP. It's, of course, bad for inflation, bad for gas prices, but we are an oil exporter, so it's good for our terms of trade. You're not really going to see it or feel it there. Nevertheless, this chart, Ilya, I do want to bring up what we did on Futures Power Hour today, though, in terms of outlining what that kind of looks like. People should Google what a rounding top pattern looks like. If you do the first image that you're going to pull up on Google, and I'm doing this specifically, Ilya, so when people themselves go to their Google machines and they say, show me a rounding chart top pattern, they see this. This is what they would see. This is not ours. This is just what the internet produces. Ilya, I'm going to go back to a 12-hour chart here. I think that's appropriate. And let's put that back up on the screen. That, to me, looks so freaking textbook.
I mean, again, the one thing you could take issue with here is that maybe it's too cute. Maybe it's too perfect. And the market is going to pull the rug out on everyone. But until that happens, and there's risk management thinking that goes into that possibility, right? Don't be there without your risk being defined. Make sure you're looking at 2-to-1 risk reward. That's what I did when I added to my S&P shorts today. I was looking at a brand new position. Even though I'm already short, I'm adding as though I have a whole new thing I'm adding. I'm treating it completely in isolation and going, okay, I go 40 days out, 44 days out. Can I get 2-to-1 risk reward on a put vertical structure? Can I lock that in? And the answer is yes. So you go again. But
Micron not saving this market here, Ilya.
You still look at this and you go, well, I have to operate as though this is going to work like it works, which is a rounding top. And if the market pulls the rug out, then I've made provisions for that.
Capital defensiveness, capital protection, capital preservation, whatever you want to call it. That's the goal right now. I mean, we're always trying to make money, but if you're an equity market bull, right, your frame of mind has to have shifted by now. I think. Where could this market wash out to? The technicals, first off, look garbage. That's Italian for you, Ilya. Means garbage.
Oh, okay.
They're not looking great from the technical basis. They're not looking great from the narrative basis, from the fundamental basis. We see these supply chain issues coming down the pipeline. The COVID supply chain issue was different because it was self-imposed and could be turned on and off, so to speak, right? We are imposing the lockdown conditions on ourselves 2 weeks to stop the spread. And then once we try to do those efforts, we unkink the supply chain. We learned, oh, geez, just even a small disruption in global supply chain activity can have this long tail of consequences. And then we saw it with Russia and Ukraine. All those food price rises, Ilya, I was told very specifically throughout 2024 that, and I remember this in the chat, and we were having this conversation about grocery bills on Jones and Friends and other shows here on Tasty, about how there was this mismatch between like the Biden administration, what they were saying about the economy. Inflation's bad, but at least it's not as bad as it was in Europe. And it's coming in. But like you had this vibe session, Kyla Scanlon coined that term all those years ago about how sure the top line macro data was good and improving, but people's lived experience on the ground was not great. And it's because at the margins, the macro data wasn't capturing the micro inconsistencies and inconveniences of this supply chain kink going up. So that's coming. Prepare now. I've already purchased about 20 pounds of rice. Has a shelf life until next year.
This is much like the conversation with the Iran war itself. I want to say it was Rick Wilson that had this quip, but don't quote me. I'm not sure. But the sentiment was kind of to the tune of the first 6 years of a limited 2-week operation are the hardest. And that's really the essence of both the inflation fight and maybe, again, this Middle East situation, because now we're talking about maybe ground troops. Now we're looking at a very different level of engagement. And so the markets are clearly responding. Crude oil is back up.
Crude oil is back up to 99.
There we go.
So and with this oil move, Ilya, you're going to love to see this. Sorry to interrupt you. But our friends at the CME group were looking at aggregated rate.
Oh, they didn't.
We're now with the close today, the odds of a hike at the April 29th meeting.
Oh,
odds of a hike are higher.
I thought they would have increased margins on CL futures. I thought if ever there was a thing to do.
No,
dump some gasoline on the fire. Would you?
Just there was that whole what kind of rate cuts are we getting conversation.
Right.
Are they maintenance? Are they emergency? Are they recession? And it looked like we were still gearing up that when the rate cut comes, it was going to be maintenance. And we were convincing ourselves that maintenance cuts were on their way. The cuts that we had were maintenance cuts. Everything is hunky-dory. This is not a recession. It's not an emergency. The pricing that you're seeing make its way through the Fed funds futures market right now, or the SR3 3-month SOFR, is clearly indicating that the Fed has no business and will have no room to cut rates. Yep. So forget stocks going up after maintenance cuts. A maintenance cut is not coming. And when the Fed finally does cut, it's probably on the other side of a bit of demand destruction, which is why Powell spent the press conference today talking about how they would probably look through a supply shock because that's what the literature says. Oil here at 99 right now as we bang out the trading session. The big news, of course, Israel and the United States hit an Iranian gas field in the southern part of the country that Qatar shares with them. It's called the North Field in Qatar, South Pars in Iran. Ilya, it is a domestic gas field. The energy that is extracted from that gas field does not go out into the world. It stays in Iran itself to help fuel the local economy, to help pay the bills, keep the lights on for the IRGC. And it was now targeted, which is why this afternoon, Iran, the Iranian naval commodore, which I didn't realize that we had a master and commander of the high seas there because we've been repeatedly told the Navy's been taken out, that now any place that hosts American assets, military assets, energy infrastructure there is fair game. So we have to be careful with this. I don't think anyone should pretend that we know how the war is going to go on. I know I sound confident. I think this is going to work out. But in terms of saying like this is going to stay contained, just a quick read through of history tells you that you can't control this when it gets out of Pandora's box. You don't know how long it's going to go on for. And we're still very much in that price discovery, reaching for liquidity phase of the crisis. So I'm not going to call any tops or bottoms in stocks. I feel like the top is the easier call to make. Momentum is pretty clear to the downside. Oil is pointing up. Until the charts say this is over, it's not over. And it wasn't over yesterday, so I'm glad you and I grinned our teeth and bared through it. Because the last 2 days of rallies were ridiculous. And I was losing my mind a little bit there.
Yeah, it's why you got to stick with the price action, stick with good risk management. The only thing I have done to my portfolio at all this week is add more and peel off things that don't seem to fall into the narrative. Because the narrative does seem to be working. The question with Bitcoin this week was, what is it actually doing? And so I've peeled it off because it wasn't clear. It was trying to break out. Maybe now it's trying to break back in. It's been a choppy thing in Bitcoin. So I've left it alone for now. But I've added more into the put verticals I've had on SPY. I've added essentially a little bit more exposure on the dollar across a couple different currencies, although I'm trying not to be extra cavalier because we still have the ECB and the Bank of England reporting, to say nothing of the Bank of Japan, though I think they're probably not the big story here today. So you look at this and you go, okay, so what the markets were afraid of was that the Fed would not cut rates fast enough in the event that something broke. Because they had the tariff thing to deal with. They had the possibility that AI is overcooked. They had not the technology, of course, not the prospects for its transformational effects, just the price of the shares. That essentially the build out of the great and glorious future is in the price already. And we need to actually see the next phase a little bit before there's more to price in. And in the meantime, some people might want to distribute some of the income. So there's been that conversation. There's been the private credit conversation. The markets had a lot to juggle.
Micron just announced as part their fiscal year guidance is calling for more capex than previously expected, and maybe for a memory chip provider, good thing. But in this current environment where it's like, hold on a second, we might want to keep some, money in a rainy day fund in the event things go sideways. The market's not taking it lightly here. So I mean, like the trade setup bias, I think, has been pretty consistent for the past few days. I think it's reaffirmed, and I feel much better about it here with the move today.
This is what you want to see.
Well, the rebound in oil, first off, is going to be the tell. Oil staying up is a huge problem because if oil is staying up, it means that the entirety of the supply chain is still kinked up. It means that the fertilizer and the petrochemicals and name something that goes into plastics or food, all right, it's still having those issues. And so what does that mean for margins in the future? What does this mean for Q2 disruptions? I think that if we're approaching this market responsibly still, it is risk-defined, given the fact that we're dealing with all this headline-driven volatility. I know that sector dispersion on the way up has been in play. The Nasdaq's been leading the Russell. Even on the downside it has. There's been some exposure that's been working relative to small caps. But as long as we're seeing now, like from the RBA, the Fed, what are the BOE and the ECB going to say tomorrow about being constrained by energy inflation risk moving forward?
Tonight. They're coming tonight.
So there's reasons to be cautious here and not play hero ball. And I think you've known me for more than half my life at this point.
Mm-hmm. Yes, sir.
And just about half my life, at least. And, as the audience knows from listening to yours, I am always looking for a reason to buy the dip.
Sure.
I can't put lipstick on this pig. And it makes me deeply March Madness. I think it's going to be March Sadness. And I'm going to say that endlessly to the producers because they think it's a really good title for tomorrow's Futures Power Hour.
I tell you what, I tell you what, this is the part of it where those of us that were permanently scarred by the '08 crisis, because that was our formative first trading experience. For real,
is nuts.
Oh my God. This is the point where you look at this and you go, whoa, okay, things are really working. Now I'm nervous.
Yeah, we called 20 of the last 50 tops or whatever the expression is.
That's right. That's right. You look at this and you go, wait a minute. Is it really happening? Because the dominoes start to line up. Tighter credit, the private credit crisis, the situation in AI. A really fun little tidbit that I heard discussed the other day is over here in the corner, and this is a hat tip to The Economist. They have fantastic coverage of this. Over here, you have Sam Altman and Elon Musk and Dario Almade fighting tooth and nail for the AI pie. And none of those companies make any money, and all of them depend deeply on being able to get more. And here in the corner, you've got Google, who has no interest in anybody's money, who is perfectly financed all by itself, and is just waiting for these guys to clobber each other over the head to eat their lunch. And so you look at the amount of ecosystem that has been built around OpenAI, that is built around Anthropic, and you go, what if credit is so tight that these guys find it expensive to get more money to burn? Would that be a problem?
The folks who are self-financing, like a Tesla with XAI or a Google, would probably be better suited. The one issue there,
and still with Tesla, he had to attach SpaceX to XAI just to try to float this thing because it's not making any money.
Can SpaceX launch rockets if it doesn't have access to helium and nitrogen?
Not so much.
There's so many issues here that are clearly the tail risks are not being priced in if this gets worse.
That's the whole thing.
But the commodity people are the ones, again, the commodity folks that I know and follow. I've only seen them panic like this twice before in my professional life, Ilya, and it was 2020 and 2022. And I think we know how those turned out. There's reasons to panic in the supply chains. Those effects are still being felt today in society. That's why grocery prices are up like 40% since January 2020. It's Google, you mentioned here as we go into this little wind down, as the markets are still sliding here. Russell and the Dow Jones are now down over 2% in the futures market. We have Google maybe a lower right shoulder here, finding rejection at the 50-day, at the 1 month, maybe topping out. I'm not going to play it like that unless you start getting below 290 or so. But even some of the guys that have been holding this market up, even Broadcom, which has had really, really, really strong support, it feels like, in that 300 area.
Mm-hmm.
They're slouching back a little bit. They're starting to get a little soggy. Even NVIDIA, it's not pushing higher right now. And Jensen's been pumping this market the past few days.
Trying.
All of his headlines.
He's trying.
Not doing much of anything. So
everything out of that GTC conference has been rainbows and unicorns.
So SMH potentially a lower high in this right shoulder here. So cautious right now. No hero ball. Been saying it last week. We're going to say it this week. We'll say it next week. No hero ball right now.
No.
This is not
that time.
This is not that time. This is not that time. So Ilya, 66.59 here in ES as we wind down this overtime for Wednesday. We are out of time here. We'll be back tomorrow, same time, same place, 4 Eastern, 3 Central, right after last call. So for Ilya Spivak, I'm in Chris Vecchio. He's spivacking around, sticking around. I got it. That's terrible.
I'm doing all the things.
See you later.
The things.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Is where it started, where it all begins.
it is a bloodbath in the markets after the Fed comes out and says, well, what exactly do you want us to do on rate cuts when inflation expectations are on the march? Not surprisingly, the markets don't like it. We're going to try to figure out what is coming next here. This is Macro Money. I'm Ilya Spivak, head of global macro here at tastylive. And we're going to go right into it here and take a look at the price action. It has been spicy, to say the least. Here's the S&P 500. We're talking about the bounce from those lows around the 6,600 level earlier in the week. That was after, over the weekend, Iran seemed to signal that the Strait of Hormuz was not as closed as everybody feared, because it was only closed to enemy ships. And so ostensibly, if there was a call placed to Tehran, then non-enemy ships could transact and could move. And the markets seemingly enjoyed that for a good day and a half. And of course, today, despite the fact that there seems to be some progress in that direction, apparently some conversations happening between European Union leaders and Iran around this idea, we nevertheless have a situation here where the markets are in a decidedly more negative move. And as we've been saying, those bounces earlier in the week pointedly did not mark confirmed reversals in the trends that we've seen since the beginning of March. And boy, do we get confirmation today that reversals those were not. A violent reversal in the S&P 500 from the very spot you might expect it, from a retest of this bottom right here that we pointedly took out last week. This week's bounce starts as a retest of that very area. It fails in the spot you would expect it to fail if you thought that downward continuation is the next step. We get a rejection, not just at former range support become resistance, but also a maintenance of this trajectory of lower highs and lower lows on the slope that was established. So this is about as technically well positioned as you might expect. This is the textbook version of a downtrend is underway. It has made a critical move in its direction. It's had a period to digest and retest the veracity of the break, and continuation is upon us. It's a very similar story looking at the bonds here. Of course, at the start of the week, the unclenching in worries around the strait give us not just a bounce in stocks, but also a bounce in bonds, because this entire thing has been about inflation expectations. Higher oil is more expensive energy, is more expensive everything that uses energy and uses petrochemicals, which is, as everybody is learning now, something that's an input into fertilizer, something that's an input into plastics, something that's an input into smelting, in particular of aluminum, which has been seriously impacted. So all of this means more expensive stuff, means inflation, and probably means central banks are not in a position to cut interest rates. So as the war has progressed, we've seen yields move higher. That, of course, looks like the bonds going down here. And as at the beginning of the week, we got that tiny sliver of relief, the bonds bounced and got rejected at the very same type of spot that the S&P did. It is, of course, the same story for the US dollar. A little bit of a pullback at the start of the week. We find the former level of resistance become support. The breakout from last week, we hold right there, and now we're bouncing. Gold taking a sharp leg lower, seemingly caring much more about the yield and the dollar implications of what's going on rather than the geopolitics per se. It doesn't look like we have a meaningful escalation in geopolitical risk beyond, obviously, what it was already there. And in any case, gold has been sort of interestingly more minded to the swelling of inflation risk and what that'll mean for the dollar and what that'll mean for rates than it has been for quite a while. In fact, gold has kind of been relentlessly marching higher despite whatever was going on with yields and with the story on the dollar. And there's a great conversation I had earlier today with Axel Merck of Merck Investments. Check that out. It's going to be plastered all over Tasty Live YouTube in part and in whole. And this is pointedly a departure from that departure. This is sort of a return back to regular gold that operates as a foil to the dollar and as a foil to interest rates, because, of course, gold is a kind of alternative to value transfer that isn't fiat, and at the same time, it yields nothing. So when yields in the dollar, that is fiat, go up, gold doesn't like it. And here we are. Now, the up move here structurally remains intact, but we may need to come down all the way to here below 4,700 to test the bounds of that. We don't know that, of course, because we have a level of support to grind through here, but that may very well be what's coming if this continues. Crude oil, for its part, there's that dip at the start of the week around those comments from the Iranian foreign minister about the strait being open to non-enemy ships. And since then, as we can see, crude oil is right back up, and we're near the top of the range here as we get into the Asian market hours and futures start to reopen. So this is increasingly a testy situation. And perhaps the biggest takeaway here is that oil really isn't the big mover. Oil has basically been sitting in this range, and the violence in these other markets seems to be much more to do with the Fed. Now, as we can see here, we've really clawed back rate cut expectations for this year. 17 basis points now on the menu. That's still narrowly in favor of one cut, but by a diminishing margin here, to say the least. We're still a little bit better than even on the likelihood that we get one cut, 68%. But not too long ago, we were absolutely certain we were going to get at least two of them. So this is quite the change. Now, for next year, we've got 36 basis points on the menu, and it looks almost like we're starting to see something akin to what we saw last year, which was the Fed kept delaying rate cuts, much as it looks now at the oil situation. It looked at the tariffs as they were being rolled out and said, hold on now, we don't know what this is. We don't know how sticky it'll be. We don't know how inflationary or not inflationary it'll be. We can't do any kind of cutting until we see what this thing is going to mean. And so they waited until the very tail end of last year to actually make their move, and they needed to see a labor market that was looking a little bit wobbly to justify even that. Now, over the course of this, what you saw was the markets looking at the Fed and going, hold on now. So you're saying you're not going to cut. That means you're going to have to cut more later. And as the outlook for rate cuts started to shift from the near term further down the maturity curve into the future, more easing started to appear in the totals as you started to get these sort of sense of there being an exchange rate between rate cuts now and rate cuts later that was greater than one. And so what we're seeing here today is the markets looking at the Fed and going, right, they are more reluctant to give us the rate cuts we want in any kind of near-term sense. So the total here still relatively in line with expectations that the Fed has just updated, and we'll get into that momentarily. 50 basis points basically between this year and next, but the mix is now much more skewed to 2027. Here's the policy statement. It was tellingly short. The only thing that the Fed really says here is that the unemployment rate has been little changed. It takes out the sense that it's showing some signs of stabilization. It's also added a sentence here, not surprisingly, saying the implications of the developments in the Middle East for the U.S. economy are uncertain. Well, yes. As far as the voting goes, only one dissent this time. Governor Waller back in consensus. At this point, he's no longer running for Fed chair, so I guess we've rethought our dovish vigor here. But Stephen Meehan's still calling for a cut, albeit not the jumbo one that he's favored before. He's down to a quarter basis point that he wanted to do here. But as we can see, it's a very short statement, and it's very light on substance. Getting into the summary of economic projections, an interesting story emerges here. The Fed upgrades its growth expectations across the board. This year, next year, 2028, even the longer run number. Now, matching with that update to the longer run number, it also increases its expectations for longer run interest rates and says, if you thought that there's going to be a bunch of cutting, let's get this clear. After next year, we're basically done. Now, as far as the forecasts, they don't actually change them. So we still got one cut on the menu this year, one cut on the menu for 2027, but that then becomes the floor. We can see inflation expectations have been nudged up. That probably explains how this longer term rate is higher. And the growth upgrade explains to some extent why the Fed thinks that there is more to do here than the oil shock. Though, of course, the oil shock entered into the conversation. This, of course, was the main story, and not surprisingly, at the press conference after the meeting, Fed Chair Powell was peppered with questions about it. It's about a month's delay between a move in oil and its reflection in headline CPI historically. You can see that here. And what you then would presume is that what this oil shock will mean downwind, at minimum, is a knock-on to headline inflation. And then the Fed's job would be to know whether to look through that or to perhaps think that it poses a risk to derailing inflation expectations, and thereby the Fed needs to act on rates, either by rhetorically or literally dropping some cuts. And then, of course, maybe thinking about hikes, though that was not anything that the Fed chair intimated, certainly. For their part, the markets are certainly suggesting that relationship between oil and inflation is going to hold. As oil surges, so too inflation expectations in the bond market are surging. This is the 5-year break-even and the 10-year break-even. They're the implied inflation expectations that you get by taking the difference between nominal and real yields at the same maturity. So, for example, the 10-year Treasury yield and the 10-year TIPS yield. And so what you see is that as crude oil surges, the bond market is saying it'll be an inflationary spike. And those inflation expectations baked into the bonds pricing, they rise right with oil. You can also see it in the benchmark models that the Fed uses and publishes for where inflation is headed. This is the Cleveland Fed's nowcast of inflation. We can see already in March, headline CPI expected to get back to 3%. Obviously not what the Fed wants to see, not the progress that they're looking for to get to more rate cuts. Also, a wiggle higher in the core, though we can see how important energy is. The core here is, of course, excluding food and energy. And we can see that although there is a bit of inflationary pressure there, it's not nearly what we see at the headline forecast, and it's not difficult to surmise that's the impact of energy that we're seeing. It's a similar story for what we have in PCE, though this looks even more inflationary. Looks like by March, we're aiming well north of 3% for the headline and right around 3% for the core. As far as the comments from the Fed chair, they, let us say, had a lot more substance and a lot more candor than did the policy statement. In the prepared remarks, he said elevated inflation expectations in the near term have risen. In other words, the situation has gotten worse. But critically, this reflects goods which have been boosted by tariffs, whereas the situation in the Middle East is uncertain. And once you get into the Q&A, you get the clear sense that what Powell was talking about here is, look, we're not in a position to cut rates, not so much because of the Middle East thing. We still don't know what that even is. But we thought our main argument was that the labor market was getting a little wobbly, and there's not much we can do about some of the structural changes there, like low labor force participation because baby boomers are aging out. But there is something we can do maybe with lower rates to kind of put a floor under it. And at the same time, our expectation was that the tariffs would be a one-time adjustment in price, and it looked like that was going on. So over time, what would then be expected to happen is the tariffs would rebase out of inflation calculations. Goods inflation would come down. As long as you continue to see disinflation in services, you'd be well on your way to your 2% inflation target. Well, it looks like goods inflation is not going down as fast as the Fed hoped. And so what Powell was saying here is, forget energy. Whether we look through energy inflation doesn't arise until we check the box on goods inflation. In other words, we were reluctant on easing before this war and before this oil spike. Although he makes it clear that they won't approach the question of looking through energy lightly. That is to say, they're not going to just assume the best. If we don't see inflation progress, he says, you won't see a rate cut. And this was a lovely piece of candor. He says, if we were ever going to skip a summary of economic projections, this would be it. At one point, he said, well, don't hold us to these forecasts. People have to write something down, so they write something down. But there's no confidence. He does say that they're very strongly committed to the 2% inflation goal, and that he would not, as a Fox News reporter tried to intimate, say that employment is a bigger risk than inflation. In other words, he's making very clear, if you thought we were going to look through this like we thought we were going to look through the tariffs and keep cutting, the answer is no. Now, what we see here, of course, is a sharp rise in rate hike expectations, a general kind of hawkish shift for global central banks, shock of shocks since the end of February and the beginning of March. I wonder what happened there. And of course, already this week, the most hawkish of the bunch, the Reserve Bank of Australia, has already hiked rates, back-to-back announcement. They hiked them in February as well. They are still on the menu for at least one more. So they've done 50, and now they're on the menu for 80 and some change. And so that's at least one more hike. The Bank of Japan is expected to deliver 50 basis points in hikes, but their expectations, interestingly, haven't moved very much. And we can see here that this is the implied policy path in the futures. We can see the current path in the black line there is somewhat in the middle of where we were 3 months ago and 1 month ago. So 1 month ago, we were a little bit more hawkish. 3 months ago, we were a little bit more dovish. Not much has really changed here. So when the Bank of Japan makes its policy announcement today, the expectation is it's going to be a non-controversial kind of a thing. Now, it's a little bit different when we get to the ECB and the Bank of England, both of which are also up to announce rates in the coming hours. The European Central Bank is now on the menu for at least 25 basis points in hikes. We're not quite to 50. We're somewhere in the middle here, so call it one hike with a 50-50 chance of a second for the year. Something like this. And then for the Bank of England, we're not quite to a cut, not quite to a hike rather, but we're getting there, and the direction here clearly seems very pointed. We were looking for a 50 basis point reduction in rates for the year. Now we're 75 basis points almost in the opposite direction, and looking for at least, it looks like, the serious chance of a rate hike. We're probably closer to there, call it something like a 2/3 chance now that the Bank of England is going to hike. And that's not at this meeting, certainly. Both central banks expected to hold here, but we can see the changes in their policy curves have been dramatic, and they've occurred right in line with what we're watching here. This is where this oil shock begins, and we can see there's a sharp move in the curve for the ECB to a much more hawkish setting. Currently, the deposit rate at 2%, and clearly we're sailing north of that here. So there's your one hike. And the curve for the Bank of England, likewise, where before here were those 50 basis points in cuts from 375 to 3.25. There they go. Now we're looking at standstill with a bias to hiking back up to 4%. So the situation here is looking, needless to say, like it is favoring a more hawkish tilt. Now, with expectations still as they are, it is interesting that the market still basically believes the Fed that they are going to deliver at least one of these rate cuts this year. So for now, at least, the futures seem to have that cut still baked in. And as the Fed told us today, we don't know what's going to happen. So we're not going to change the forecasts. Why would we change them if we don't know which way? About all we can tell you is there's going to be a little bit more inflation longer term, and there's going to be a little bit more growth, we think, and that's the economy surprising to the upside. Of course, we heard that same message in January. As it happens, even though the Fed has been forecasting cuts, they've been increasingly moving their GDP forecasts higher for the past several updates of the SEP. So, from a positioning perspective, then, I've surprisingly done relatively little to actually move around the portfolio here. About the only thing I've done was add a little bit on the risk off side of the ledger. So still short gold. That's clearly starting to work here. I still have a little bit of long side exposure through a short put vertical to duration in gold, 58 days out. The idea being that gold goes down and you want maximum delta exposure to it because it's happening right now. And if you think the trend in gold is going to ultimately hold as an up move, then you have diluted delta exposure to the long side later. And if gold, of course, starts to cross any major Rubicons and the uptrend that's been in place actually breaks down, then this part of the trade is going to look wrong. Still long the US dollar against the Aussie, the pound, the euro. Still short risk through the Russell, that's the IWM ETF. And I'm generally using ETFs here to keep the size small because, of course, these markets are very choppy. And it's better, in my mind, to scale in than be large in your exposure from the beginning. So IWM, that's the Russell, still own put verticals there, own put verticals in NASDAQ, added some put verticals in the S&P today. as we held that level of resistance. Still have significant exposure with significant duration to the long side of oil also, and looking for yields to keep marching higher, still short the middle of the curve here, the 7 to 10 maturity U.S. Treasuries ETF. I own the put there, just outright. So looking for this to continue and looking for the stress to get worse before it gets better, largely thanks to the Fed and fears about tighter money in an environment that had markets desperately wanting for that money to be looser. And that is macro money for today. As ever, we are here right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, please like and subscribe. Macro Money returns tomorrow. Happy trading.